All right, Super Micro on the move. All the chips catching a bid. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, hump day, October 16th. We got about 14 minutes to go. We got the nuclear energy stocks, in particular, the SMRs are higher. Oklo has some really, Oklo's through 13. Oklo pressing 13. Looking good. Looking good. Okay, so that's a small cap, right? Oklo. Let's go take a look at the. Let's look at the small caps because the small caps been in play lately. Let's see, Russell 2000. What about the Russell 1000? Okay, JB Hunt's the top of the list. S&P, then Nasdaq 1000. Ooh, Old Dominion Freight is also coming up the list. Old Dominion Freight. Those two are favorites to trade. JP Hunt is higher on earnings. Okay, let's see. Earnings. They came in, they beat by 8 cents. $1.41 was the estimate. They came in with $1.49. Okay, last night. All right, so we saw some activity in transports lately. It's starting to show up. The rails, the truckers. What recession? What recession? Seeing lots of trucks on the road. I'm not anywhere near any railroads, so I can't tell you that. Amazon pulling back a little bit. Amazon. Okay, all the chips are moving higher. Most of the chips are moving higher. Let's take a look at a few of those. Here's SMCI, NVIDIA. NVIDIA turning the corner. It's got a ways to go to get back to yesterday's pre-market highs. Okay, but we're heading in the right direction. All right, so that looks good. I'm still in the mindset of taking some risk off into strength, focusing on the sectors that are strongest. Looking for stocks that have high relative volume for trades intraday, day trades. Let's take a look at how advanced decline percent finished on the day yesterday. The Iron Condor, Captain Condor is back. Captain Condor is back, doubling down on their Iron Condor using the martingale system. They lose $2 million for every point below or above their short strikes on that Condor. So it's in the ticker. It's in the ticker. And also here, okay, we can see this Iron Condor is in play today. Okay, right there. You might want to take a screen cap or just write those numbers down. Okay, they're short the 58.45 call and long the 57.90. Short the 57.90 put. Short the 57.90. Short the 58.45. I can't speak today. 58.45. Why is that important? Well, for every point they lose $2 million. So it's in the incentive of the dealer to push this around. Okay, so here we go. Martingale system. If you've ever heard of it, it's effective when you're right, not so much when you're wrong. Okay, this fund or trader stands to lose $2 million per point as it goes through one of the wings of their 5-point spread. So that's important because if we start to see what we had yesterday, we could see obviously the dealers have the advantage here. So the dealer, tremendous advantage. They have the incentive for other traders to come in and duplicate what they're doing. Okay, so this trader is short these strikes. Going long these strikes is not a bad idea if we start to see a movement in one direction or another. Okay, going long either the calls or the puts, depending on what happens. We got major support down at 5,700. Okay, we've got 8 minutes to go. 8 minutes to go. 5,700 is major support for the S&P. Okay. Right there, 5,700. Below the 5,750 level. Okay, so we want to stay above this 5,750. Futures pulled back a little bit. Futures are currently trading 58.63. So I'd like to see us stay above 5,800. That's support. Starting today, 5,800 is support. You can see it's a pretty major area here. So maybe we head towards that upper strike. Maybe we head towards the upper strike this time instead of the puts. Maybe we go towards the calls. Okay. And head towards these 58.45 calls. Okay, so if you catch a bid, I'll probably do something like that. Buy some overhead calls. I don't think I'll go out to 58.45, but we'll see. Could do a vertical. You could do the 58.45, 58.50, or 58.45, 58.55, something like that. Okay, a little profit taking going into the opening bell. I'm watching NVIDIA. A little profit taking going into the opening bell. God, Cramer is so freaking annoying. I love this morning he was talking to Faber and he says, this quote, what people don't understand. I love that quote. What people don't understand. You know, I don't mean to rag on Kramer because he does say some things that or has knowledge that is helpful for new traders, especially his time working for Goldman Sachs, et cetera, et cetera. But I don't know, just some of the things he says really gets on my nerves. Like only he knows. And well, you know how that story goes. All right, let's get ready for the opening bell. We got 5 minutes to go. Apple pulling back. Apple. I don't think I have a position in Apple, do I? No. I am watching these nuclear stocks though. Okay. Nano nuclear doing well. Nano. Opening Bell podcast. Opening Bell, by the way, 5 minutes away. Okay. Nano nuclear on the move. I did buy some on the dip. I know, Captain, you bought some too. Looks like we're going to, with our patience moving. All right, waiting for the opening bell. We got 3 minutes to go. All right, let's get ready for the opening bell. Just doing a little clerical here. Okay. All right, there goes NVIDIA. Okay, we got a ways to go. We got to get above 135. I have the 135, 140 call vertical. As you know, that's 2026. That's a year, over a year from now. So it was down maximum. It was down like $10 per contract yesterday. So theta, not a big deal with leaps, as if you follow anything that Leastar posts or Frano, they do a lot of leaps as well. And we're off. Okay. Looking good. Okay. Tesla, looking for the bounce. Tesla. Amazon, I'll take Amazon off here. Let me just do Tesla here. Tesla. IWM, looking for the follow through in IWM. What the hell is screaming? RXO. Okay. Okay, Supermicro. Micron. Okay, the chips. Reprieve. I think they were unfairly sold yesterday. Thank being the operative word. Markets don't care about me or you or anyone else for that matter. Opinion wise, Micron getting a nice bounce. Okay, Oklo, I have January 1250 calls, straight up calls, no verticals. Probably add to that if it starts trending. Something I'll probably hang on to. All right, so a little profit taking into strength here. NVIDIA, chips. NVIDIA gapping up. We have a ways to go to get back to yesterday's high. NVIDIA pulling back. So people taking profits off the table. Not a bad idea. All right, Google is going nuclear as well. All right. All right, there goes Tesla. Tesla popping. There goes Tesla. All right, looking good. Looking good. All right, let me see what I want to do here. The call side of the Iron Condor that we took for earnings expires in 2 days. The short strike is 260. I don't see us rallying $40 on Tesla. I mean, if we did, that'd be great because I do have some call verticals to 235, 240 for November. So those are doing well. I have the puts, the 215, 220. I did roll those out from the this week's expiration out a week. Give myself some time. I usually do that. Oops. Let me plug in here. Almost losing power. Can't be losing power. Okay, looking for a bid in the markets. JB Hunt coming back, a little profit taking. Futures are lower. Sometimes you say things that are very different from what you have been saying, but they just go along, and nobody stops as I am now to say, "What? I changed my mind." What do you do, sir? Faber thinking the same way, I think, as far as Kramer, some of the things Kramer says. Anyway, Microsoft looking for a bounce. Microsoft. All right, watching the chips for a continued bid here. Let's see. NVIDIA, Micron. Micron, nice follow through. Big gap up on Micron. Okay, Micron, I have December verticals. Micron, I have, that's still a valid trade. I sold puts as well. I sold the 97.92. So I sold the 97, bought the 92 vertical for November 8th. That's up. Micron calls are up. That vertical. 110, 115, December 20th, 110, 115 on the Micron. Okay, looking for Micron to push higher. Super Micro on the move. Super Micro. Tesla pulling back. 219. Okay, the chips pulling back a little bit. The bid. Okay, Micron, Super Micro. Let's see, on semiconductor. Let's see. NVR is up top of the NASDAQ 100. NVR, watching that. Granger, construction related. Truckers, SAIA. You've seen them around, I'm sure. Refrigerated trucking, food to restaurants, and I think it's mostly restaurants, right? Old Dominion Freight, that one's up. Old Dominion Freight on the move, gapping up. JB Hunt with earnings last night. They beat by 9 cents. Let's see what else. Okay, one that Corey mentioned, United Rentals, all that cleanup from Hurricane Helene, and I forget the last one's name. United Rentals. Okay, starting to turn. United Rentals. Let's look at the daily. Okay, inside day at the highs. United Rentals. Okay, watching that. Okay, so we got a good mix of leading or most actives, a mix rather than one sector. Okay, we've got trucking, we've got banks, USB, US Bank, American Airlines, Synchrony Financial. We got the credit card companies. Some of you have been trading PayPal and Block and such. Morgan Stanley is up. It's number 2 on the S&P 500. Morgan Stanley. Let's take a look at Morgan. Morgan's been trending, just ripping it. Morgan Stanley. Banks, good mix. Okay.
The rating agencies, I don't know. The rating agencies are key here.
MS.
Communicate Moody's and S&P to Boeing. Hey, we're going to downgrade you. They're going to hit the market.
Morgan Stanley.
Because they do not want to be.
JB Hunt. United Airlines is number 1 on the S&P 500. United.
Yeah, or maybe they get to 15. There's not a question as to whether there's demand there. From what I'm hearing, there is. Again, you've got some who are shorting the stock and some who are looking as an opportunity to cover because they believe that ultimately, when they do a deal, it will bottom.
People have to understand that that's if they get their allocation, it's terrific.
But if they don't get their allocation,
they're the ones who think it's the 160.
Then they have even more trouble. But
S&P 500. We got quite a few stocks on the move. Watch IWM small caps as well. Small caps. Let's take a look at small caps. The tally. All right. So more stocks advancing than declining. That's good. Let's see. Tech cumulative. We want to see that turn up. Okay, it's turning up off of the low here. Maybe a long. You know what? I'll wait. We could just keep going towards, where are we? Okay, we're making lows here, 58, 54 testing, the lows again, S&P. So watch Morgan Stanley. Okay.
Size of the companies when they come will be likely larger, so there'll be slower unit volume than the sort of the
5,800. Let's see that.
Post-COVID stimulus and quick listings, but I think these are going.
Just a reminder: the short strike on the put spread that Martingale Iron Condor trader doubling down. 57.90 is the other strike. 57.90. Okay, 57.90 is the short strike on the put side. Okay, we want to stay above 5,800. We might get something going here. Let's see. Puts, monitor, puts, shit. Puts, buy, puts.
It's just a wasteland, right? My interpretation. And yet, what do we have here? We have all these people, everybody waiting for deals.
I know. I mean, will you ever see an OpenAI become a public company? By the way, they have a long way to go yet to get there. They obviously have
buy puts.
Into an equity ownership structure. Will you ever see a SpaceX come public?
I'd pay $200 billion for Starlink.
I mean, right.
All right, I have puts. I'm going to go ahead and close these for now.
But these are the companies that are out there.
All right, I sold the puts that I had from yesterday, just as I was chatting about, maybe hedge, maybe take some puts, because we did have a bearish bias to start the day. Okay, let's see if we can bounce here. S&P. Okay, what's the other strike? Okay. Long strike is 58.45. 58.45. Yeah, we could get to 58.45. All right, the momentum is clearly turning. I don't know. I have to wait. We have to wait. There goes Morgan Stanley. Morgan Stanley on the move. Morgan Stanley, United Airlines, the top stocks on the S&P 500.
Things you've said that I paid attention to were things like Apple don't trade it. That's been right too. Now it's down today. It was up though sharply yesterday.
Just go buy it. That no fight, the Evidence Lab, UBS, Quadri. I mean, they have a bunch of things. You actually have the data when they buy.
Is that why it's down today?
Yes, it is, because the evidence lab, the NCIS of education and stock picking, had some negative things to say about Apple. Here, June 23rd was the last time they liked it. Last year was the last time they liked it. 183 was the last time they liked it. Where's it now?
Well, how about the Barron's piece yesterday, doing some numbers and arguing that Buffett may have left $25 billion on the table with his sales.
Don't you think he left Wells Fargo when he sold Wells Fargo at the bottom? But no, it's okay.
Okay, looks like it could push a bit lower.
Just headstrong, big foolish.
It happens.
Ulta Beauty, David, is down. You haven't even called
I
that.
got an investor day today.
I know. It's Ulta. Every part of the cosmetic food chain is. Estee Lauder's doing badly. When you see when you see that LVMH, it's kind of jarring. It's almost like are people not don't want to look as well as they used to? No, they still
Okay.
They just don't want to pay it.
You
Elf is
did
down.
have a selfie thesis when it came to beauty
Well, that was-
coming out of the pandemic.
Yes, you wanted to look your selfie best, but now people, I don't know. I mean, maybe these new Apple phones, David, they can touch up anything. They made me look like Jason Stratton, that guy. I look like
Yes,
Stratton.
yes, I know him.
Yeah, I look just like him.
I know
You
him.
can
I
do
watched
anything
one of
with
his
that.
movies on a plane. It was called The Beekeeper. It may have been the single worst thing I've ever seen
Wasn't
on
it
film.
horrible?
It was
And like, you
so
remember the
beyond comprehension.
truck scene?
You watched that too?
I watched it twice.
It was on
Because I
a
didn't
plane
want to
back
tell my
in
wife that I
Japan.
watched
So
it.
like
It
I
was
watched
so bad.
17 movies.
But he looked
Okay.
the Apple 15.
Yes. I often think
NVIDIA, okay, faded.
Yeah, I do.
Not Louis C.K. and
Okay, we still have very interesting. It still looks like rotation. More stocks advancing.
Because he was so crazy to begin with. What can you say?
What can you say?
Yeah.
Maybe better off saying nothing.
You gonna run CBS?
Excuse me?
the Dow's being led by Cisco, Jim. I don't know if you saw this upgrade over at Citi. AI only 2% of revenue, but we think that there's upside to that.
Yeah, they say that that is interesting. Look, I think
Okay, so let's take a look at that breath wise.
Chuck Walker with Jensen. And you know what that means.
Okay, breath still improving with the index down. Looks like dealers playing with this iron condor trader. Looking for a bounce. Okay, more stocks are advancing than declining. More stocks are advancing than declining. So even though the S&P is down a little bit, we still have 355 stocks green, 145 red. All right, so definitely moving in the favor of the bulls, even though futures are lower. So we're at odds with the futures right now. Okay, Russell 2000. Let's see what Russell looks like. Okay, the majority of the Russell 2000, 1,350 stocks are green, 250 are red. So let's look at IWM. IWM. Okay, continues to grind higher. IWM looking good. Okay. Okay, the chips now falling off after a pop in the morning, so they're still selling the chips. Okay. So SMH looks like another down day in store. We had a bearish bias to start the day. I was very surprised to see chips up this morning. Okay, it looks like Morgan Stanley is going to keep going. Morgan Stanley is on the top of the S&P 500. Morgan Stanley, big rip here. The banks, Goldman Sachs, after what CEO said yesterday. Goldman Sachs is pushing higher. JP Morgan flagging. JP Morgan. Let's see. Wells Fargo still going. All right, these banks are really cutting a rug. JP Morgan still flagging. Let's see. PNC Bank. Okay, that looks good. Let's see what KRE looks like. Okay, that's still going. KRE, if you want to play the regionals, if you want to play the regional banks, banks are doing well. Bollinger Band's opening up. Okay, Tesla bouncing. It's above PMZ. Tesla above PMZ.
Me and Affleck versus you and McConaughey. I'll take that.
David's so smart, right? Can you keep up with it, Jimmy?
Ooh, really? Your father really said that? I don't believe it.
Yeah.
Really, I appreciate that. It's far from the truth, as our viewers well know.
But then he called me at 7 after Mad Money. He said, geez, you know, you are
Oops.
every bit as good as it. I watched the show. You're every bit as
Must
good
have
as
felt so good.
Yeah, I did. I was like, thanks, Pop. Because I was worried. I thought that maybe you favored
We have
David.
gone deep into the psychological issues, haven't we, this morning? Why not?
Maybe we should start our own. This is,
Our
get
own
back.
hour of therapy.
I think it's
NVIDIA.
educational therapy via Starlink.
Okay, bouncing back to 50%.
Just
Pulling
when
back.
Starship goes up and they're launching 400 Starlink satellites at a time.
Yeah.
Musk.
Yes. John.
Okay, Morgan Stanley and UAL still going.
Dow at 150. Watch bonds today. We did get some import prices a little bit cooler than actually the big surprise was inflation in Europe. UK 1.7.
All right, Morgan Stanley. Okay, number 3 on the list, JB Hunt. USB. Let's take a look at JB Hunt. JBHT, a little profit taking at the open. They bought that up. Wow, they bought that up quickly. It dropped a few minutes, first 15 minutes, taking profits off into the highs. Continues, reassess the markets after 945, 950. There you go. That's a good example of JB Hunt. Okay, let's look at UAL. That's the top of the S&P 500. UAL is still going. All right, let's take a look at the airlines real quick. Airlines. Maybe there's, the cruise lines getting a lot of positive comments, cruise lines. For those of you who've been trading them for the last few months, always good to see good news at the end of a run. Maybe it's the end of the run. Maybe it's the beginning. Maybe it's just the beginning. Let's see. We want to look at airlines. Airlines. Okay, let's see. Dow Jones Airlines Index is higher. Let's sort these. Okay, they're all green except for Ryanair. United is up. Okay, American finally back to the 200-day moving average. If you took American Airlines a few weeks ago, 6 weeks ago, it hasn't moved but a buck. I mean, that's crazy. You can see ATR is only like 40 cents. So if you're going to trade airlines, I wouldn't be trading American Airlines. Okay, save. That doesn't look so good. Delta Airlines, they're pretty good. I don't like their terminal in Atlanta, but other than that, they're moving. It's got an ATR of $1.70. It's already up $1.40, so you're getting close to the top for today. Okay, so the banks look good. Morgan Stanley is looking really good. Okay, got to wait for dips, ABCD patterns on these. They already took off quite a bit. USB, US Bank, US Bank Corp, higher. United Health. Okay, we talked about that a couple of weeks ago. As it started to move lower, watch for a base. Well, it's based very quickly at 210. You can see this little shelf right here. Stochastic RSI, MACD all turned up. This looks good for Universal Health. I'm sorry, Universal Health. I said United. I meant Universal Health. Okay, following through, going through the list. Synchrony Financial, SYF. At one point, Warren owned Synchrony. Capital One Finance. Capital One. All of these are moving higher. Okay, S&P. Okay, S&P looks like it might start to bounce. Close to 5,800. Okay. Histogram has turned, but I'm not going to bite just yet. Watching. 15 minute. 15 minute. The daily over there on the right still showing selling into strength. Dark blue histogram bars. Okay. NVIDIA looking for the bounce. Okay, OKLO is going now. OKLO, OKLO, OKLO going. Okay, there it goes. Nice, nice. What's Nanonuclear doing? Nanonuclear is up 3.68%. It did dip, a little profit taking. Okay, people quick to take profits on that one. Momentum traders seem to still be there on Nanonuclear. Banks, Morgan Stanley. Okay. Goldman Sachs, inside day for now. It is going. Probably chases the others. Okay, you'll probably get your bid on this one. Continue through the day. At the way the banks look right now, this is a pretty good shot. Okay, S&P. We're right on that area of liquidity, looking for a bounce. Looking for a bounce. Okay, equilibrium on the S&P is right around 5780. You can see that gray area, that's equilibrium. You can see the supply overhead. Paying up at a premium at that level.
Journey today. It's time for Jim and stop trading.
A major company, we had them one last year. $1 billion company, Abbott Labs. Excellent number, $7 billion buyback. Oh, hitting on all cylinders. Medical devices, which are weaker for others other than Medtronic, really came through here.
Oh, that sucks.
We're going to talk about it at our conference at 12 o'clock noon.
All right, Morgan Stanley, watch for BNC pivots. You don't need to chase. It looks good. Oklo looks good.
There's just a lot to like with the Abbott quarter. It's like the old days now. It's popular.
What do you think the mood's going to sound like on your call today, Jim, regarding the markets overall?
Okay, well, I was spending a lot of time talking about how we're levered to lower rates in the portfolio, and that you have to be levered to lower rates. Every company has to be judged by how well it will do as the Fed cuts rates.
Okay, watching the S&P. Okay, looking for a bid.
Both of which are fantastic companies and very, very exciting. So I hope everybody's there. You can still sign up for it. I know I'm a shill for it. I spend so much time. You know, I get up at 3:30, 4 o'clock working on this. I've done like 4 drafts of my speech.
Microsoft, Apple still fading.
It's really important.
NVIDIA trying to catch a bid.
Thank you.
We did not mention, speaking of rates, mortgage apps down 17.
I know with mortgage rates are all the way back up again.
They got the 30-year fixed back to 6.5. That's the highest since August.
No, and you don't want to lose your 3.5 mortgage for 6.5. It's again a problematic situation for Jay Powell. We have not solved it yet.
How about tonight?
Okay, so we have a bank that is actually doing extraordinarily well. It's a regional, First Horizon. And David, you'll like this. Remember First Horizon was going to be bought by TD?
Yes, and now we know why they weren't.
Did you follow how awful the TD?
I did. We talked about it a bit here. It was beyond even what you might have imagined. I mean, Chinese criminal gangs laundering money for fentanyl. I mean, what?
Yeah, it was one thing for Wells Fargo to put money in on Friday and take it out Monday. This was an
Okay, 5790 is the strike where that trader starts to suck wind.
Despite the fact that
It's also right near that equilibrium area.
Jim, look forward to the call.
In addition to the dealers being at the advantage here to push it down to 57.90. I'm not going to do anything right now. Looks like we could move lower first.
And I got to tell you, I like Ben's work, but this guy's also a poet.
Take that. Okay. When we come back, Morgan Stanley's Ted Pick breaking down the latest quarter when we're back in 3.
Okay, so Morgan Stanley exec's going to be on. Going to be on CNBC here when I come back. Okay, so we'll watch this level here. So price right in between. It's in a dealer's incentive to get people to push this down with puts. Oklo's still going. Oklo. Okay. S&P 500. Same stock still leading. Universal Health Services, USB Bank, JP Hunt, Transports, United Airlines, Morgan Stanley. So we got a nice mix. Got a nice mix of stocks here. Bath and Body Works is back. Bath and Body Works. That one had started making a series of higher highs and higher lows off of the low. Okay. Bath and Body Works is back into, it's back above the 50 day into Christmas holidays. All right. Always see people in there. Usually a mall store. All right, so that one looks pretty good. That might actually turn the corner. It's a slow mover. It's only got an ATR of $1.22, but this one probably could continue. Let's Best Buy. Let's see how that's doing. Okay, that looks okay. Best Buy, Costco. Costco looks good. All right. Okay, so I was just looking at these. Costco, pulling back a little bit, but Best Buy, Bath and Body Works. Okay. The banks still look good. Probably continue. All of them are lit up. Morgan Stanley, JP Morgan, Wells Fargo, Goldman Sachs, PNC Bank. Among others, let's see, Citigroup reported when? On Tuesday, right? Citigroup reported yesterday, inside day today. That has the lowest book price to book. Not that that's the only measure. Want to see their wealth management division. Morgan Stanley has a pretty decent wealth management division. I don't know what their numbers are.
Another hour of Squawk in the Street. I'm Carl Quintanilla with David Faber here at Post 9 of the New York Stock Exchange. Sarah Eisen is live.
Okay, Bitcoin trying to break through, possibly.
Appreciating some of the earnings we're getting as we continue to chip away at Q3 results of Morgan Stanley and United Airlines among the highlights today, although the S&P's down a touch, once again approaching 5,800. Treasuries, a little bit of relief as the 10-year works its way back to 4%. Not much more than we're testing today, although we did get export and import prices, Sarah.
Yes, 30 minutes here into the trading session. Here are some movers we're watching. More results out of the financials, regionals like Citizens Financial, U.S. Bancorp, First Horizon, all on the move. Plus, check out shares of Morgan Stanley, the last of the big banks to report. It's having a good day, especially a good day, up 7.5%. We're going to break down the numbers with CEO Ted Pick in just a moment. Transportation stocks also on the move.
Morgan Stanley is starting to peak now. Okay. Nano Nuclear is starting to bounce.
And the airlines are having a good day today as well. Look at United up more than 9%. Retail also in focus.
SMR on the move. SMR doing very well. SMR. I got stopped out of that one Now it's going. Okay.
And that's kind of where I was going
SMR.
which is the state of the consumer. We do get the big retail sales number out tomorrow. We'll also get jobless claims.
Okay, what's the ATR on this one? It's
But retail sales
$1.26.
more than
It's up $1.90.
consumption if you want
All right, so it's outside the upper Bollinger Bands.
the consumer. So let's go to the
SMR
what we got from earnings. Adidas is having a really strong run. Which
looks good. I would like an ABCD pattern, so I'll look at this again around 11 o'clock or so. I don't want to chase it up here.
as well. Obviously a good sign, but also a good sign that they're connecting well with the consumer. On LVMH, even though the overall numbers were disappointing, and what they said about luxury, particularly in China, here's what the CFO did say about the U.S. Demand from Western clientele show a
SMR is pushing though.
this being very
It is pushing.
inflation and interest rates remain.
Traders chasing.
I mentioned
That usually doesn't end well. Look for a BNC pivot around 11, 11:30 or so.
and then the United
Bitcoin, I see a weekly.
continues to be strong.
I see a weekly channel.
After we talked to Brian Moynihan at this time yesterday, the CEO of Bank of America, second biggest bank in the country, and here's what he said about the consumer, which follows some of this rosy commentary.
The good news is the consumers keep spending, albeit different stuff. Every quarter is a little different, but overall, the amount of money they're moving in from our customer base, 60 million plus American consumers, moving well over $1 trillion in the economy every quarter. It grew at 4.5% last quarter, third quarter over last year's third quarter, and it's still growing at that rate. That means the consumer is still in the game and spending, which fuels an economy that's stable. But we have to be careful that we don't choke it off.
And David and Carl, this is why we're having the conversation now about soft landing or no landing instead of soft landing or recession. Because things are looking up for the consumer. It's not all great. I know we do anecdotal sometimes.
Okay, ARM did gap up. It's got some wicks here. Looks like a bid underneath the lows here. ARM, Micron still pushing. Micron. Okay, approaching yesterday's levels, but it got a ways to go. Got to get above 110.
Right. And even though that's less spending than last year, I do think it bodes well for the consumer. And it jives with some of the other forecasts we've gotten from Adobe, for instance. PCW has also done it. Look, if you're wondering why on the consumer, there's a few reasons, a few charts you can point to today. So what I did today was just showed you why the consumer is feeling better. Look at gas prices.
Nvidia, okay.
Gas prices. The average gas price in this country right now is what, $3.20? A year ago, it was $3.60. It has come down. This is relief at the pump.
Oklo.
And it feeds into consumer psychology, sentiment, and just basic spending decisions. There's one. How about rates?
Okay, waiting for BNC pivots. All right, it's starting to come back now. Okay, SMR, watch for these to pull back. That'll be your better entry. Bullish. There's a bullish catalyst. I don't see that bullish catalyst changing. And matter of fact, I see it affecting more and more companies. This need for energy instead of a need for speed. Okay, old Dominion Energy. Okay, that's up.
The other one I wanted to show you guys, David, is the stock market. Because look at the wealth effect. And with the stock market at record high, you can also look at home prices, which have retained their value, and people derive a lot of wealth from that, and also good sentiment. But that also feeds into the spending picture. So if you add up some of these charts, and I could have done more, I could have done wages, for instance, as well. You're seeing why the consumer remains so resilient.
Amazing, isn't it, though, that we have an election 3 weeks away, and it seems as though candidate Trump is winning on his views for the economy when it comes to the voting public.
Right. I mean, even though consumers still spending and they're feeling good, we talked about this before. The sentiment data and the polling hasn't necessarily indicated.
Okay, S&P. All right, S&P. We're going to run the other direction now. Are they going to make the dealers scramble? Maybe they make the dealers scramble today, huh?
And they're worried about it, and they blame the administration for it. I mean, I think we've pretty much clearly seen that, and that's a part of the story. And then, there's still parts of this economy that have felt left behind in manufacturing pockets of this country. And you've had a strong dollar for the last few years, and that also, doesn't help with export activity. And so the whole tariffs, and we're gonna tax the other countries and punish them for unfair trade practices. I think that's always been resonant in places, especially that have been hard hit by manufacturing moving overseas.
Although we've said time and time again how much manufacturing construction has exploded in this country, at least over the last few years. A lot to talk about as we are 20 days away from the election. Meantime, Morgan Stanley pushing to new highs on the back of its earnings beats. Profit jumping more than 30% from a year ago. Let's get to Leslie Picker, who has a very special guest this morning.
Okay, let's see if S&P can make a move here.
Yes, I am joined by Ted Pick, the CEO of Morgan Stanley. Thank you very much for being here.
Okay, Morgan Stanley being interviewed.
Which is up nearly 8% on the heels of these earnings. There seems to be a lot of momentum in investment banking, but still well below historical averages. So
This guy looks like a tight ass.
what do you see as the biggest holdup for this multi-year capital markets recovery that we've been hearing about for quite some time?
First of all, Leslie, welcome to Morgan Stanley, my namesake. It's great to have you here.
Pick and Picker, yeah.
Yes, it's great. It's great to have you here. It was a consistent show again. Yeah, I'm really happy with the consistency of the results in both segments.
CEO Ted Pick.
And investment management businesses, but also in the investment bank, which you're making reference to. We have now sequential EPS of 202 in the first quarter, 182 in the second quarter.
Okay, watching coming out of a squeeze. S&P coming out of a squeeze.
Operating leverage, which you can see by efficiency improving by 300 basis points, and our returns on capital at 17.5%, 18% for the year. So there's a real.
All right, let me take a look at the 0-day. 0-day setup. Mostly green.
We're starting to see an acceleration activity, not just in the markets business.
0-day is bullish. 245 to 1. Up ball.
It's beginning to happen. As you know, the private equity sponsors have over $1 trillion of cash on hand.
We've got advanced decline. Advanced decline is rising.
Assets in the ground, 10,000 portfolio companies that need to be.
Okay, there it goes. Fair value gap.
The deployment rate is faster than the cash raise rate in 14 years. So the financial sponsor community is going to have to move. They're going to have to do something, and obviously the corporate community is getting active too. So to answer your question, what I'm really bullish on over time is the beginning chapters of growth across the center, the fulcrum of our investment bank, which is our investment banking franchise, which is to offer advice, to do the underwriting business, but then also how it filters markets business. And I think
Okay, let's go.
it'll take time, but
LATSGO.
we're seeing the re-equitization of places like India and Japan on the continent.
Inside day.
That's gonna, as the
So
economy
far,
grows,
S&P inside day.
In the COVID period, we had called a sugar high of issuance because we were.
Okay, let's see what the equal weight looks like. S&P equal weight. Okay, so this is bullish, folks. Okay, look at S&P, SPX equal weight.
Where interest rates are starting to normalize, and I think that's going to bring people out into the public arena, which is great for the investment banking business.
So you've got rates on decline. Do you expect them to?
Okay, that says bullish. Okay, S&P equal weight index says bullish. See that candle? That's removing the weight of all of these stocks that comprise 32% of the weight of the S&P. 15 stocks, it's a lot of weight. 32 to 33%. Let's look at the New York FANG index. New York FANG index. Not bullish yet. So we need those stocks to cooperate. Need those tech stocks to rotate back in. Are we going to get those macro rotations again, where they rotate in for a couple of days and then come back out? We do have, remember, bonus time.
And I think because you can be a private company for longer, you can build a capital structure through private equity and
No one's talking about.
credit. You don't have to go public as a smaller company if you're generating.
They're talking about the election.
The sponsors and their
Bonus time.
But at some point, you probably want to hit the public markets. You want to take advantage of the currency of a public capitalization to pay your employees and long-term compensation.
Okay, these head traders work for bonuses year-end, performance-wise. Okay, Oklo still going. All right, New York Fang, need that to start cooperating. All right, let's take a look at the equal weight index again. S&P equal weight.
Portfolio metric to a size where it gets hard to sell.
Okay, so this is giving bullish signals. Okay,
And we'll see strategic
we got the number of stocks above the 20-day climbing. Number of stocks.
engagement separations of businesses that have different valuations, spin-offs, split-offs, and the like, or they'll be looking to combine with these companies. So it'll take time, but it's going to happen. I think part of the edge that Morgan Stanley has is that we're running a global business. So we're seeing that re-equitization happening.
Okay, the number of stocks above the 20-day are climbing.
On the continent in Europe.
Okay, that's a bullish indication.
In the Middle East. So it's a global phenomenon.
Stocks are rising back above their 20-day. There goes SMR. SMR is just ripping here. Short covering SMR. Shorts. SMR. Shorts are getting crushed. Wow. There goes Oklo. Tesla. Okay, Tesla turning. All right. So I still have an iron condor on Tesla. And I have some call verticals for the second week of November. Okay, so I want Tesla to move. I want all of these FANG stocks to catch a bid too. There goes NVIDIA. NVIDIA bid.
We're seeing that grow largely out of the E-Trade channel.
Okay, number of stocks above the 50-day is also climbing. Okay, so bears. Don't be so quick.
Because of where rates were. So as rates start to come in, we would expect there to be more normalized asset allocation activity. And as you know, because so much of our wealth management business is fee-based, that kind of asset allocation reset in a fee-based model is very interesting for our clients and obviously for our wealth managers. So I think we're going to continue to see activity increase because it links into the investment banking set. We're seeing the activity in transaction volumes before we've really seen the deal activity. As you pointed out, we've seen the debt capital markets issuance, but the typical individual investor is not as engaged in that new issue market. They're more engaged in the IPO and follow-on market, as we know, and they will, of course, inure the benefit of being able to invest in these exciting new companies over the next 3 to 5 years when that comes back into play. So I think it's an excellent story in terms of the growth of the total. You know, we've gone from 6.2 trillion of assets and wealth to 7.6 trillion in a year. You know, 1.4 trillion of growth, and as we talked about, we're gonna get to 10 trillion. So we're on our way, and some of that are higher asset prices.
Okay.
Some of it is for this year to date, 200 billion of just organic inflows, and those organic inflows, a lot of that's gone to fee-based accounts, which are managed across all of the investment underliers.
Okay, we want to see this continue. S&P.
That was my question. Essentially, you've got this great backdrop for wealth management right now, for investment management right now. What's the stickiness of those?
Come on, what am I doing here?
If the market did turn,
What am I doing here?
The stickiness of the financial advisors.
All right,
They're the
come on.
15,000
Sorry about that. I just got some
They're investment bankers to their individual
technical
clients.
issues here. All right, now we're better. Okay.
They're the counsel, they're the consigliere, and they are really the kind of the special sauce of what we have in the wealth management business. And when you have all the technology around them, this fantastic E-Trade platform, our workplace opportunities, our innovation in AI, the power of the financial advisor to be productive just continues to go up. And when the markets begin to really get active, because we're not going to go back to zero, we're going to find some kind of normalized level where there are nominal rates and real rates. That's going to be exciting for the FA to offer advice. We are interacting with financial sponsors, private equity, private credit. Those types of solutions being democratized and being offered to high net worth individuals is another arrow in the quiver.
Let's talk about AI. You mentioned it. You have Debrief, which is aimed at making the lives better for some of those financial advisors and in terms of simplifying mundane tasks. How else are you deploying AI across the organization, and what do you see as the potential efficiency gains from that technology?
Well, there's cost effectiveness and then there's productivity efficiency. And the cost effectiveness is going to run the entire gamut. We're seeing in our documents business processing. We're seeing it on the trading floor with our strats, who measure predictive
Okay.
infrastructure plan around the world.
S&P looking for a follow through.
We'll develop the AI capability in-house. In some cases, we'll be a fast follower, but that's just going to be part of the ongoing.
Okay, these look good.
To the benefit of a large organization that can actually spend the dollars necessary. As you know, what makes this technological innovation a little different than some of the past ones we've seen is you can do it in the garage. This you can't do in the garage.
Okay, nanonuclear bouncing, Oklo high of the day, SMR ripping, shorts covering, nanonuclear turn in the corner. See this one retest. Nanonuclear, I'd like to see that retest the 18, 19 level, 20 level. What is Trump media doing? Every time it moves higher, the shorts get quiet. If it drops a little bit, shorts go crazy, calling it all kinds of names. It's just the stock. All right, so that's okay. But SMR is just ripping. SMR is taking the shorts to the bank. Wow. Can't chase it. That's a beauty, though. Right up against supply now. Premium area. This is where you would expect to see some profit taking.
All right. Ted Pick, CEO of Morgan Stanley, thank you very much for being here on this earnings
Ted
day.
Pick, CEO, Morgan Stanley. All right, Apple looking for a bounce. Okay, Apple. I might want to take a trade on Apple. Apple. We'll give it a couple of days.
No longer. Its year-to-date performance is right in line now with many of the other.
Oh, you know what we forgot to check? I forgot to check the growth and value. Growth and value. Okay, value is in play. You can see value is in play. All right. Value. Growth pulling back a little bit, but catching a bid. All right, I got to take a 5-minute break, folks. I'll be right back. Give me 5 minutes. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday the 16th. We had a VIX expiration this morning. So a little volatility. S&P, looking for that to continue. Okay, SMR still looks good. Okay, S&P. All right, so I got to take a couple-minute break. All right, give me a couple of minutes. I'll be right back.
Broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So, what's for?
Listen to me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Stocks trying to rotate this morning. Russell doing really well. Tech holding in after a little bit of a fade in semiconductors. John Kosar joins us, Chief Market Strategist at Asbury Research, with a look at his technical indicators on where we're going. John, good morning.
Good morning. Good to be here.
Looks like you're dressed for the part. Green, 5 out of 6 of your indicators looking positive, right?
Yeah, and they're solidly, they're not just barely positive, they're pretty solidly so. So we've had a little pullback here that we could talk about today. I mean, the move yesterday was sharp, and I think it spooked the market somewhat. But yeah, Asbury 6 is it? It's been positive since September the 12th. I think the market, the S&P 500 is up around 4% ish since then, and you can see everything is positive. Most of these, about half of them were, let's call it the middle of September, is when they flipped positive. The other two have been October, the rate of change and market breadth. And the only one that's negative is the VIX right now. So in other words, volatility is a little bit high relative to our taxable time period. It's historically very low, but we look at it as a very sensitive indicator. But otherwise, everything looks good.
Yeah, the VIX, a good point, as that has been quite sticky, a little bit stubborn. The vol situation, a lot of folks are kind of chalking that up to the election. Do you see evidence of that, John? Is that the way to explain away the vol?
I don't. I think, we don't get paid anymore to tell you why the VIX is higher, right? I mean, I just try to look at the implications of the VIX. It means the market is a little spooky, not outrageously so. And again, because the other five of the A6 are strong, they're in solid green, I'm not as concerned about it. It's a drag on the market right now. I think, our work shows that when the VIX is elevated on a tactical basis, it's kind of like throwing an anchor on top of the market, right? It's going to weigh it down to some degree, but I don't see it as a big issue. I'm looking at some longer term targets in some really important indexes and stocks, and we have some of those charts today if you'd like to look at those.
All right. So yesterday's little dip didn't break the market, of course, but NVIDIA, maybe we knock that chart out real quick, John, given that, it's inconvenient to get stopped out right at your previous intraday high. Are you a big believer in double tops? Should we be scared?
Well, that's not a double top.
Yeah.
I mean, all that is a retest of the old high.
Okay.
In order for that to technically be a double top, it would have to come down and take out the low that we made on June the 10th. So what we're seeing here is we had a big move in NVIDIA that lasted. I think the major uptrend, if you look at the 200-day moving average as being the trend proxy, that trend started at the beginning of 2023. We got up to the June highs, and then you see that sideways it's kind of like a reverse megaphone. That's the market digesting those huge, enormous gains. And it starts to go into the turtle, so to speak. It's afraid to make new highs. So we finally broke out of that pattern on October the 7th. That target is 169. That's 27% higher than where we are right now. It's a huge target. Am I going to buy that and go to the Bahamas and come back and pick up a check? No. But it gives us a little bit of risk reward. As long as we hold 124, that's a good target. I'm not surprised that I'm not surprised that NVIDIA had a little reversal off of that old high, because anybody that's jumped on that move that's a short-term trader, that's a great place to ring the cash register for a short trade. Made a lot of money in just a couple of weeks. So that's how I kind of game that out. I didn't see, if we just turned around on a dime yesterday for no reason, then I'd be pouring through data, news stories to see what was the catalyst. This just looked like it was some quick profit taking.
Okay, understood. And seems like a case pretty well made. Who can argue to take a little profit after a nice move back to the highs after NVIDIA had kind of languished for a bit. So it escalated pretty quickly, got back to that high. No double top unless it really proves to be the beginning of a big shift lower. What about when you kind of extrapolate and go stepwise up the ladder here? How about the NASDAQ as an index, John? Do you think that naturally goes in the direction of the S&Ps, which have been leading at highs?
Yes. The 2 points here. There's the comp. So the same pattern in the comp. Not exactly the same shape, but you had this huge move, this huge uptrend that started in early 2023, peaked in the summertime. Market came right back to the 200-day moving average on August the 5th, which you can see kind of in the bottom quartile of your screen down there. And we broke out on September the 19th. That targets a move to 20,050. That's 11% higher than where we are right now. So this and the pattern in NVIDIA kind of corroborate each other. This pattern is going to stay valid as long as we stay above that. Let's call it 17,400. We stay up above there, it's still a good pattern. And it did identically to what the chart of NVIDIA did. It got up to its old high that we made back on July the 11th, turned on a dime. People rang the cash register. I think that was a heck of a move for 2 or 3 weeks, but we haven't done any damage. In fact, if we just blew through that old high, that would be more abnormal to me than seeing the reversal that we had. I track the AUM in stuff like the Qs, because I want to see when we have a reversal like that, did it really shake things up? Is there a lot of money that was getting out of the Qs or getting out of other similar ETFs? That was not the case. There was a little bit of money that left there, but nothing that would make me nervous. So again, this looks normal. I know it was a little spooky to go through yesterday, but I don't see anything right now. The only thing that concerns me is I want to see continued relative outperformance by NVIDIA, by comp, by the NDX versus the S&P 500. That's been languishing a little bit. As long as we continue to get that relative performance, if we see that start to kick in over the next couple of days, I'm happy. We've got some seasonality factors that we have to deal with through the end of next week, but then seasonality gets very, very strong. I brought a chart of that too. Seasonality gets strong through the end of the year. So yeah, I mean, we might be a little bit dicey here over the next week or so. There we go.
This looks good. All that blue is pretty good looking stuff.
0-day setup is strong and bullish. Histogram is bullish. Advanced decline is bullish. Up volume 2.5 to 1, 3 to 1 on the New York Stock Exchange, 2.5 on the SPY, 2.9 to 1 on the NASDAQ Composite, 2.24 up volume on the Qs. Only the diamonds are down. And we got IWM 2 to 1 up.
Is this something that you could take to the bank? Absolutely not. These are seasonal tendencies, but when you overlap them with those patterns that I showed you and a good strong A6, I look at those all together as pieces to a puzzle, and I like what I see.
All right. Seems like the puzzle right now is soundly bullish. Charts looking pretty good. Maybe a day of pullback needed to kind of reset some of the froth in the tech trade, but the expectations look like a catch-up trade into the S&P's leadership. Love it, John. Thanks so much for the check-in.
Good to see you. Thanks.
Absolutely. John Kosar, Chief Market Strategist, Asbury Research. Some seasonality assistance coming too, it seems like. All right, good stuff. And a message that maybe the market are hurting because we're now all green across the board. Index is back positive as the NASDAQ is picking up some buyers. Chartmaster taking a look at earnings next. CSX, part of the big transport rally today ahead of their report. Kinder Morgan's had a really, really nice couple of weeks. And Discover Financial is in the same vein as the rest of the credit trade that's done quite well. Looking at technicals and charts next.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trading
Micron on the move.
Passionate traders ready to tackle your trading questions, no matter how complex. Plus, get
Micron coming up to an area of supply. Watch Micron.
by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day.
It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends. All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes up to 25 stocks in just a few clicks.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Let's get technical. Mr. Big Ducat here with me on the charts. Jenny Horn in the newsroom as we get ready for a few big reports. Discover Financial, I think, fits into our conversation this morning, Jenny, about the strength in banks and credit-related stuff. So what are we looking at?
Yeah, and I have to say that this name, I mean, is only expected to continue to see some upside. As I was reading like the overall consensus on the street, which has turned very favorable on Discover. So that's frankly amazing. I know we looked at this several months ago, and I was shocked to see how strong and resilient this chart had been because, of course, we talk about the looming credit threat in the U.S. consumer. But hey, if banks were any indication of this company's report, I think that they look set up pretty solidly here. So report today after the closing bell. Overall, we are expecting right now about $3.44 a share for earnings, or $3.28, excuse me, on an adjusted basis. On revenue expected to come in around $4.4 billion. Now, earnings would have actually continued to be revised to the upside. Just over the past 60 days, been revised about 5% to the upside. Doesn't sound like a whole lot, but that's pretty rare, honestly, to see that much of a revision to the upside as we go into this report. Also, we are expecting that revenue to continue to rise. So I find it that, frankly, in itself amazing because, again, this company has such a good read on the consumer. And I know that they're considered like one of those credit cards that tends to issue a lot of credit cards. So it's one that's very widely available, widely held, also gives a good read on debt. But they have been able to skate by what I have to imagine is a difficult right now consumer environment so well. And I think echoing a lot of the concerns we heard from these major banks just a few months ago, where it was like doom and gloom. It doesn't seem like the U.S. consumer is in any trouble. So we're expecting a lot of pretty much the same going forward. Obviously, if we see any disappointment as far as like guide, that's a concern, but up 1.5% today, and this name continues to surprise me, frankly.
Yeah, $150 almost here with another 1.5% rally. All the other reports seem like they're helping it. We talked Synchrony this morning too, freaking out. How's the chart look, Rick?
Well, the chart looks pretty good so far. We can see that we did have a notable two phases rather. We had this earlier phase here, then we had this significant gap up. Then we kind of moved sideways for quite a while here. We did have a lift to the upside that gave us our previous 52-week highs near 147.61. Yesterday, we poked our head up above that line. Couldn't quite clear it though, closed below it. Today, it's looking like we are making more progress to the upside. However, still haven't taken out yesterday's intraday highs. The day is still young.
All right, looks like we're back. Mic check, mic check. Let's see here. Let me just check. Check. We're back. You can hear me, Rob? Okay, good. Thank you. Had a brief disconnect there, looks like. All right, we're back. All right, so been a pretty decent morning so far. Our futures coming back now. Futures, okay. All right, NVIDIA. Okay, the dealers are fighting with this Iron Condor trader that has over 20,000 contracts open. They might have closed the put side already. Okay, Oklo. Still going, Oklo. Morgan Stanley CEO was on a few minutes ago on CNBC. All right, let's see what we got here. Okay, we're back there. Okay. All right, looking for a bounce. S&P looking for a bounce. Nano Nuclear going. Nano Nuclear back to the high of the morning. Nano Nuclear. Nano Nuclear's going. SMR is at the high of the day. Oklo, OKLO. That one was brought to you by Frano a couple of weeks ago. Around $8 a share. It's up to 15 now. Looking good. Those probably will continue. I would think these are longer term, so you might want to buy some options, maybe some leaps. That's what I did. I bought leaps instead of shares. January 26, 1250 calls. Those are up very nicely. Okay, Apple's still not able to get off the low of the day. 5750 test coming. Okay, that would play into the Iron Condor. Dealers. Okay, Nano Nuclear about to break out here. Nano Nuclear is about to go. Okay, looking for a follow through. Nano Nuclear. Okay, Nano Nuclear, watching that one as the S&P pulls back. Nano Nuclear back to a high that we saw this morning. Okay, Oklo, all of these self-contained nuclear stocks, self-contained nuclear devices getting a lot of attention. Their own internal cooling units and everything. So you don't have the same issue like 3 Mile Island had. Technology is changing. All right, Oklo, definitely looking good. Oklo.
Multiple right now. Its forward earnings are around 17 times versus rails, which are around 20 times, and industrials at around 27 times. So it is trading at a discount, relatively speaking, and it's only made slightly a modest move to the upside this year. So it's actually our worst performer of the three, if you can call it that.
Okay, Nano Nuclear looking good. All right, that one's get the shorts covering now.
18 buys, 10 holds.
Seems like a value trade, perhaps, in that category, as we've seen that type of stock get some attention. To Jenny's point, it's kind of a new, thing.
Okay, let's take a look. Nano Nuclear, let's go a little more granular. Let's look at the 1 hour chart. 1 hour. Okay, not a lot of overhead supply at the moment. 2 hour chart. All right, starting to see it coming in around 1875, 19. 4-hour chart. 4-hour chart, same area, about 1850. You see that up there? 1850 to 19.
And then we have a competing downward sloping trend line in blue, once again going across
Oklo.
triangular price pattern, symmetrical triangle. That's the kind of thing you look for in trading when you're looking for a potential breakout here. And really, the moving averages as well exhibit the sideways nature of price. They're clustered together. They're right on top of each other. Kind of just price bouncing back and forth around this confluence of our indicators here. But now, when we look at the more recent activity, you can see they're starting to diverge apart from each other. They're starting to.
Okay, Oklo, I'm going to take a little profits into strength. I'm looking for a little ABCD pattern dip during the 12 o'clock hour. I'm going to take my son to school here shortly at around 10 minutes after 11. So got about another 25 minutes. I'm going to sell a little bit into strength and re-enter. You don't have to get that granular. I mean, you could just buy shares and just sit on this thing. It's probably going to be a $50 stock a year from now, if not sooner, with these self-contained modular nuclear power units, self-contained, self-cooled. Seems to be what technology is leaning towards, instead of those big bell-shaped 3 Mile Island type installations, or what was it, Nakajima? Forget the Japanese nuclear power unit that got hit by that tsunami years ago. Okay, nano-nuclear going. Okay, so this, I'm going to keep a little bit on Oklo. This looks like it's going to rip here. Okay, shorts are getting clobbered right now. Okay, these are going like crazy. Holy smokes, look at these things go. SMR ripping. I know Frank's in this one. I believe Susie, Frano, and a few other people are trading this one. Nano-nuclear, that one's working. Nano-nuclear breaking out. Okay, we got heavy supply overhead around 18. I'd sell into that. Look for a BNC pivot. Tesla, still jockeying around this area. Micron. Okay, Micron. Okay, looking for higher highs and higher lows. We got supply overhead on Micron at around 109.25 to 109.50. Micron. If you're trading Micron, look for this supply overhead. Right overhead to see some selling into there. Need to get above 110. That's possible today. That's just on the short time frames, 5 minutes. Look over here on the 4-hour chart. Don't see anything. Let's go to the daily. Micron. You can see the 50 days turning. 50 days turning up on Micron. Just watching histogram for clues on when to sell. Okay, JB Hunt still fading. Okay, these nuclear stocks are in the groove today, huh? Oklo. Looking for BNC pivots. I'll probably pick up some Oklo on the dip. Still have a few calls left. Supermicro on the move. Supermicro starting to move. Okay, so these chips catching a bid. Supermicro is trying to push above. It's above the 50-day. Okay, so that looks good. Supermicro. Supermicro finally above the 50-day. That's a big deal. Cyan, TTM. Okay, looks good. Looks like Supermicro is going to go here. Watch for a breakout. Watch for a breakout.
earnings season for the big banks. The regional still
Supermicro could get going. Watch Supermicro.
although coming back a little bit off of that, still posting impressive gains. The other big banks higher as well, aside from JP Morgan. In terms of the regionals, to note, U.S. Bank actually also very close to all-time highs as well after earnings. We're seeing M&T, which reports.
Okay, there goes Supermicro. Watch for a breakout here, folks. We're above the 50-day now. Okay. Above the 50-day. Supermicro finally above the 50-day. Might be something. A lot of people don't like it. The more people that hate it, the better it is. From a perspective, I would only trade options on this one. That's all I'm trading, not shares. Once they release their data, whatever, maybe we'll take a look at shares. Let's see, what do I want to do here? MCI. Dominion.
Still quite a bit lower, but if you take a look, Broadcom, TSM, Lam Research, Analog Devices, ARM, ON, Micron, all posting gains today, so reversing yesterday's losses.
That is important that there is some dip buying, even if it's not hand over fist, extreme love for the stocks today. They're up, and that's kind of all we need is some stability. George, we talked about rotation in our conversation too. I mean, the Russell really powering up 2,300 now for the rut. Or 2283, I should be more precise for the index. The intraday high from July is at 2,300 on the dot. So we're in real potential breakout territory for small caps.
Look, everyone's been waiting for this. There's a lot of talk about how Russell 2000 is undervalued relative to the current index price. All you need is a catalyst. The catalyst obviously has been the banks, the regional banks, which are a large component of the Russell 2000. So that's been the culprit. That's the reason, of course, the Russell 2000 is higher. Plus the expectation that the Fed is going to be cutting rates at least another 50 basis points by the end of this year and 225 basis point cuts. So that's, I think, the primary catalyst. And across the board also, I think, you're seeing some evolution of the semiconductor trade. Just to add to what Caroline talked about, I think if you look at the best of breed out there, which is NVIDIA, everyone really knows what the products are capable of.
All right. Looks good.
Demand and production, unavailability. So I think these names like Taiwan Semiconductor, NVIDIA, I think what we'll end up seeing is the best of breed just potentially take off and leave the rest, by the wayside based upon the price action we saw yesterday with ASML's problem. So I just wanted to add to that. But the other thing is there may be a catalyst for the U.S. dollar. Maybe the euro weakened because the ECB is expected to lower interest rates.
Okay. Looking for futures to bounce. They are. Okay. JB Hunt still fading.
Relevant federal funds rate, if you will, or core baseline overnight rate. Inflation, if you look at the prints for inflation in the ECB, below 2%, 1.8% was the print in September. So they're sort of in a disinflationary spiral below their target of 2%. So expect them to cut rates coming up as well.
Okay. The move on the macro stuff tomorrow ahead of retail sales does seem, like we're kind of muted, just waiting for that print. And I do wonder if that kind of limits where we go today, considering tomorrow's kind of a heavy day with retail sales, the jobless claims, industrial production, a fairly decent slate of economic data. And then on top of that, with the TSM, it's like tomorrow should be our action day, Caroline. I mean, that seems simple enough to say.
Yeah, and leading into retail sales, which of course is backward looking, and as is earnings season, right? But that's why outlooks are so important. We have gotten some nuggets of information, about the consumer. We heard from luxury goods retailer or conglomerate LVMH, and they're under pressure today after basically disappointing, but they did.
Okay. Supermicro back to the 50-day. Looking for it to follow through. NVIDIA, a little dip there too. Very volatile, choppy price action. Many of you have been looking for that. So good observations. Up volume still leading though. Up volume. Still leading. 2.8 on the NASDAQ Composite. 3.25 on the New York Stock Exchange. 3.25. Let's take a look at the New York Stock Exchange. When in doubt, I'm always looking at the New York Stock Exchange. Okay. New York Stock Exchange does not say bearish. It says bullish. If we get above yesterday's high, that'll just be a shakeout that people will be pissed off about. All because of what was it, ASML or whoever the hell it was yesterday? Chips sold off. Doesn't look bearish to me. Intraday, anything can happen, but right now it doesn't look bad. Okay, so yesterday we had pretty big selling volume, a distribution day, but continue to push higher into the election. So go figure. Oops. Sorry about that. Oops. SPX. Okay, inside day, S&P 500 stocks, New York Stock Exchange, Composite 2,000 stocks. Rely on the 2,000 stocks of the New York Stock Exchange. Let's look at yesterday. We had new highs, new lows. New highs beating out new lows. So it was that iron condor that had a lot of impact on the S&P 500, and the news with ASML affecting the chips. The chips had a bad day yesterday. Let's see what that looks like. So we do have a red bar today, so we have a few more sellers. Advanced decline, though, is making new highs. New York Stock Exchange advanced decline is making new highs. Okay, that doesn't look bad. Does it? Does it? Okay, that looks good. New York Stock Exchange advanced decline. Okay. Oklo, again, I'm looking for a BNC pivot on Oklo. JB Hunt still pulling back. Profit taking.
Staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, you don't see
Shake and bake.
any activation in the
Shake and bake.
reward pathways as if you don't have an emotional reaction.
You're not very good at sales.
Yeah, me too.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail. Have you set yourself up correctly? It's controversial. The old guard is saying, are they up with their head?
AI feels controversial and it's going crazy right now.
It is going crazy. So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network.
Okay. All right. So market's looking good. New highs, new lows. All right. So we know what that looks like. We know that value is leading. Okay. S&P 500. You know what? Let's take a look at one other thing. The McClellan volume oscillator. One of 20 indicators that we watch. All right. So this did turn up a little bit. Now it's turned back down. So that's in the middle of the range. Also VIX, VXV. The front month to the 3 month is in the neutral zone, or was. Let's see what we look like right now. So right now we're red coming out of red, maybe headed to green on the VIX. Okay, VIX VXV is in the middle of the range. Okay, the meltdown that we saw in the Nikkei and the POP and the Japanese yen, Australian dollar carry trade. That's that peak right there. So we're right in the middle, right in the middle. We're not at the lows, not at the highs, right in the middle. A lot of people talking about the put call ratio yesterday. Put call ratio. We need to see more. Oh, that was Mikey, I think. We need to see more more puts filling in. That would be good. Okay, so the put call ratio. That had dropped quite a bit. Put call ratio had dropped down to the 80s percentile. Okay, we're starting to get back in the neutral zone. Index put calls at 1.11. Okay, blue elder sticks. Okay, S&P 500. Let's see what else.
We've had a slew of banks. We kicked it off last Friday. Jenny Horn is with us, markets correspondent here on Schwab Network. And now we're taking a look at Morgan Stanley all-time highs now. As this company had its report, we'd love to hear more about this one. Good morning, Jen.
Good morning, Nicole. And I think definitely cementing that these bank earnings collectively have been strong. I mean, we've talked about so many of these major banks, but Morgan Stanley specifically gives a great read on the overall investment banking thesis, which continues to provide upside, as they did say that net interest income actually came down moderately versus their fourth quarter relative to third quarter levels. They also did say that overall the interest rate
SMR winding up. Looks like it wants to go again. Oklo looks like a little profit taking. Same with Nano Nuclear. Nano will catch a bit here. SMR are just holding very strong.
Did come in around $1.88 per share. That was up from a year ago. We also did see revenue top expectations also climbing modestly on a year-over-year basis. Now, the company did maintain its quarterly dividend of around 92 cents per share. That will be payable November 15th to those on record as of October 31st. And again, I think that right now, you look at this environment with falling interest rates as the continued hope, and also the fact that they say stock buybacks will continue to be opportunistic. Well, overall, this interest rate environment provides more upside from here. So I've looked at all these bank earnings. This was one of the most optimistic. So many of the other banks did come in perhaps better than feared, but we're operating with very modest revenue growth. And Morgan Stanley saw a really healthy report. So no surprise, this name's up almost 30% now this year. It's up now 16% just this month alone, and modestly off those highs, like you mentioned, 0.5%, but 74% off of its 52-week low. So bank sentiment is strong. If there's any reason to the U.S. consumer and the strength there, it doesn't seem
Okay. RK Rocket Labs, you're looking at Rocket Lab. Oh, I was looking at that the other day. I forgot to check that out. Thank you for reminding me. RKLB. Rocket Labs, yeah, it looks like it's going to go, right? All right, so that's headed higher. It's got an 60 cent ATR. Okay, Rocket Lab. Don't buy the high of the day. Wait for a dip. Wait for a BNC dip is usually the best thing. Rocket Labs, you don't want to chase it as it's taken off. No pun intended. ASTS. Same thing, they're going. Look for BNC pivots. ASTS, I got stopped out of this one. Looking for it to get above the 50-day. It's got an ATR of a little bit over $2.
Continued positive earnings, continued strong numbers out of the economy. And
Nano Nuclear looks like people are just taking a break now.
the election could bring uncertainty. Global issues could bring uncertainty. And we're still not clear, even though we've had one rate cut, exactly how aggressive the Fed is going to be in lowering rates.
What would you tell the Fed to do at this point? Two more meetings this year, and of course, more meetings next year.
What's Bitcoin doing? Bitcoin, the weekly looks good on Bitcoin. Check Bitcoin. BTC, USD, Bitcoin. Okay, let's check the weekly over there. Weekly. Okay, so this is, look at the momentum. Look at the TTM in the bottom. Okay. look at the chart. Okay, so you got a weekly descending channel. Now, trend lines are subjective. I use the bodies of the candles. Some people use the wicks. I use the bodies. And on the lower part, I use the bodies of the more recent candles. Okay, so a sort of a wedge to a channel kind of look to it. But look at the histogram. As we're breaking out, the histogram is becoming more and more bullish. It could fall back into the channel, but it looks pretty good at this point, to me anyway, for continuation on this pattern. Here's the daily. Here's the daily. Okay, Bitcoin, daily. Okay, and back to the weekly because I didn't show you the weekly yet. Here's the weekly. Okay, look at the histogram bar on the bottom. The momentum is clearly turning. Does it guarantee a breakout? No, but if you're holding on to, say, Coinbase or any of the associated ETFs, BITO, whatever, those look good for the follow-through into the election and maybe beyond. Microsoft has a TTM turning on Microsoft. This could go. Microsoft, watch Microsoft. Okay, what time is it? Okay, I gotta go grab my son. I have to go drop my son off at school, so let me put this on the Qs for now. Qs getting some action, hanging in there. Qs. Maybe we should watch the S&P. SPX, S&P 500. That's right in the range. What about IWM? IWM is stronger. So let's do IWM today. Okay, we're going to follow IWM during the lunch break. Bring my son to take my son to school. Let me just shorten this. You guys know what this is. What this means. School drop. Okay, watch that. It's right up at resistance right now. IWM. Let's go to the hourly chart over here. And do that. Okay, I'll be back.
The trends in this market are very powerful, and they're still going higher. And so buying on dips has proven to be the right move. And so I would continue to do that until we see otherwise, until we see a real shift in trends and something happening where we get a very different market climate. So yes, I would buy on dips.
Yeah. Look, I see you have S&P Global, you have Nucor, Sherwin-Williams. What I know those are the dividend aristocrats. Sherwin-Williams, are you thinking people are fixing it up? We think about Nucor. Tell me a little bit about these picks. Why these ones? Yeah.
Well, full disclosure, I have to pick names that I don't, own or have exposure to, but I like these names in the aristocrat names. Sherwin-Williams for the housing market, and housing has proven to be pretty resilient. And now, especially unfortunately, with some of the damage we've seen in these storms, we've seen these home-related companies perform very well, like a Sherwin-Williams, like a Home Depot, like a Lowe's. SP Global is a financial, right? And they do more fintech, all types of very interesting things related to financial services, and has been a very impressive company. They have outperformed, and all three of these have outperformed the S&P 500 on a 3, 5, and 10-year basis. I like them. Year to date, Nucor is a steel company. They have not performed as well, right? We've seen pricing pressures in steel and other commodities, but long term, Nucor has proven to be a very good investment, and so I do like it long term.
Yeah. And, we think about the election, and I think a lot of folks are expecting some volatility, they tell me. as they're counting ballots and what the new, administration will look like and such. Do you expect volatility? Do you expect that it'll be noise and we'll be back sort of where we were pre-election?
Unfortunately, I do. If you look at the polls and if you look at what people are saying, it's going to be extremely close election. And so we might not know who wins clearly election night, or it could roll into several days afterward. And so that brings uncertainty. And as we know, the markets do not like uncertainty, not knowing. So I expect volatility in the markets as we wait to see what happens with the results and if there's any negative reaction to whoever wins. So going into the election, I would be more cautious.
Right, but then you think we move back higher at some point. Okay, Eric Bailey, the Bailey Group at Stewart Partners. Thank you so much for being here, Eric.
Thanks, Nicole.
Good to see you. Thanks. Trading 360, we continue. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals. Don Kaufman will take us through the trades for the Japan ETF, EWJ, eBay, Eli Lilly. Next here at Trading 360 on Schwab Network. We'll be right back. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder, Theo Trade. Great to see you both. Good morning. Don, before we get to your ETF, the Japan ETF, how do you feel about the markets? We've certainly seen volatility. What do you do on the swings?
Yeah, right now it is quite the interesting situation. I think everybody's talking about right now with the S&Ps trading basically at all-time highs, but the VIX still remaining above 20. And yeah, we can talk about geopolitical risk, and yeah, we can talk about the election upcoming. Nevertheless, there's still a huge premium, to volatility on the options inside of the S&Ps, and it's active and it's very worthwhile. No question about it. So I've been a big-time premium seller in the last couple of weeks, which has done quite well in a marketplace that right now really isn't moving a huge amount, but again, pricing in heavy vol.
Right. So with this action, on your mind is Japan, EWJ, the Japan ETF. Tell us about your idea here.
Yeah, there's a couple things that actually have brought me to the EWJ, and one of those is which you can actually look, and Rick will do this in just a moment, of EWJ having a tough time breaking through about that 72 level. So I'm focusing on the 72 level, maybe as an area of resistance, but also the yen is kind of stabilizing. The yen carry trade is very much back. There's been a lot of discussion, obviously, out of the Bank of Japan. Nonetheless, I think it's in the near term still rather bearish, though, specifically for some of the big caps over in Japan. The EWJ, I'm going out and doing a November 15th expiration. I'm just going to use a $2 wide put spread. I'm going to be buying the 71 puts, selling the 69 puts for a 90-cent debit. Just a nice, easy put spread, looking for some follow through to the downside, coming off that 72 level, and a little follow through, as I said, to some sell side activity.
I see. Okay. What do you think here when you look at EWJ, Rick Ducat, looking at the charts?
Yes, the 72 level that Don mentioned was the first thing that stood out to me as well. And you can see why. It's this red line here, high point, high point, high point. We had a bit of a false breakout there that was a bit of a rug pull for bullish traders there. It looked like we were perhaps going to clear it with some conviction here, but it was not to be. It lasted for only one day before trending downward once again. We can also see that it was an especially difficult move because we also broke through our rather steep blue trend line here as well. Now we are finding ourselves in a situation where we've fallen below our moving averages, yellow 21-day, orange 63-day, exponential moving averages, as well as our thick red line, our volume profile point of control, RSI, also languishing a bit here, longer term, red trend line going downward here, green trend line broken, 50 midline, we have given up here. We are below that area. Now momentum has shifted more toward the bearish side. So, to touch on what Don mentioned, yes, 72 was the area that caught my eye first here, but our orange 63-day EMA right here, that coincidentally is exactly the break even for that trade there. So, if you were interested in this trade, you'd be looking for price to stay below that level here. Then we've got our green line here, which is 69.14. That was a low point, also roughly matching up with our short strike there. And then we've got this gap level down here, 67.77, another supportive area.
All right. So he's watching some of the same numbers, starting with that 72 and the support area. Don, final thoughts?
Yeah, one of the things that's actually going to be a standout on this, though, is some of the price actions specific to the yen. And that is a little bit of the wild card out there. So I don't expect more from the Bank of Japan, but the yen. If the yen were to see dramatically more sell-side activity, that could actually hurt this particular trade, although the technicals are in place. It's the yen that actually makes me a little bit nervous here. It's exactly why, though, I'm using a defined risk spread in this particular case.
I'm glad you brought that up because that's obviously a huge factor and something for folks to watch. Let's talk about eBay, which is hitting some new highs recently. What are your thoughts here, Don?
Yeah, this one, I got to tell you, I don't like being the trend follower here, but in this case, that's a trend I am not going to step in front of. One of the first things I kind of asked myself about eBay is like, is this going to be possibly even a recession-proof or interest rate-proof, underlying? And it looks like it when looking at some of the price action here. I mean, first of all, eBay's up 52% year to date. And if we actually extend out the chart, this thing hasn't had a lot of price action in previous years. So it looks like trade is actually jumping into eBay, okay, as a little bit, if you will, as a buffer, as a hedge, if you will. So the business environment happens to be solid in there. And again, the question is it recession proof? So in this trade, I'm going to go out a bit further. I'm going all the way out to the January 17th expiration. And I'm doing that because I'm going to take a little bit of a flyer. I'm going to go out and I'm going to buy the 75 calls and sell the 80 calls. So it's kind of a wildly bullish trade, buying the 75, selling the 80 calls, Jan of 17. This one's only done, though, for a 75-cent debit. It's an outside shot that if this kind of momentum continues, maybe the upcoming earnings kind of accelerates the stock a bit more. This could actually have a nice payout. It's good risk reward for a stock that seems invincible at this particular point in time.
All right, invincible. I mean, Baird has an outperform, and they have a $70 target, so they're along with you. Cantor with a neutral 62 target. Goldman Sachs has a sell. They put a sell rating yesterday with a $55 target. So very interesting. A little bit of an array of calls there.
How about Rick Ducat? Take a look at the technicals, please.
When we look at this chart, we can see, Don mentioned kind of not a ton of price action before, and oddly enough, that's kind of showing up in our yearly chart as well in certain phases. Obviously, we had this long sideways area, then a big jump up, long, mostly sideways area, kind of just very barely grinding upward, then another leap to the upside. Now I'm wondering if perhaps we're going to be in another consolidation phase around here, as we have not made a ton of progress over the past couple weeks or so. We are also developing a small volume node at these elevated prices and had a little trouble cracking above 67.66, which is our red line there. When we look at RSI as well, we can see long-term green trend line going across the lows. It had transitioned into a more steep trend line heading upward here, but now we've broken through that trend line to the downside. We've got our high point here forming our red trend line going downward on the RSI. We are out of the overbought area, and we've, as I said, we've broken through that green line here. So perhaps momentum is slowing down a little bit here, a little bit of a bearish divergence that we saw as price was making the highs. RSI was not making a corresponding higher close. Does this mean we are going to get a crash? No. It just means that momentum is slowing down. It's not quite matching up with what we're seeing in the price action. Not the greatest sign for the bulls, but definitely not like head for the hills, everything's going to collapse here. But, not really what you'd want to see at the same time as well. So, as I said, this could just be a bit of consolidation after a rather lengthy rise up in price. If we do keep moving to the upside, near-term resistance +1 standard deviation channel comes in near 70.60, 1 standard deviation above our blue linear regression line. Then we've got our green lines here. A low point that we had, a high point before a gap up, lines up with our 21-day EMA near about 65.40 or so, and then a series of small low points near 63.61 line up with a volume node.
Okay. What do you think of all that, Don?
Oh, I actually, I want to go back to one of the comments you made a little bit earlier there. I wasn't going to bring this up, but Nicole, you brought it up, and that was Goldman Sachs with a sell. That was actually one of the reasons I brought this particular trade up. I figured Goldman Sachs puts a sell on it, and it stared, it laughed, and just kept right on rallying. That's a long for me. So anytime I get a chance to take the other side of maybe Goldman Sachs, I will do just that. And that was, again, one of the impetuses for me bringing up eBay. Again, I didn't want to go there, Nicole, but you started this one.
Right. You know what? I like that. You know what? You're a true dedicated player to this market and your own team, which is smart. Let's talk about Eli Lilly, which is flat today, hit a recent high of 972. Some of your thoughts here as we, wait for results for the quarter and such, but it's had a nice run, 1 year up 48%.
Yeah, there's no question. This has had a spectacular run. And actually, a lot of the run, I've actually been on the bullish side. And I say that, because, as you well know, I don't take a lot of bullish trades. And when I do, it's usually something spectacular to the upside. But in this particular case, I think it's finally time to possibly fade, take a bearish position in Eli Lilly. Number one thing, the GLP-1, that kind of craze might kind of be fading a little bit in the overall marketplace. So we're seeing price action right now kind of stabilize. Lilly doesn't seem to necessarily be able to break out above the 1,000 mark, 960, 950 level. So it's really the entire craze is kind of mellowed out. It hit $1 trillion market cap and over and done with. As such, I think it warrants right now taking the opposing side, meaning taking that bearish trade, take the shot, especially before this next earnings period. But I'm going to go all the way out to the January 17 on this one as well. And I'm going to be buying an 850 put, which is way out of the money. I'm going to buy an 850 put, selling the 840 put, but it's done for a $2.50 debit. So it's just kind of a measured shot to the downside. If there is any signs in here of slowing growth, if there's any signs of the GLP-1 kind of trade fading out, this is a stock that actually just doesn't have a favorable risk reward right now, in my opinion.
I mean, not that they're the same, but look at what's happened with Novo Nordisk. I mean, that's been pulling back off its highs. It's down 11% in 1 month. That's a theme that we saw. Okay, let's last but not least have Rick take a look at the charts.
it does seem as though this run upward is slowing down a little bit here. You can see to start off with, we have our blue channel here going across these lows, duplicated it, put it across the highs, happened to match up pretty well here. But we had a very notable downside breakout here. We had this kind of V-shaped price action here that very quickly took us far below the boundaries of our channel here into the thick of this volume node near about 770 or so, but quickly, rapidly, right back up to where we were before, back to those 52-week highs, and indeed even pushed above those previous highs a little bit here, but failed to make any kind of convincing close above those levels here. Now, once again, trending downward. We've got a small, rather narrow white channel compared to our blue upward channel. The white channel is trending downward here. We have broken below our blue channel as well. Now we are struggling to hold on to our moving averages here. We are kind of right on the nose of our yellow 21-day. We touched on our orange 63-day earlier today here. RSI we can see as well trending downward here, but also juxtaposed with an upward sloping green trend line here. So kind of this triangular type shape here for our momentum indicator, right around that 50 midline here, not really giving us a great lean one way or the other, but perhaps very slightly bullish at this time here. Once again, another volume node here near like 911 or so. If we were to break to the upside here, what the bulls would want to see would be a breach of this repeated high point near 940, and then this spot that we had trouble clearing near 966 or so. To the downside, if we break below our moving averages, recent lows 858.81, and then another low point after a gap up 825 or so.
All right. Thank you, Rick, for those charts today. We appreciate it. And I had Novavax on my mind. Okay. It's not GLP-1. I mean, this happens to do with COVID-19 and flu, but it just shows you, one blast from the FDA. This stock's down almost 20% today. NVAX is down 19%. So some of these pharma names can get hit. Don, final thoughts.
Yeah. I'd like to circle back to the volatility in the overall marketplace. Look, there's a lot of reasons we could see a higher VIX, but a higher VIX coupled with the marketplace at all-time highs. Look, you got to be on your game right now. For those of you that are bullish in this marketplace, the only word I have for you is hedge. I think a hedge is worthwhile right now. I think there's a lot of risk to the downside, just given the fact that, again, we're seeing a substantiated higher volatility level for what is a considerable period of time in this market.
Right, we heard you. I feel like there's a little Halloween spook in that, we better hedge, like a big boo might come. Okay, Don Kaufman of Theo Trade, Rick Ducat there on the charts. Thank you both so much for being with us for Big Three. Coming up next, we're going to spotlight EVs and the very latest from General Motors. GM investing in joint venture to mine EV battery raw materials right here in the United States. What does it mean for the industry going forward? We'll be right back. Trading 360.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time to spotlight EVs and General Motors' latest move, investing in lithium mining right here in the United States. Ed Batowski's with us, managing partner, Chapwood Investments. Thank you so much for being with us. There's no doubt there's always seems to be concern about the raw materials that go into EVs. GM making this big deal, $625 million for lithium, and this goes into Nevada. What are your thoughts on this deal?
Well, it's shocking how little lithium there is in the United States and how much of a demand there is. So we have to go outside of our border and understand that this company, Lithium Americas, is actually a Canadian-based mining company that happens to own the Thacker Pass in Nevada. So what they've done is they've actually gone out and secured financing from General Motors for 38% asset level ownership. That doesn't mean that they sold the entire lithium area, if I can say that right, but 38% of the asset level, and they have an offtake agreement. That means that they're going to have an agreement that General Motors can utilize almost everything that they get out of it. So it's only a matter of time before possibly General Motors buys the entire company.
Yeah, and it looks like under the deal, so GM provides the $625 million in cash and letters of credit to Thacker, as you're noting, in addition to a conditional $2.3 billion loan commitment from the U.S. Department of Energy that was announced earlier this year. You know, the big picture here, is this the beginning? How do you feel? Because we always look to China for a lot of the raw materials that go into these EVs. And certainly we start to think about how we like to do a lot of things here in the United States, whether it's pharma or have Boeing and so on and so forth. You know, the semiconductor chips would be another example. So trying to have some of this stuff more at home, I think that's the big picture question too.
Yeah, and Nicole, one of the other things that has to do with the Thacker Pass has to do with there's a sacred burial ground that supposedly is right there where they're digging. And the Native Americans are very upset that they're drilling there. So that's another area of concern where I'm sure that General Motors has somehow, squelched that. But that's a real contentious thing about where they're getting this lithium from. But the idea that we're going to have to go outside the United States is something that we really have to be concerned about, because if the United States isn't liked outside the U.S., and if we have all these tariffs that are going to be brought on, we're going to have tariffs trying to bring lithium into the country from outside the United States. So we really need to be friendly with a lot of countries, and China has a huge resource of lithium. The United States only has about 2% of the world's inventory of lithium, and lithium has become very quickly one of the hottest commodities there are.
And so the big picture, when you think about EVs, I mean, part of it is the demand for EVs overall. I know hybrids have been hotter lately, but the hope is that EVs are it going forward. And while when you talk to people in the auto industry, they say, oh, demand's been a little pullback or whatever. Everybody who wants an EV probably has one already, but that it's coming and more EVs are coming. Are you on board with that idea?
Yes, yeah, there's no question about it. I mean, EVs are being jammed down our throats. I mean, I'm a perfect example. I drive 2 miles to work every day, and I'm a perfect candidate for an EV, and I just refuse to do it. I don't know why. I just like the idea of putting gas in the car and just being able to go and just get away. And I think there's a lot of people that feel that way. And until you're able to get a lot more mileage out of an EV, I don't think it's going to catch on as quickly as people had hoped that it's going to. And also, it's also important to note that 60% of lithium demand in 2022 was for EV batteries. The average battery needs about 8 kilograms of lithium, while an iPhone battery uses less than 1 gram. So you have to remember that iPhones and computers use lithium as well as cameras. So they're, EVs are not the only place that you're getting use of lithium.
Look, it may bring value, it may create jobs and things like that. I certainly don't like the story about the burial ground. I mean, I'm not fully immersed in the story to know more details about that, but never like hearing people being upset about something. But the big picture here is this is just a drop in the bucket in the big rare earths and things that we need. Which car makers do you buy any of the car makers? Do you like Tesla? Do you like GM, Ford? I think when I think about some of the others like NIO and XPeng and things like that.
Yeah, I'm not a big buyer of any of the cars. I think that they're all, being hurt because of the mandate to go to EV, and they're not selling. So I'm very bearish on every auto dealer. Even Tesla, I think Tesla is way overpriced at this point, even though there's other sources of income for Tesla than just the automobile. But I'm not a buyer of any autos at all. If any of them I was going to buy, it would be Toyota because they have a strong push towards hybrid. But that would be the only one.
That's very interesting. So big picture, you feel like there's just too many headwinds for the group overall. What's your favorite group these days? If it's not automakers, clearly it's not. What's your favorite sector?
I continue to love utility stocks. I just believe that you're going to see, as interest rates continue to drop, you're going to see the dividends on utilities become more attractive. Plus, you're going to have a very quiet capital gain that's going to creep into these utilities because natural gas prices and coal prices have dropped considerably, and that's going to be a benefit to the earnings for these utilities. So I really, really like utilities. In fact, there's an ETF called UTSL, which is 3 times the utility market bull. And if utilities go up 3 times, this will go up 3. If it goes up 1 point, this will go up 3 times that. And again, that's only for certain people to take that risk. But that's how much I like utilities. And I think we have another 15% gain before the end of the year in utility index.
Wow, Ed, that's a big call right there. Thank you for talking about EVs and then sort of expanding into what you really do like. Ed Butowski, great to see you, Chapwood Investments.
Thank you.
Coming up next, the disruptors, who are still standing by, take a look at Autodesk. Wells Fargo initiating coverage on these stocks with an overweight rating. He'll break down the call and give us an example trade next here on Trading 360.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Pedalides, live on the floor of the New York Stock Exchange. So glad you're with us. A look at developing stories here. I'd like to bring in Caroline Woods, senior markets correspondent, taking a look at JB Hunt, which some nice numbers here. And a nice pop in the stock. It's pulled back, but it was impressive.
Yes, off the highs, but still up about 3% after earnings. Earnings and revenue actually both fell from the year ago period, but still managed to beat analyst expectations. So the trucking and logistics company reported adjusted EPS of $1.49. The expectation was for $1.42, so 7 cents ahead there. Revenue fell 3% to $3.07 billion, but that managed to beat 0.34 that, or I'm sorry, 3.04 billion that analysts were looking for. Sales in the intermodal unit were flat at 1.56 billion. A 5% decrease in gross revenue per load was offset by 5% higher volumes. Dedicated contract services unit saw sales fall 5%. Its integrated capacity solution segment saw sales fall 7% as overall volume decreased 10%. On the call, the CEO did say that they continue to navigate a challenging freight environment, but similar to what they said last time they reported, they continue to see a return to more normal seasonal patterns. So getting there. We did see quite a bit of positive analyst reaction. Several price target hikes recorded 185, benchmark to 195, B of A to 196, Stevens to 205, all in the buy camp. So the median price target for JB Hunt now 195. Shares trading at just below 180. Keep in mind, shares are up 3% today, but it's still down about 10% year to date. So shares have been under pressure.
Right. Well, that's good to have that. The target's all higher than where it is now for the most part. That's some optimism there. Thank you so much for that. Sure. Good luck there at JB Hunt. Let's turn our attention right now over to the disruptors. George Stilis is here, senior markets correspondent, taking a look at Autodesk, and Wells Fargo initiating coverage with an overweight rating here on Autodesk, and the stock is higher.
Yeah, Nicole, if you look at Autodesk, the stock is hitting some new 52-week highs. And this company we've talked about before is actually one of the leaders in architectural design and engineering software. AutoCAD software, as it's really known for. Those who use it, it's got about 60% market share globally, and it competes with Dassault Systems out of Europe. But there was a couple of issues going back to early this year. There were some accounting questions in terms of perhaps some restatements of earnings going back a year or two. And in fact, if you look at the earnings back in June, they didn't have to restate any of the earnings. There were some aggressive accounting tactics used, but nothing that violated any accounting rules. And since June, the stock has really taken off. And a lot of the analysts have actually found it very compelling, especially when you consider the company moving away from a traditional transitional license-based model to recurring revenue model, which is subscription-based. And this is a company that's still going through that transition. And that's also a primary catalyst as to why, if you look at Wells Fargo's rating, they just initiated coverage with a $340 price target. They actually see improving EBITDA and free cash flow margins based upon this transition. And like I said, they have the majority market share globally for the AutoCAD software, which is used across the board for architectural design, construction, and engineering, as well as for animation and gaming, for that matter as well. But if you do look at the earnings profile, the earnings estimates keep rising for the stock. The price is actually moving higher, but it's still trading around 33 times next year's earnings. And if you look at its 5-year average, it's around 43 times. So it's actually trading at about a 25% discount to its 5-year averages, with improving free cash flow margins and EBITDA.
So at this point now, how would you go about an example trade, as you noted, at a 52-week high?
Yeah. So it's obviously in an uptrend. It's not moving very aggressively or quickly. It's moving slowly, and so I think it's just going to continue to move to the upside, just based upon the accounting clearance the company received back in June, and essentially the expansion of free cash flow, like I said, in EBITDA, based upon the transition model licenses to recurring revenues. So what I'm going to do is I'm going to go out to November. We're going to use the monthly contracts. It's 30 days to expiration, and I'm going to buy a $280-300 call spread. So I'm going to buy the $280 call, and right now you'll notice that it's about almost $8 in the money. And then I'm going to sell the $300 call against it. So altogether, it would cost you about $10 a share or $1,000 a contract. So essentially we're paying $10 for something, an option here, that is already worth $8 in intrinsic value. Break even is $2.90, so it only has to do $2 to break even. And we're paying $10 to potentially make $10. So there's a one-to-one return on risk on this trade. And that max profit occurs if the stock hits 300 or higher by expiration in 30 days. So we're not necessarily going for that max profit. What we obviously want to do is see the stock continue to move to the upside, at the very least to the 290 for break even. And then everything after that is profit past that point up to 300.
All right, George Sillis, thank you for that example trade on Autodesk and our disruptor every single day here on Trading 360. Thank you. Coming up next, our 360 round, we'll dive right into the earnings of United Airlines. The stock is a winner. It's rallying to the highest levels since its COVID drop in 2020. The other airlines are higher as well. Let's get into the details, what this really means. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends. All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly? It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
Welcome back to Trading 360. It's time for our 360 round, all about the airlines. We're looking at United Airlines, which came in and beat on the top and bottom line, gave a nice forecast for the fourth quarter, sees a strong finish to 2024, and the stock has moved to pre-pandemic levels. It looks like it could close at the levels that it did in February of 2020. Let's have a conversation. What's next? David Nelson, Chief Strategist, Bell Point Asset Management, and Robbie Silk, Senior Editor for Aviation, Travel Weekly, a part of North Star Travel Group. Thank you both for being with us. David, it's so nice to hear when airlines are doing well. They talked about attributing an improving domestic revenue environment, easing fuel prices as some of the large contributors. Nice to see the stock here
leading the S&P 500. Are you a believer? Do you buy in here? It's up 11% today, David.
You know, this is one of the best trading vehicles out there. You know, airlines. We've seen that in the past. You know, I look at the model and certainly a lot to like there. You know, what I saw was, you know, revenue, a small beat there on revenue, very handsome beat on the bottom line. Looks like fuel costs came in better than expected, but maybe the most controversial item out there is the buyback that they announced, 1.5 billion. That's the first since 2020. And already they're getting pushback, you know, from some of the employees. The flight attendants union has come out pretty hard against this. And frankly, I kind of agree with them. Why are they buying back stock when they have $31 billion in debt? I think there's better uses for that cash.
Yeah, they said they would buy $1.5 billion worth of shares. As you noted, the first buyback since the pandemic. They'll begin doing that. They'll start that program. What do you think? Robbie, I'd like to hear more about your thoughts in the big picture and what you think about the buyback.
Well, the buyback may have been influenced by Southwest Airlines making a decision, you know, to do buybacks. Also announcing that just a couple of weeks ago. They, of course, are under pressure from an activist investor, Elliott Investment Management. I'm not sure. I know it definitely got immediate pushback from the flight attendants union. So we'll see. It does represent the confidence that United has had, or has, I should say. United has pursued a pretty innovative strategy coming out of the pandemic, and it's including adding extra capacity in Europe, going past Delta, becoming the biggest airline flying to Europe from the U.S. Other strategies that have really paid off, and they're a confident company right now.
And that buyback was a previous program. They had just suspended it after what had happened in 2020, the pandemic. But in the meantime here, they see better than expected numbers going forward. Barron's has an article that says, say goodbye to cheap flights. Robbie, is that what we're going to have to do as consumers? We're going to get hit hard with some high prices?
I think we're going to see higher prices. There's been an inflection point already. Delta talked about this last week. United's talking about it, where over the summer there was a lot of extra industry capacity. It was up about 6% year over year. Now it's up in this quarter, just going to be about 1.6%, I think. And most of that capacity is from the higher end airlines, the full service carriers. We've seen big cuts in capacity from the discounters. So as the discounters are changing their models, trying to find ways to appeal to higher end travelers, it's taking a lot of that discount inventory out of the market. So it is going to be harder to find deals, I think.
David, you know, I looked and I saw United Airlines leading the S&P 500, Delta, American Airlines also in the top 5 or 10, the stocks on the S&P today. Do you like the group overall? Do you buy these names? I mean, Southwest has been in this big transition, of course. You know, what do you think about this group?
They're very dependent on the economy, and I think they're great trades. They're always cheap, and they're cheap for a reason. But there's a lot of things they can't control. They can't control fuel costs, and they certainly can't control the economy. My biggest problem with them is things like this buyback. These are the mistakes they make every single decade. They were buying back stock right up until 2001 when we had the 9/11. Same thing with COVID. And then when they come out of these horrific events, and they do happen, they have nothing in the piggy bank to get out of it, and they have to come back to the American taxpayer to bail them out. We've seen this time and time again, and I suspect it will happen at some point in the future.
Yeah, I mean, there are some people who think it shows that the business has tailwinds and they like the buyback, but you disagree. So would you buy any of these stocks today, David?
United would be one, but I probably would go back to my holdout. I think one of the best run airlines out there is Delta. That's probably where I would go.
To Delta. Robbie, what are some of the other parameters that you're watching really closely between now? They also noted some strength for Latin America and pricing there, domestic. What are you watching for in the next 6 months when it comes to the airlines?
Well, first of all, the industry is always susceptible to shock. So what's going to happen that we have no idea about? Will the discount airlines be able to have any success in some of the model changes they're going to make? What's going to happen with Spirit Airlines? Will they end up going into Chapter 11? How does the merger between Alaska and Hawaiian proceed along, and of course, what's going to go on with the proxy challenge at Southwest. So lots going on in the industry to watch for going forward.
Yeah, and the exotic destinations that you mentioned, Robbie, are we going there? Is that going to help these companies? You mentioned some exotic destinations.
Well, United in particular is pursuing this strategy on their international route network. They're going to places like Bilbao, Spain, Ulaanbaatar, Mongolia, Nuuk, Greenland, Marrakesh, in Morocco. So it is something they say drives new customers, gets people to use the loyalty cards, so forth. It's fun, and we'll see how well those routes do.
David Nelson, Bell Point Asset Management, Robbie Silk, Travel Weekly. Thank you both today for looking at United Airlines and the other names. Great to see you both. That's it for Trading 360. I'm Nicole Petalides. I'll see you at 2 o'clock. Download our free Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. Catch you too for the watch list. Join me then. In the meantime, keep it right here. Fast Market is next.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed. Stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly? It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including
We'll cover the markets as they gyrate around the flat line. Then we'll take a look at some option strategies in Apple, which hit an all-time high just yesterday ahead of its iOS release later this month, and Taiwan Semi, which is near its all-time highs, into their earnings report ahead of the open tomorrow. And like Folio break down consumer sentiment data in Walmart, the retailer stock has rallied over 50% in 2024 and hit a fresh record high this week. Now let's take a look at the major indices, which continued to gyrate around that flat line. S&P 500 up about 1/10%. Dow Industrial is up over 200 points or 0.5%. NASDAQ lagging for the second day in a row, down 0.3%. And the Russell 2000, the small caps, leading to the upside once again, up 1.6% on interest rates going lower, helping support those small caps. Help me break down the market action. Let's bring in my co-host. That's Kevin Hinks. Kevin, it seems like the calm before the storm, before earnings really start to ramp up. And everybody's kind of taking a little bit of a breather after yesterday's losses, with the equity market still at or near all-time highs.
Earnings season starts with the banks, the financials, and the airlines. And, incredible movement out of some of these banks and airlines today. Morgan Stanley up big, United Airlines up 11.5%. That stock had already run incredibly. It was over September.
All right, looking good. We're back.
It was overbought yesterday. Well, it's up 11% today. That should tell you what you need to know about the RSI.
87.
Yeah, exactly. So, listen, these airlines, I thought some of the United news, here's what concerned me, that the market seems to be shrugging off. Capacity up 4%.
Yeah, 4.1% or something. Once I saw that
IWM coming out of a squeeze.
Initially, it went a little bit lower.
Yes.
But then has now rebounded.
220, 227. Wow. We're getting up there.
1.6% cost per available.
Okay, let me switch channels. These guys just.
It's just
concerns we have about commodity inflation.
Oklo continues to go. All right, so we had a dip. We had a dip right around the time that I decided to take my son to school. Not that I had a choice. Oklo continues to go. All right, this looks really good, Oklo. Oklo. This looks like this is just going to keep going here. Oklo.
Together, but I don't know which is the chicken and which is the egg.
Good luck figuring that out. Having traded, good luck figuring that out. Having been around the oil market for many, many years and lost a lot of money trying to figure that out along the way. I don't think there's
okay. Futures looking for a bounce. Little liquidity grab there. If you can see that inside of that red, you can see that liquidity grab, a little rectangle around that wick. All right, so. These were equal highs here. Still squeezing. I expect IWM to continue squeezing. Okay. Oklo. OKLO. That one continues. Oklo breaking out. Wow. Look at Oklo. Look at the volume. Look at the volume on that last candle. Oklo, look at the volume.
So I think there's a lot riding on what happens with the Fed's next move. Is it going to be a quarter point, 50? It won't be 50 or 0. And we're not in a recession, and so everyone's excited about lack of recession, soft landing, or expansion again. So to me, is there a change that happens on interest rates?
Here's why I'm nervous is the wrong word, Jenny, but I'll say this about rates. I posted it, and it's on my X, if anybody, Twitter, whatever, anybody wants to look it up from Monday. Deutsche Bank's very good economics team posted a chart, and it's wonky, 5-year inflation swaps, basically sort of the projection of inflation, and they spiked. And they're at the highest level now since March of 2023.
It's just one part of the stock market, wonky, WBI, wonky but interesting. Do you worry that, thank you, do you worry that we could see another surprise spike in inflation, which then thus changes what the Fed ultimately does?
Yes, I do. But I think, and I've been thinking about this a lot because I just wrote my quarterly letter, and this is where like the metal hit, whatever. I need to like put my money where my mouth is. That's it. So I do think that there's a really high chance that inflation picks up. I just don't think it's in the short term. And the reason being is because we're looking at, and no one's talking about them in a functional or prominent enough way yet, but like we're looking at seriously huge national debt levels. And whichever candidate wins, both of their policies spike them even higher than the course that they're on. And there's only one fallout from that. And the fallout from that is higher interest rates. Higher interest rates leads to higher inflation. So I spent last week at a really interesting economic conference, and the consensus of that was kind of like, yeah, inflation's coming down to 2.5%, but then, right? And I don't know if that but then is 12 months from now or 18 months from now, but at some point, these huge debt levels that we're running are going to catch up, and they suppress growth and they increase.
Tell him, Jenny.
And with that,
I like Jenny. She's a
and then what does the Fed do?
she's a
Market's pricing in at 21.5 times.
firecracker.
The market is pricing in full-on expectations.
She didn't take any shit from anybody. I like that. Humble, but yet she doesn't take any shit. You know, I like that. She knows her stuff. You know, very hard to get her sidetracked. All right, so watching markets look good.
Their numbers were spectacular, and the stock had a negative response. Why are we at 21.5 times? A, because that's incorporated, and B, because there's a lot of AI euphoria in that number. Any little bit that knocks that euphoria out shows multiple contraction.
Okay, Supermicro, and nice pop there, pulling back. Morgan Stanley been flagging. Okay, ABCD pattern up high. If you look at Morgan Stanley. Okay, Morgan Stanley. Okay, Morgan Stanley. You know, hard to chase this, obviously, but if you look at the intraday, you can see it ran up B and C pivots. It's probably going to keep going. Why? Because institutions don't look at this and say, oh, it's overbought. They don't have a problem buying high and selling higher. Okay, big multi-year base. Okay, big multi-year base breakout. Well, I'm not telling you that I think this is just going to keep ripping. That's pretty interesting. I find it very interesting. Morgan Stanley, great wealth management department. Lots of other good departments in Morgan Stanley. The point I'm trying to point out, the point I'm trying to bring up is that the banks look really good. JP Morgan has been flagging. JP Morgan is just sitting up here at the highs, consolidating. It could pull back in. These banks are probably, okay, JP Morgan looking pretty good. Looks like it wants to launch, right? Goldman Sachs is also good. Okay, good job there. JP Morgan, Goldman Sachs, Wells Fargo. All right, Goldman Sachs looks good. What about Wells Fargo? Wells Fargo's chasing it already. So, okay, Oklo continues. Wow, that thing's going to be 20 before you know it.
That's a tough one to say because the expectations keep going higher and higher as we're seeing with Netflix. So I do think that if they come in and miss the whisper number, yeah, you'll see that.
Okay. Yeah, Bitcoin. If you're trading Bitcoin, this looks fine. Oklo looks like it's going to go again. Fair value gaps. Look at the volume. Holy smokes. That volume is crazy. Two candles in a row. We got fair value gaps, price action pushing higher. I wish I knew who it was. Is it shorts covering still? Shorts putting, I can't imagine shorting this up at the highs. Looks like these stocks are going to roll over everybody. Nano Nuclear, what's that doing? Nano Nuclear. I have shares of Nano, but sold those into Strength. Okay, that's still going. I might buy it back on dips, Nano Nuclear. I only had 200 shares. I was going to double up. Decided to take profits into Strength and just focus on Oklo, which is doing really well. Micron sitting here at the highs.
I'm using that term in totality. Where we are today, four days into earnings season, you have to feel good about what we have heard so far from the financial sector. The financial sector is.
All right, let me look at Micron. I might want to take some profits off, even though I have December calls. Nah, I'll probably hang on to it. Okay, see if this can break towards 115. I have the 110, 115 call vertical. And I sold the 97, 92 put credit spread. That expires in a couple of weeks. Let me see what that looks like. To close this, let's see. Why is that doing that? Oh, okay, I see. Oh, okay. So I took that off. Never met a girl makes me feel the way that you do. You're all right. I was singing Rare Earth in the car on the way back. That came on.
So you've asked a couple of things. Is the market generally overvalued because it's 21.5 times next year's earnings? Yeah,
For you boomers, Rare Earth.
The market sells for 19. But, you know, I think this market has accepted the fact
Get ready, because here I come. Remember that song? Get ready. All right, so the markets can't seem to get through the highs. Maybe take a little profits off. You know, reduce your exposure.
The returns of the S&P depended on very few names. That has started to broaden. I think the number right now is it's 30.
Never met a girl that makes me feel the way you do. You're all right.
55% of the returns of the S&P, and the rest of the market is increasing.
I just want to celebrate. Yeah, yeah.
It has to continue, and we have to see
Another day of living.
Industrials, and it has to be retail, it has to be just on one thing.
I just want to celebrate. All right, looks good. Whew, these nuclear stocks, I think they're going to just keep going, you know. These meetings between energy companies and major AI players like Google, Amazon, Microsoft, Apple, I mean, that's just going to continue, I would think, right? So these meetings behind closed doors, you hear about it after, you know, they probably have agreements that they can't speak about it, so you don't get any leaks ahead of time. But it just seems like that's what they're going to keep doing. Let's see, Oklo. I mean, look at Oklo, for example. This is one Frano brought to our attention. I think it was at like 8, Frano, when you first mentioned it. Okay, so that's a double. All right, so I haven't had a double in a while on the shares.
We're basically going to go up another, say, 8 or 10%, and then the S&P is going to crash 25% from there next year. Lots here. I'm sure Stephen shockingly had some thoughts on this, but Jenny, kick it off. Your take on an, I don't want to say odd call, but it's a bold call.
Yeah.
It is a bold call, and I think it's absolutely plausible. And that goes back to exactly what we're talking about. And Carrie saying, yeah, it's kind of okay to pay these multiples. But if inflation is high,
wow, these things look really juiced to just keep going.
When inflation's high, they're going to pay.
All right, looks good. Looking good. Tell him, Jenny. I like Jenny.
As a 16% decline from this level, and that's plausible.
Where'd that expression ginger come from?
The geopolitical situation worsening and starting to actually impact
Instead of just redhead.
I look at it as a huge miss in earnings that knocks 5% out of the market. So there's risks like that. The reason I'm not sure it's actually plausible is because the strongest supports of the market remain intact, which is at this point.
Get ready, because here I come.
And at this point,
Get ready.
are still trending up. So even though
On my way. Okay, so Tesla turning the corner. Watch Tesla. Look at the TTM bars on Oklo. On the 5-minute, the volume. Okay, so that was a nice little move up into a premium zone. This is where you might expect to see some profit taking. Watching that TTM. The hourly chart looks strong. Big explosion over the last couple of days. Oklo. Momentum is clearly bullish now.
When that happens, it's because the catalyst isn't foreseeable.
Get ready, because here I come.
Surprise. So I'd
Get
say that,
ready.
yes, the market is, as I said before,
Do,
fairly
do,
valued.
do.
Some stocks are overvalued. But what do you do with that? Do you sell them when they're going to grow into their earnings? So maybe they're 6 months overvalued, but they're not years overvalued. So I'm staying in most of my positions as I have been.
Okay.
One thing you said earlier, which I just want to address, you said a bizarre 50 basis point rate cut. That was not bizarre.
Oklo.
I mean,
Apple just sitting here doing nothing. It's been in a range for about 8 weeks. Apple. Okay. Futures fading off the high of the day.
I've given you a freebie. How do you know I didn't mean BAZAAR? That it was like a marketplace of rate cuts, Weiss. I never spelled it. You make the point. That is how you think. You know, so plausible. Yes, I mean, after doing this as many years as we've all been doing this, anything is plausible. The question is actionable. What do you do with the information? How do you treat the information? Are you, if you accept the information and you say to yourself, okay, I follow along with the path higher and then a 26% plunge, am I tactically going to be able to execute efficiently enough to take advantage of that? Or,
Micron.
as a long-term investor, am I saying to myself, I need the capital, I need the cash right now, immediately, that I'm not...
Micron looking for a bounce. Micron.
A 26% decline, which, by the way, we've witnessed in the past, and history teaches us those 26%
Spy.
are an actual opportunity. So I think the question more than anything else is actionable. And if, you know, you're a Stifel financial advisor, you kind of read the notes.
Super Micro. Looking for another bounce on Super Micro. Catching a bid. Higher lows on Super Micro. It's above PMZ. Super Micro. Oklo looking for that to continue. We got some selling volume now. Histogram is still blue, light blue, cyan color. The hourly chart looks strong. Look at the volume on the hourly chart. Wow. I just want to celebrate another day of living. NVIDIA. Okay, Nano Nuclear. Okay, can it get going, Nano? Okay, what are we seeing here, Nano Nuclear? Is this a cup? Is this a cup pattern? No, this is not a cup pattern. Nano Nuclear, NNE. W-shaped pattern, starting to fill the right side of what looks like a cup. All right, so Nano Nuclear, let me do something here, Nano. We're at the highs, so I'm going to put a limit order in. If it dips, I'm going to buy some calls. If it dips down to 17, let me see what I can do here. January 25, let's see. 20. Buy a vertical. And currently 20, 2250. How about 20, 25? Is anybody at 25? Oh, let me look at the options and see if there's any volume there. Nano Nuclear.
Financial advisory companies in the United States. You don't just come out and make a call like this unless you run it through a lot of people. You know, he doesn't go out on TV and CNBC and be like, I think the market's going to fall 25% next year. And then all of his financial advisors run out
15.
because they just
22, 20, 15, 20. November. Okay, lots more volume on the 15 November nano nuclear. The 2025, there's a lot more. Okay. I'll put a limit order in. Let's see. 2025 nano nuclear for November 2025. It's currently a debit. If you take a vertical 2025, buy the 25, buy the 20, sell the 25. It's a $95, 95-cent credit debit, 95-cent debit for the 2025 for November 15th. I'm going to put a limit. Looks like it's going to keep going. Buyers keep showing up. Maybe I'll scale into it.
Our United Rentals position is up almost 1,000% from when we bought it. And so that's trading at 20-something times earnings versus the low teens when we bought it. Fiserv is rich.
It looks like it wants to go. Nano nuclear again. Okay. 2050 seems like the next level. It pulled back. RSI turning back up. RSI turning back up. Stochastics needs to turn. Volume today looks very strong. Okay, so
this potential up 10 and down 26% decline. It's about managing through it. And this is where Stifel's really smart. What Stifel's doing is they're managing their clients' expectations because they
I just want to celebrate. Yeah, yeah.
Needs, there's all sorts of stuff in those portfolios.
Okay, Super Micro looks like it wants to go higher begrudgingly.
The best way to do that is to psychologically prepare them for it. Because when it does go up 10 and down 16, that's not permanent.
By the way, isn't it kind of cool that little Stamford, Connecticut-based United Rentals has outperformed Amazon and most other big techs in the last 5 years? I mean, congrats, great call. I know you're up there, but it literally up 600% in 5 years, crushing almost all the Mag 7 except for NVIDIA. All right, Stephen, I want to get into a specific stock. On Monday, you talked to us about buying ASML. You referenced it earlier in the show. Somebody screwed up. They accidentally, I guess, posted their numbers, whatever it was yesterday or Monday, the stock fell.
Boy, that person is fired.
And what you're doing with it now.
You're fired.
So with ASML, I said on Monday that I started an initial position because I thought this was going to be the quarter that they finally got back to growth.
Okay, there goes nano nuclear. Oh shoot, there it goes. Micron. Okay, nano nuclear.
But this was like a murder suicide in reverse order. First, they screwed up by releasing it early, and then
the numbers weren't. Yeah, the numbers. People didn't like them. I don't want to say weren't good. That's editorial.
The numbers for the quarter are actually good, except the order book. Last quarter, the order book was about $5.5 billion. This quarter, it was less than half that. And then it was less than half their forecast also.
Clo.
That's the issue.
Nano nuclear breaking higher. Okay, nano nuclear breaking higher. NNE, new high of the day, breakout.
2 to 3 weeks after quarter closes, but you should have some sense of your business going forward, particularly in order book.
Okay.
Your sales force. So that to me is a cardinal sin. I don't think they're really in touch with the companies they should be. So look, I sold the
JB Hunt. Okay, so we got a different group leading on the NASDAQ 100 now. NVR, what do they do? Sounds like an energy company. NVR, or is that the? No, NVR is the home builder, right? NVR, Ryan Holmes. Yeah, Ryan Holmes. I love looking at NVR. NVR. We almost bought a property from Ryan Holmes in New Jersey before we left, right before COVID, like 2018, 2019. Look at this. NVR is trading at $9,900 per share.
Applied Materials, Lam Research, KLA Corp, Semi Equipment. Look, automotive and industrial chips are still struggling. Thank heavens for AI, because the demand in the semiconductor industry is related specifically to AI. Now, on the other side of this, do we continue to see clear delineation
between those that have exposure to AI and others. I think the jury is still out on that. We need to see a little bit of a price recovery in some of the areas that we universally hit yesterday. But that's what should unfold in the coming quarters, where you're acknowledging if the semi has the AI exposure, you want to pay the premium there. If they don't, automotive, industrial, not yet recovered.
If only there were enough energy generation ability to actually power all these data centers. Joe, it'd be a miracle. We're going to have 65,000 donkeys towing something to hopefully, or just have no power to homes, and we'll just power data centers. 25% of all Virginia's electricity.
The home builders are doing well. Home builders. Okay, Supermicro turning. There goes Nano Nuclear. About to run. Okay, looks like it wants to go. Nano Nuclear. No. We're waiting for someone else. Okay, there goes NVR. Oh, wow, $1,000 per share. This damn thing is just crazy. NVR. Almost bought a home from these guys. Townhome. Got tired of shoveling snow in New Jersey. This is up in Sparta, up in the northwest part of New Jersey. Nice area. Beautiful area. Away from the hubbub near where Mondo does all his work in Inglewood. And Eddie Murphy's. I don't know if Eddie Murphy still lives in that area, but Tesla looking for it to push higher. There goes Nano Nuclear.
Something like that. It gives you options, right? To maybe close a portion if you do multiple contracts or all of it ahead of expiration.
Okay, so FLR is a majority owner of SMR. FLR is a majority owner. Ooh, nice.
That's sitting at around $4.48, average range for a day. So it is on a relative basis, knowing that it's at the money, you're buying a little bit of delta, but it is within the realm of possibility for the stock to be able to range bound into those levels. But you also could take it off too.
Okay, so apparently Fluor Corp is a majority owner of SMR. SMR, as you know, these portable nuclear units, they're getting a lot of attention. Only about, 3 or 4 companies have actually talked about inking deals with energy companies. Microsoft was one of the first with Constellation Energy. Let's see what that looks like. Constellation Energy, still consolidating. I like the idea of trading these nuclear companies. They're smaller. They have more potential, it seems like. All right, so SMR. So apparently majority owned by Fluor. I can't confirm that. BWXT. Another one, BWXT. BWX Technologies. Let's see what that, BWXT. That's occasionally on the IBD 50. BWXT. Okay, so they report again on November 4th. BWX, look, I like when all 4 of these metrics are green. BWX supplies precision manufacturing components, services, commercial, nuclear power industry. Oh, cool. Lynchburg, Virginia, Ohio, Cambridge, Ontario, Babcock and Wilcox. Babcock and Wilcox. That's hard to say. Babcock and Wilcox. Say that 3 times fast. Lynchburg, Virginia. Okay, SMR is pulling back. So that's going to give you an opportunity if it does pull back right now. Okay. Okay, this is the time of day we're looking for B and C pivots. All right, so late A pivots, not a bad proposition. This is a defined area of the market trading at a premium. This is automatically calculated. You see the gray in the middle, that's equilibrium, and the green in the bottom, that's buying at a discount using ICT principles. This is automatically calculated. Neil, how's my favorite client? Quick question, Carl. Oklo. Morgan Stanley. Looks like a lot of stocks are showing potential B and C pivots setting up. Okay.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this. Gotta run, Carl.
NVIDIA is back up to the highs of the day, but not the highs yesterday. So we're looking for NVIDIA to continue. Okay, we're inside day right now. This could still move lower, okay? RSI got to stay above 50. MACD and stochastics need to turn back up. MACD is okay, flattening out. That's just looking at NVIDIA inside day. Buyers at the low of the day yesterday. Lots of flow noted yesterday into the lows. Okay, NVIDIA looks like it wants to go here. Watch NVIDIA. Okay. Other stocks look like they're starting B and C pivots, it looks like. I don't know. Last time we pulled Oklo, it didn't move very far before it took off to the upside again. Watch this red zone right there on the chart. If it gets above 1710, it should go. Doesn't show anything that's holding anything, the price action back yet on hourly on the right. Let me go to the daily. Oklo. Okay, so I'm looking at 1850, 19. Supply. Tesla going. Tesla's finally above 220, Frano. Tesla above 220 finally. Fluor is a great company. You've traded it. Okay, Fluor. Let me just check the numbers on Fluor. FLR. Fluor Cup. You hear them every once in a while. Okay, so here's Fluor. Okay, you know I love when all four of these are green. Revenue surprise, that's not a big deal, but you know, earnings 11.8%, steady grower. Revenue growth 7.3%. It beat us expectations, but missed the high estimate. Okay, so 85 cents reported. Estimate was 68 cents. They came back with 85 cents. That's a pretty nice beat, almost 20 cents. 17 cents. Engineering, procurement, construction, maintenance. Yeah, it makes a lot of sense for them to be into the area that's going to see the most growth over the next, I don't know, next 10 years, you think? Think about the internet. I know it's not the same thing as the internet. Okay, the internet was created a lot of efficiencies. Okay, computers obviously before the internet. Remember the 8086 processor? For those of you that are around long enough to remember cathode ray tubes and those orange monitors. Text 16, was it 16 megabytes or 16 kilobytes? What was memory back then? I think if you had 16 megabytes, you had a lot. 12-inch floppy disks, remember that? Had the first Apple computer at school. Loved programming basic and learning machine language back in the day. But then the internet came along, and then the cloud. Now it's AI. I think AI is a lot different. AI is a lot different. I mean, when you look at the presentation that Tesla gave, and that frickin' SpaceX, that super heavy booster that came back to Earth and landed in those chopsticks. I mean, it just blew my mind, and everybody else that was watching it. So AI, yeah. So they got to have energy. They have to have energy to do it. And these companies are right in the thick of it. I think, you know, when you think about Microsoft, I mean, when I first heard about Microsoft back in the day, it was trading at what, like $8 to $10, split adjusted Microsoft back in the late 80s. If you had bought 1,000 shares of Microsoft, some people did, you know, they're probably sitting on that might have been Cayman, actually. People like that had the money at the time. I was just starting my architecture career at that time. Yeah, so watching these AI companies, you can't, you know, you got to look beyond, 100 feet in front of you, you know? You got to look beyond right in front of you. These companies are more than likely going to go. So maybe your kids, you know, on the next dip, maybe you buy your kids a couple hundred shares of one of these companies, or, you know, from each of these companies. Maybe they keep going. I think they're going to keep going. That's just my opinion. Doesn't really matter. Nanonuclear looks like it wants to keep going. All right, shorts covering. Dinosaur, yeah, Cisco, yeah, back in the day. Remember, 1999, 2000, Cisco. When I see Cisco, 2000.com trading back then. Intel, Cisco, what was it? Oracle, 20-point moves intraday. .com. Made a lot of millionaires. College years, yeah. AI is like that rare earth serum. Get ready, because here I come.
All ahead of earnings tomorrow or results. We'll see how many earnings are in the earnings. Stephen, you trimmed your position ahead of the print. I know Joe's got a comment as well.
Yeah, and if you think Rio Tinto was exciting, you better buckle up right now.
I'm buckled
So,
up. Belly up or buckle up.
Netflix, this is just more right sizing of the position. So it's still one of my largest positions, still a core position. But regardless of the price, I intend to get down to that size. Remember, I supersized it after they had a dislocation because of an earnings miss.
Get ready. Yeah, Qualcomm. Yeah, Qualcomm was another. Qualcomm another. Yep.
It seems like every day we're left with that. We're seeing analysts raise the price target. The only one that has is actually Barry Bank.
Yeah, Sun Systems. You remember Cray Computer? And there was a period there where biotechs were going crazy. Gene therapy. What was the name of that company? CMSI, whatever. No, Celgene. Yeah, DNA. Yeah, that was a big deal. Yeah, this is, you know, imagine that. I just thought of this. I'm sure this has passed through your mind too. Imagine what AI.
So the reason we own Cisco, and we have this one in our discipline growth strategy, is because our thought is like all AI growth.
Imagine what it's going to do for DNA and genetics.
Cisco systems, right? And so we just saw
Celgene, that was it. Celgene, yeah. Remember that one? That was a crazy stock. Yeah, exactly. So think beyond.
So I think, you know, it's not a gangbusters, but it's just one of those companies.
Yeah, you got to think beyond the 5-minute chart. Think weekly, monthly.
It's not a shoot. It's not a moonshot.
You know, there goes Nanonuclear, NNE going. Oh, you're definitely going to have it, Angela. Angela, it's right now.
Kind of like a Cisco, kind of like a name that's been around for just a long time. Like, Terry, we don't, maybe, except for you, don't think about that much.
Yeah, well, it started to
AI.
So I'm happy to think about it now. There was a time that we didn't.
No, it's just getting started.
Into this company, it's mission critical software for the construction industry and design.
Yeah, computer-aided design, architecture, things like
I mean, if you just think about the energy aspect.
Software margins would be typically in the 40% range, and Autodesk is 35%. So they're under some pressure to start to improve those margins, which we think is beginning to happen. The construction industry is coming back.
and we see further upside, it really has been on a tear lately, which has been great for the shareholders, including Joe.
You got the activists in there. You can't dislike that, Joe.
No.
I like it, but the stock was struggling. It was struggling a bit. So I'm not saying much because the quarterly rebalance happens at the end of the month. We'll see what happens.
Now, quickly, Disney.
That's never quickly Disney.
No.
They're only getting started.
Otherwise, we're going to bleed over to the.
So you know how earlier I said we were thinking about trimming these positions that were up so much? Where would we put that money?
Yep, absolutely, absolutely. Yeah, there's a lot of hype. You know, people talk about AI. And the pundits are always saying, yeah, it's hype. Yeah, is it hype? Yeah, you know what? Microsoft, Google, Amazon, Nvidia, all these big companies that are spending tons of money.
I've got to give you this.
Like Meta.
Last 10 years, price performance for Disney up 13.9%. 10 years.
Per annum or just total?
Total.
That's terrible. It's all
Okay, but then
13.9%.
you make the argument, but then you make the argument.
I'm not making any arguments.
Okay, but I'm just saying
It's
I
a
want to
stat.
sell something
It's
that's
a stat. It's like saying Aaron Judge hit 50-something home runs.
okay, and I'm saying, and this is where you and I always argue. I'm like,
I don't
buy
argue.
low.
I never
No, on this we do. Where I say buy
I don't
low,
argue.
sell
You
high,
argue by yourself.
and you say buy
I'll
high,
argue
sell
with you,
higher.
Kenny.
So okay.
So you guys have been to my Thanksgiving, my family Thanksgiving.
So I'm just saying, like, I'd rather sell something that's up 1,000% and buy something that hasn't moved because that's my version of buying low and selling high.
Maybe Warren Buffett would call it a cigar butt.
I don't argue, so okay.
All right.
I can make you argue.
Let's not argue. There's no arguing.
What's the point?
Nvidia, Meta's going to be fine. Meta will give plenty of opportunities.
Coming up, today's big number: 1 trillion reasons why buybacks are booming. Bob Pisani, up with that. Next.
Let me see if I can find something real quick. Charlie Bolello. This guy is like, I want to stray away from saying genius, but Charlie Bolello is like on a different game, different level. Let's see. What do I have in my inbox here? Let's go here. Let's see. Charlie Bolello. Where are you, Charlie? I got a folder. I keep his, I subscribe to his emails, Charlie Bolello. Let's see. Where is it here? More Charlie Bolello. Let me just switch stations here for a sec. Okay, we got about 15 minutes left of a halftime report.
Straddle that Kevin mentioned, and then we're going to buy the strangle. We're going to buy the 77 put and buy the 81 call. So this is a short straddle, offsetting some of those risks by buying the strangle that's outside that short strike. $2 wide, collected them. We've got $1.55 credit. Kevin mentioned that's $45 in risk per spread, and that's above 81 or below 77. But your break even 77.45 on the downside.
7:29. What's July? No, it wasn't that far back, was it? Probably September.
You do need that slight, maybe 2.5% move to the downside to get
September 9th.
Profitability. But the break even on the upside is still only less than $1 below the current share price.
Yeah, the critique of this spread.
Bear with me 1 second. I'm just looking for something related to AI that Charlie Bolello put together that I think is very impactful. It's going to drive home the idea that obviously, I'm not telling you something you don't know. AI is going to be around for a while. Probably going to be life-changing for a lot of people, I would think. Just my opinion, but okay, a lot of CPI stuff here. Where did he do that?
On this type of strategy, but this is one of those where you might have some assignment risk also as you're short that same common strike on the call and put at the 79 level. What good look at? It's not a bearish trade. You just need maybe a little bit of consolidation. And remember,
a fundamental strategy with a little imagination.
Hey, Goose.
Into the fundamental strategy.
Yeah, And remember, Costco has started to consolidate after
Get
their
ready,
recent report.
'cause
Also,
here
a
I
good look
come.
at, slightly bearish.
Do I have any of these left or did I delete them? Let me see.
All right, Kev, let's take a quick break. When
Uh,
we come back, we're going to take a look at Taiwan Semi. Chip manufacturing stock is near all-time highs into their earnings report tomorrow morning. Stick around. We're coming right back.
oh, I have them right here. Oh shit, I didn't delete them. Okay, so here we go. Okay, this is Charlie Balillo's analysis. Okay, operating earnings. Let's see. Price to sales ratio. Did I delete them? I did delete them. Damn it. Oh, that's I don't need that. Delete that one. Delete this. All right, so I got excited there for no reason. Maybe this one. Oh yeah, this is one of them. Okay, so this is one. S&P, largest ones in the S&P 500 by net income, by market cap, by revenue. Apple keeps showing up in like the top 5 in most categories. Microsoft as well. Meta. Coming up the list, Meta. Okay, that's one of the charts, but what is this? No, that's money supply.
All your streaming devices.
Okay. Nanonuclear continues to rip here. All right, I'll find what I'm looking for and I'll talk about this later, but watch Nanonuclear. Nanonuclear on the move. Okay, Nanonuclear. Gone. Okay, looking good. Fair value gaps. Look at the volume coming in. Okay, these are doing really well. Let's see what else I can find here. Nanonuclear. Screenshots.
Welcome back to Fast Market here on the Schwab Network.
Dropbox.
Take a look at Taiwan Semi. Let's get a look at the overall markets. We're getting some strength here in some of the equities. The Nasdaq's still negative, but the S&P 500 now up 0.2%.
Screenshots. Let's see.
40 points. Nasdaq still down slightly, but we've got some green in both Tesla and Nvidia. Those are the only Mag 7 stocks that are actually positive today. But Nvidia bouncing off that 4%.
Okay, we got 12 minutes to go. Let me switch back to CNBC.
Seeing a deceleration. Or I want to see what happened. We don't have the Q3.
Look at Nanonuclear going. Okay, cool.
But the companies that I showed you there, they have been buyback monsters.
Wow, Nanonuclear is just ripping here. Holy crapola. Look at Nanonuclear ripping. Nanonuclear is ripping good. Wow.
Dramatically reducing its shares outstanding for a while now. So is Alphabet and Meta. So these companies really are actually adding to their earnings per share because they're reducing the share count. That's something you have to.
What happened?
Fascinating stuff. I love. I think it was
Nanonuclear.
Jenny that like a couple of months ago. And again, correct me if I'm wrong. Where the stock went down.
All right, so we're headed up to 19. We're going to run into some supply or not. Let's see. Can we break out? Today would be the day to break out with all this news, all these nuclear companies.
Maybe. One of the things I've been thinking about, and too, I need to say something fun. Jeff Rubin, Bob, when I interned for Laszlo Barini 100 years ago, Jeff was my boss. So that was kind of fun. But as we're talking about this and on your comments on Apple, one of the things that I keep thinking about is why do cryptocurrencies, specifically Bitcoin, like why do they?
Okay, I'm going to take some profits off into strength for Nano. I have calls, not shares. Okay.
Decreasing the supply, and how much of the market levels that we're seeing is actually because of these huge buybacks, and that kind of creates a put, not just on Apple, but on the overall market. If the supply of stocks is being reduced, the supply of shares outstanding is being reduced, does that actually?
See a big IPO cycle.
Yeah, but we haven't for decades.
That's right.
And the truth is, we have half the number of public companies that we did 4 years ago.
Yeah, and but by the way, to Stephen's point, yesterday, Scott.
Very nice. Ooh, I got to pay the government today. I just realized that. Let me pay the government. They want their money. Quarterly. All right, so IRS, Gov.
I think the animal spirits are back. So at least Bowley might agree with the point you made.
Pay.
We will see an increase in deals or IPOs or whatever it is.
Bankers have bigger pipelines ready to go now than they have ever had.
Yep.
So
The big one's
we'll see.
OpenAI. We will see. All right, halftime. Right back after this.
No, I want to pay. I want to pay. Reason. Quarterly. Okay, nanonuclear going vertical. All right, nice job, folks. Where is it? There it is. Okay, pay this amount. All right, just bear with me a second. I forgot I had to pay the government my quarterly today. All right, so don't want any. Penalties, can't have that. Okay. Yeah, that helps. That helps. All right, let me just grab this. Oh, yeah.
We got a boogie. Blackstone, Kerry, that's all the time I have words for. What do we got?
Okay, I have 30 seconds. The stock is up this year. It's below that in the market. We'll start to see realizations next year. That's going to help the company that then very, very few private equity will benefit.
Perfect. Great. Final trades. They're next.
The IRS is funny. I'm just laughing at. Do you give us permission to take money out of your business checking account? Like I can do anything about it. If you don't pay your taxes, it can seize your account. And I don't know if anybody's ever had that happen, but I did when I was in college. One time, I just didn't file taxes. I thought, they're not going to catch me. They caught me. You can't shortchange the government. They don't like that. I took all the cash out of my account. Do you give us permission to take the money out of your account? Uh-huh. That just brings back memories. Oh, boy. Okay, we got a nice little move here in the markets. All right, so futures making new highs. All right, so they're going to test. They're going to test that upper range. It looks like the this iron condor. So hopefully you're paying attention. Maybe you wrote this down. The call 58.45. 58.45 is the call. The short strike 58.45. Okay, we got about 15 points to go there. If they run this through this trader is going to lose $2 million per point. So you might want to try that play. You might want to try it. S&P 58.45 going once today. 16th. Okay, 58.45. 58.45. Maybe I'll buy a couple of these just for the shits and giggles. $58.45. 55. 58.45. 58.55. S&P looking good. Futures just took out some stops overhead, most likely. I don't know. I don't know why I find that funny. It just, I don't know. The government with a sense of humor. Do give us permission to take it out of your account. Click here. That's hilarious. That made my day. Okay. All right. Watching that, those short strikes. Okay. S&P. Okay. Let's see. Gamma. All right, S&P looking good. S&P. Okay, let me zoom out here. Didn't I mark this up on the chart? Yeah, I did. Okay, so all right, let me go to the 15 minutes so I can get more. Look at this. S&P. Okay, can we rip here? S&P. There we're going. We're going. Oh boy. Oh boy. We did this yesterday on the short on the put side, short strike.
We are back with final trades. Stephen Weiss.
TransDigm, look, we saw United's report, and the aftermarket is still very robust for aerospace.
Jenny, what the heck is Easterly Government?
Yeah, they own government office properties. And
Yeah, Easterly, I've heard of them before. I've traded them. Why would you invest in government properties? Because they pay the rent. They pay the rent on time. Yep.
Energy sector is struggling over the last 5 days, but the pipelines are performing well. That's called relative outperformance. ONEOK is the name to own.
There we go. Final trade time. I love it. Thanks for taking it easy on me. By the way, I will see all of you on Fast Money at 5 p.m. The exchange starts now.
Ryan, thank you very much, and welcome to the exchange. I'm Tyler Matheson, in today for Kelly Evans, and here's what's ahead. The Mag 7 domination is not over, says one of our guests, as the group gets ready to start reporting next week. He sees an unusual opportunity in that trade, and one name in particular, and he is here to make his case. Plus, buy now, pay later giant Affirm up 65% in the past 2 months.
Yeah, Firm, that's a good one too if you guys are trading it. I don't have a position, but some of you do. Look at the S&P 5-minute, 15-minute. These are all cyan bars. You see where it turned? Okay, looking for a follow through. Looking for this to continue higher. Apple's turning the corner. Apple turning back up.
Those markets are now at the highs of the session, Tyler. To give you an idea of what's going on, we had some marginal losses early on in the day, but we are currently now up 265 points for the Dow. It's a 2/3 of 1% gain, 43,005. So above that 43,000 mark again. 5832 is the level for the broader S&P 500. It's up 17 points. This is the session high at this point. We were actually down roughly 7 points at the low. So again, swinging back towards the momentum levels in the middle of the day trading. The NASDAQ Composite tech-heavier index is underperforming on the day, only up about 0.1%. It's 21 points to the composite.
All right,
18,337. A couple of things to keep a close eye on. We are seeing a record high in one key part of the market, and that is with regard to transportation stocks. Now, it is not the Dow Jones Transportation Average, which is the price-weighted index of those 20 stocks in the Dow Transports. However, the iShares Dow Jones Transports ETF, which tracks another measure of transportation stocks.
Okay, OKLO pulling back a little bit. Nanonuclear going vertical. Okay.
One of the biggest contributors to that trade so far this year has been the biggest weighting in this ETF, which is Uber on the rideshare side of things. So keep that in mind. And speaking of transports, one of the big
Tesla still diddly daddling with this 220 level.
P500 is currently up 11.5% on the back of the earnings report that was better than expected. Also, the announcement of a $1.5 billion share buyback program that has United Airlines flying high. Morgan Stanley, the other big earnings headliner, is up about 7% so far today after better than expected results. A big surge in investment banking revenues there. They close out the big bank season with a bang here. So Morgan Stanley, UAL, two of the best performers in the S&P tie. I'll send things back over to you.
All right, now I'm seeing a little bit. Thanks very much. Big banks in the books in terms of earnings, but that means earnings season is just getting started, and that's where we get started.
Let's get it started. All right, S&P, can we get this to rip or what? Futures still pushing higher.
And a CNBC contributor. Steve, good to see you. We'll get back to you in a second. First up, Taiwan Semiconductor shares are nearly flat right now, heading into the print, but up 80% so far this year. They're also a street favorite. No sells, one hold, 43 buys. Seema Modi is here with what to watch ahead of the results. Seema.
Tyler, Taiwan Semiconductor manufactures 90% of the world's cutting-edge chips, seen as a bellwether for the entire semiconductor sector and a barometer of CapEx spend on artificial intelligence. NVIDIA, AMD, the hyperscalers like Amazon, even Intel all depend on TSMC to build their AI chips. If anything were to disrupt Taiwan Semi's production, the backup options are very limited at this time. Last quarter, its CEO hinted at supply constraints. Investors will now want to know if inventory remains tight and the impact that could have on chip production.
SMR. Okay, all of these are. Okay, wow. Microsoft inside of PMZ right now. Microsoft inside of PMZ. pre-market zone.
Trump win would be a negative for the company following recent remarks.
Okay, we could get something going here. Maybe. Maybe, baby. Maybe, baby. Maybe, baby. Super micro. Come on, micro. Just sitting here. Nvidia making new highs. Nvidia making new highs. We still got a ways to go to get to yesterday's high or the high of the week for that matter. Monday, we had a nice pop. We had a pullback to breakout yesterday. Nvidia. Okay, cyan bars are showing up again on TTM. That looks good. Looks good. Looking good. Okay, Nvidia.
You have, as Seema just said, geopolitical risk, trying to diversify to Arizona, Germany, Japan, different areas, but still above 80% of their manufacturing is in Taiwan. Then you have to think of this. So ASML, they talked about a negative outlook for net bookings. That's all of
Nvidia's about to go. I'm going to buy some calls closer to today, maybe a week or two out. It looks like Nvidia wants to go. Nvidia has earnings the 27th, I believe. Nvidia. Nvidia. Okay, 135. Nvidia. 135. Vertical. Nvidia 135. 140.
Taiwan's gain is because Taiwan is in Taiwan and Taiwan is under pressure.
Nvidia.
Yeah, well, if you look at it from a revenue base, Taiwan Semi's revenue, their portion of revenue that they get from Nvidia is, I think, roughly 11%. So there are other, and then if you go AMD, that's probably around 5%.
Nanonuclear peaking out right now.
Percentage of their revenue that they get from those two chip companies.
Nanonuclear.
Noise from the other companies, but I do believe if I had to assess this,
Okay, NBR.
there's probably a 30% correction from the geopolitical.
Oh, I'm looking at the Russell 2000. No wonder. No wonder. This doesn't look right. I knew that didn't look right. Okay, let me go to the NASDAQ 100. What I usually follow. NASDAQ. Okay, the top of the NASDAQ 100 is booking.com. Booking.yeah. Okay, NVIDIA is number 8. NVIDIA is climbing the list. Micron's number 7. Lulu is number 4. Constellation Energy is number 3. Constellation looks good. It's just, I don't know. I don't feel like buying a really expensive stock. Not super expensive, but more than Nanonuclear and SMR. I'm going to buy some SMR on the dip if I get a BNC pivot. Morgan Stanley going to give you a BNC pivot. Microsoft turning the corner. Let's see what Microsoft looks like. Microsoft on the dip. Just get in the habit of buying dips and not the rip. Okay, we are near the high of the day. Oh, we gapped down today. Okay, I don't want to buy Microsoft right now, though. Microsoft, NVIDIA. Okay, higher low. Looking for a bullish bias into tomorrow. Micron just hanging in there. Lulu. Nice follow through Lulu. Constellation Energy. Booking.com. I know Russell likes to trade Booking. Roper Industries. Old Dominion Freight. Okay. Marvell. Marvell looks very strong today. T-Mobile. Diamondback Energy with the bounce. CrowdStrike had faded the last few days. CrowdStrike. Let's see what that looks like. I might want to buy some CrowdStrike, CRWD, for a short-term swing. Okay, it's sitting right at the 200-day. You got the pullback. Okay, stop underneath that wick. CrowdStrike probably continues along with, let's see what the other ones are doing. Palo Alto. Okay, still dipping a little bit. Zscaler. Okay, still dipping. Fortinet, FTNT. Sentinel-1. Okay, they're all bouncing. I don't know. I'll pass on this. I was thinking about CrowdStrike. Looks pretty good though. CrowdStrike. Maybe the rest follow CrowdStrike. CyberArk. Okay, that one faded. All right, so looking at what is actually working today, survey says Cisco, as Frano mentioned, the dinosaurs are actually working now. Look at that. Triple top. People will be looking at triple top. NVIDIA. People looking at NVIDIA also mentioned a potential double top. Jason was having a good time with that earlier.
And I think that they were late. But if it does roll over, all of these stocks will trade with the overall market and the economy, and they will roll over. But all of them are quality companies that have a past history of performing well for the investor.
All right, Steve, thanks very much. Great to see you, my friend.
Likewise.
Steve Grasser.
Looking good.
Under pressure the last 3 months as investors shift from growth to value a little bit. But our next guest believes that the Mag 7's dominance may not be over just yet, and he is especially bullish on Google, which he says is the cheapest it's ever been compared to
NVIDIA still pushing.
He's Chris Grisanti, Chief Market Strategist at MAI Capital Management. Chris, good to see you. Take us through your thesis on Google here. It has not been the superstar of the Mag 7, but it hasn't been the real turkey either. I guess Tesla has that.
Sure. Well, Tyler, it's good to be with you again. And I hate coming on here and recommending Google because I'm a value guy. And plus, what value do you have by recommending Google? Well, I'll tell you, if a value guy likes it, maybe somebody ought to pay attention because it's trading at its cheapest multiple relative to the S&P in its entire history. So let's pull the camera back. I think the economy is actually not just in decent shape, but in really good shape. The first spate of earnings that we've just received from the financial companies, they're terrific. And when you guys are talking about United Airlines today, not only is it up 11%, we got an airline buying back over $1 billion worth of stock. I can't remember last time that's happened. So the economic indicators seem really strong to me. At the same time, in a month, we'll have the election behind us, and that's going to be a positive no matter who wins. So if I think the economy is going to continue well, where are the strongest earnings going to come from? They're going to come from these technology and communication stocks. As a value guy, I'm sorry to say that, but it's true. So which ones are lagging? Google is lagging. It's got a terrific, almost monopolistic position. Don't tell the FTC I'm saying that. And they have Waymo that you get for free, and it's selling at 17 times next year's number. I think it's a no-brainer.
So I guess the question would be, it's trading, as you say, rather more like a value stock than like a stock. It is at historically the lowest multiple it's been relative to the S&P 500. But does it deserve to be? In part because of what you just mentioned, one of which is the antitrust worries that this company may face.
Sure. I got to tell you, I'm old enough to remember owning Microsoft in the late 90s when
There you go.
under the antitrust scrutiny. By the way, that stock tripled during the duration, 6-year duration of that antitrust case. So don't let that dissuade you from an otherwise really good investment. Of course, do the math yourself. But I think this is a great chance to buy a stream of earnings that are pretty reliable at a really attractive price.
Do you think that Google's primacy as the king of search is as secured as it has been over the past decade and a half? Or either through government action or just market action, others may come and creep up and nibble away at that moat?
That's a terrific question because you're asking exactly.
All right. CrowdStrike is looking pretty strong, I will say. I'm watching that one. Morgan Stanley giving you a BNC pivot opportunity. I'm probably going to wait a couple of days for these big banks. Goldman Sachs gave you an opportunity today. Goldman Sachs being pointed out by several in the trading room, but it's fading. I think we could see a pullback. Better entry would be a pullback to the 90 MA that gets bought. Okay. Let's see. JP Morgan consolidating the past couple of days. That looks okay. Could fade to the 90 MA or the 90 MA catches up. Watching the volume with keen interest. Wells Fargo. Look at the volume on Wells Fargo compared to JP Morgan. Look at the volume there. Red and green, lots of red and green. Look at Wells Fargo. Not even close. Okay, so that one's gone. 64. It's up another 1% today. Wow. It's up 10%. 10% since Thursday. Last week, it gapped up on Friday. Wells Fargo. PNC Bank, PNC. Looks okay. What about some of the regionals like Ozark? KRE is not a bad idea. If you want to trade banks, do the KRE. Again, I would wait for a little dip first. This is run for 4 days straight. And it's 4 days along the upper Bollinger Bands. Generally, you see that pull back a little bit. Lower band says no, not yet. When that lower band is moving away from price and the upper band's moving with price and it explodes like a trumpet, like the horn end of a trumpet, okay? That's telling you look for a fast move, okay? RSI is still rising. So these look pretty good still, okay? I just like buying dips. Oh, Nano Nuclear looks like it wants to keep going. Yesterday I mentioned one down day, and I caught some flack for that. But look where NVIDIA is now, continues to push NVIDIA. There was a big trade on NVIDIA yesterday, not just NVDL, but NVIDIA. Okay. Okay, Nano Nuclear. Okay, so double top on NVIDIA. Lots of people talking double top. Okay, so, indicators are a bit overbought. RSI is still showing strength of trend. Let's go to the triple MACD. Let's see what that looks like. Triple. This takes all three time frames, MACD, short time frame, normal or intermediate time frame, and a long time frame. It gives you one chart. Okay, so this is need to see that short term in MACD turn up, medium and long term are up and to the right. Okay, looks good. 50 days below 921, price above the 921.50 and 200-day moving averages looks good. Okay. After yesterday's drubbing, it was nice to get a little relief rally today.
You know, like many kinds of, you're right. In general, we have been
I'm looking for a dip to buy some of these nuclear companies like SMR. It's not dipping too much. Looks good.
fell off very sharply here. We did find a bit of a foothold near a purple 252-day exponential moving average here. So that's why it can be useful to include moving averages and so forth on your charts. They can be supported.
Micron grinding a bit higher. Bitcoin looks good on the weekly. Maybe we'll get Bitcoin to participate in the next few days. That'd be nice. Nvidia just grinding along. Fair value gaps along the way.
Shorter term moving averages, yellow 21-day, orange 63-day, and once again the yellow was supportive during our last downswing. Now we have been rallying to the upside. We crossed above this green line here that represents the post-gap down high point, the repeated stopping point for price here.
Okay, Microsoft pulling back a little bit from resistance. Okay.
Not only the previous highs, but also this
Apple trying to make higher highs, higher lows. Apple. Nvidia at the high of the day.
We couldn't quite crack that previous high that we established here near 193. We formed a bearish engulfing candle yesterday where the red candle completely swallowed up the previous day's smaller green candle here. Not a lot of follow through to the downside today though, which is a crucial part of that bearish engulfing candle setup here. So we remain close to the highs. We saw heavy volume yesterday, a volume spike, but not a ton of net movement so far here, still comfortably near those highs, Jenny.
Yeah, about 3% off of highs, which hey, it's not too bad, especially when you're talking some of these big tech names. So considering they did have some pressure on their last earnings, I mean, they have seen a bit of
Nvidia.
a reaction to their earnings reports this year. And I know because I follow the same closely. I think this is actually one of the most interesting of the AI worlds. But momentum of this trend now, what is RSI showing you?
More geared toward the upside here. But there is a bit of a question mark, I would say, because we do have this longer term downward sloping red line here starting back here and connecting to the subsequent highs. You can see that we have stayed more or less within the boundaries of that trend line here. Now, what we don't want to see if we're bullish is the disparity between the closing prices.
Nano Nuclear holding on to the highs. What is Trump Media doing? DJT. DJT.
Lower there. So that's what we call bearish divergence, a mismatch between price and momentum here. However,
Booking.com is still the number one stock on the NASDAQ 100. It did dip. BNC pivots is what I'm looking for. Mercado Libre, BNC pivots forming. Lulu, Micron, Nvidia, Roper, Old Dominion Freight, BNC pivots. Markets feel a little tired right now. CrowdStrike holding up fairly well. FANG, timing back. Oklo dipped. Oklo looked like it dipped and wants to go again. Oklo. OKLO. Okay, so TTM histogram is fading a bit. Oklo on this dip. So we'd like to time it. If we're going to get in BNC pivots, we want to see Oklo.
So for our purposes here, 194, 195.
TTM agree with price. Okay, right now Nvidia looking very strong. Nvidia.
Really stands out very clearly here. However, when we look a little bit more closely here, there's two questions we need to ask is, are there any other near-term sources of resistance? And if we do break above those highs, where do we go from there? So linear regression line, and from that, the standard deviation channels that we create from that line can help us answer that. So we have our solid blue line right here, our idea of fair value, our line of best fit based on closing prices, comes in near 190. So that's where we have not really been able to make our way above yet. That would be a crucial stepping stone on the path to those highs. Beyond that, if we were to keep moving higher, 221 is our +1 standard deviation channel, one standard deviation to the upside from our linear regression line. To the downside, yellow 21-day exponential moving average is right on top of our white short-term trend line that began with our notable low point there at our 252-day EMA. So right around 182 would be another key area here. And then our green line, our repeated resistance point that could become supportive.
Got the office windows open if that's
175.
Yeah, so it really
gardener
interesting. I have to say, I know that
is
Gardener,
bothersome.
well, that's where it's backdated because it's the previous quarter now at this point. But there's two different ways to look at it because when you see a name like ASML, which I cannot believe how many times we've talked about this company this week, but when you see a company like that that says they could see some more muted expectations going forward, that could also impact a name like Taiwan, considering their relationship. But then NVIDIA at the same time says they have like insane demand were their words. So that could also benefit Taiwan. So I think it's really interesting way into earnings. So walk us through now how you think about trading this name, of course, for example purposes only, given the fact that I do think that the conviction is still very much in the bullish camp.
Okay, so two thoughts that I would have on setting up an example trade. One is that we're near the highs. We're just a stone's throw away from that high point there. Two, it's hard for me to imagine a scenario where we use less computer chips going
Where-
forward. I just can't really see that line of thinking in general here. Maybe some chips are better than others, of course. You know, like, but there's obviously differences between the products here. But in general, it seems like the demand's just going to keep going up here. So for this example trade, we set our sights on that high point here, and we thought about a call calendar type trade here. So +1. November 1st, October 18th, 195 strike call calendar at a $2 debit here. So we've got a short call at our October 18th strike, a long call at our November 1st strike at the same price there, strike price there. Break evens come in near 181 and 212. You can see our shaded area. That was the expected move here. Comes within the peak point. That would be our next profit area. Were we to leave this spread as a single unit here, but there's other ways you can do this here. You could just use that short option to defray the cost of buying that long option. You could, if it is going in your favor, you could get rid of the short option, then just keep the longer dated long option, or just keep the whole thing together for added safety, or if it's not going exactly how you want it to go here. But as our friend Alex Coffey says, highly customizable type of trade. You can kind of set up to your own parameters here. But the thinking is we would get some kind of push beyond, or at least
NVIDIA's still going. NVIDIA looking good. Looking good. Ba-da-bum, ba-da-bum.
This week, but again, still a name that's up over 80% this year. So it's
NVIDIA ripping here. Looking good. Go NVIDIA. Go NVIDIA.
So we were able to actually knock off a good bit of that debit that we paid for the long option.
okay, and that's a great point because right now anything with earnings, I feel like you're looking at a premium. So I think a great way to put that there. But now to look at Cisco and a name that I talk to Taiwan frankly a lot more. I'm not as familiar with Cisco, and I think it's because the hardware space is not
Okay.
exciting this year. But to your point,
Nice follow through.
computers. I mean, I do believe that I do use Cisco systems every day still. So that's not going away anytime soon.
It's hard to work in an office and not come across Cisco products. You know, it's just so pervasive everywhere throughout, the office environment in general here. So definitely I can see that line of thought here. So when we look at this chart here, it's actually kind of a similar short-term read on our last chart here, but maybe perhaps
NVIDIA. Yeah, that's what I'm looking at. Money Magic. Thank you.
we were in a bit of a slide for quite a while here on the year, but when we did bottom out at this low point near 44.50, we have just taken off with some serious strength here. We're up about 25.5% from that point, moving comfortably into those 52-week highs. Just really breaking above any previous boundaries that we had set on this chart here that we're just looking at the past year. So you can see this is kind of the downward sloping trend line, our blue line there that we have moved very convincingly above at this point. We've crossed above all our moving averages where everything's trending upward here. Things are looking pretty decent here in terms of this shorter term trend.
Okay, and correct me if I'm wrong. This is one of these names where we're obviously at 52-week highs today, but I believe their all-time high was back in like the 2000s.
Yeah, we're not near the all-time highs. It's not even like multi-year highs really, but just the past 52 weeks. I would have to check the longer chart specifically.
I took like max time frame and I couldn't even read what year it was. It was so long, so I think it was
quite some time ago, which I just thought was kind of amazing here, given the fact that we've seen a pretty nice run since hitting actually lows now. So now when we look at momentum.
Okay, watching. Still looking for B&C pivots.
I believe. So what do you see as far as our side?
So kind of a
Cisco they're looking at. Okay, I'll pass on that. I'm not really interested in Cisco. Okay, Nano Nuclear looks like it wants to go some more. Yikes. Nano Nuclear looks like it wants to go some more.
James, what do we know about what Vice President Harris might impose or lift in terms of tariffs if she becomes president?
Well, she's been clear that she would keep the Biden tariffs. There's no plan to negotiate those away with China. And actually, in the context of the renegotiation or the review of USMCA, the Biden administration has expressed great concern about transshipment of products from third countries, whether it's Southeast Asia for solar cells or whether it's Chinese steel, even as President Trump has suggested, Chinese electric vehicles from Mexico. And by the way, Trump suggested a 2,000% tariff in the case of those. So Harris will not be dismantling the Biden tariff apparatus and should be looking for new types of tariff authority, like a component tariff that would allow USTR to tax finished goods from a place like Mexico that would not normally be subject to tariff if they do include things like Chinese legacy chips. Also, something that would allow the U.S. government to tariff goods made by Chinese manufacturers who happen to be located in Mexico or some other country, be an FTA or an MFN country, normally entitled to access the U.S. with minimal
Final
tariffs.
question, James, if I might. Over the last generation, over the last 40 years, the prevailing sort of intellectual thinking has been towards free trade, low tariffs, and so forth. If that is changing, what would it do to the level of economic growth globally if we go from a low or no tariff regime to a much higher and much more competitive tariff regime? Would economies grow faster or slower?
Well, first, I'd like to point out that most other trading partners in the U.S. have what's called a border adjustable trading regime. They tax goods coming in and they rebate goods going out. That would make a lot of sense in the U.S., and I'm not completely given up hope that the Trump administration might do that. That's something Paul Ryan considered. Maybe the administration might go back to that destination-based cash flow tax, which I think would integrate the U.S. better into the world trading system than simply going all out for tariffs. But as far as tariffs go, we've seen this movie before. The Tariff Act of 1930, which Trump references, has another name, the Smoot-Hawley Tariff Bill. And so there's no need to do a science experiment. We can go back and look at the data. Rising tariffs increase costs, they increase inefficiency, they make supply chains less flexible. And if the entire world starts raising tariffs, you can see that the effects will just concatenate. It'll be something that probably
All right, looking good.
for a long time in the U.S. And for that reason, I doubt that Congress would go along with keeping such tariffs in place for a long time, perhaps not even at all.
James Lucier and Tobin Marcus, we appreciate your perspective today. Thank you very much. Meantime, Scott Cohn crunches the data for CNBC's annual Top States for Business and has a look now at how climates have changed in several key battleground states, business climates that is, over the past 4 years. He's in Arizona now, a key battleground state. Hey, Scott. Hey, Tyler. Yeah, most of the swing states have improved their business climate in the Biden-Harris years, but there's a lot of nuance in there. Arizona has definitely improved. It is now 12th in our Top States for Business ranking for 2024 versus 20th at the start of the pandemic in 2019. And behind me is a big reason why. This is the TSMC semiconductor manufacturing complex. Of course, it was announced in 2020, but has been supercharged with the CHIPS and Science Act. Arizona now has the 5th best economy in the nation. That compares to 12th back in 2019, according to our rankings. It has the 6th best workforce. That is a decline, though, and it's an issue here, particularly at TSMC, where they've had to delay the start of production because of worker shortages. It also has the 2nd best infrastructure, which was super important this year.
And really, they have the power grid that can handle all of this development, even in the Arizona heat. But this state does still have some serious issues that keep it from becoming a contender overall. Ranks 47th for education, which is exactly where it was 4 years ago. Consistently bad with large classes and with low spending. The cost of living is rising, even compared to other states. And with poor health care, even poorer air quality, and a 15-week abortion ban, Arizona finishes 41st for quality of life. We have been looking at all of the swing states through our top states for business lens. 5 of the 7 top states have improved their top states ranking overall in the Biden-Harris years. Arizona, Georgia, Michigan, which is now in the top 10, North Carolina, a 2-time top state, and Pennsylvania. 2 swing states declined. Nevada, which dropped in some key categories, including infrastructure and business friendliness, and Wisconsin, which saw a big drop in education. We put all of these snapshots on our website, topstates.cnbc.com, where you can also see, Tyler, where your state ranks.
All right, Scott, thank you. Very good to see you. Scott Cohn. But coming up, the 30-year fixed rate mortgage sitting at 6.6%, and that kept buyers on the sidelines last week, with demand for mortgages dropping 17%. But rates are just one factor that's got one niche housing market near implosion. We've got that story.
Okay. Supermicro going. Watch Supermicro here for those of you who just bought Supermicro. So what do you guys think about Cayman coming on, sharing his thoughts in a PG, it'll be a PG interview. Maybe we do a PG interview, maybe not even an interview, just chatting intraday, talking about the markets. That'd be kind of cool, right? And maybe we get Mondo on. If you're interested in calling in during the day, and chatting about the markets during lunchtime when we normally get a lull in the markets, BNC pivots. If you're interested, I'm more than happy to entertain conversations during the trading day, after I get back from dropping my son off, of course, after about noon. There's many of you that have great ideas, and watching your trading is I think would be very helpful. Just talk about your style. What are you looking at? Why are you looking at what you're looking at, and so on. Yeah, so that'd be cool. I was just talking to Cayman. He's interested in maybe do a little chat intraday at some point in the future. Yeah, exactly. Okay, NVIDIA's still going, looking very strong. Nano Nuclear looks like it wants to keep going. 2050, let's see. Let's take another look. NVIDIA still going.
Welcome back to the exchange. I'm Contessa Brewer with your CNBC News update. In a report released today by the National Threat Assessment Center, the Secret Service made recommendations to stop mass shootings, calling on local law enforcement nationwide to add behavioral assessment units and to gather information and manage potentially violent situations before they become a reality. The man who was arrested near former President Trump's Coachella rally in California with 2 loaded guns over the weekend is suing for defamation. In the lawsuit, Ben Miller alleges the Riverside County Sheriff made preposterous claims about the incident possibly being an assassination attempt. Miller says he's a Trump supporter and was never planning on harming the former president. Uber and Lyft announced discounted
Freaking media, man. They're just so sickening, you know? Fucking media. I hate that. I hate the media when we have to live with them. We have to live with them, unfortunately. But man, I absolutely, I don't use the word hate too often, but I hate the media. You know, they're not doing anything to help you. That's for damn sure. You know, they're just trying to sell you on advertising, whatever. I don't know. I don't know. Watching NVIDIA starting to show a little signs of profit taking. Note the upper band is starting to turn a little bit. Watching the histogram, that'll be one of the first indications. We'll see that turn dark blue if the momentum starts to shift a little bit. Please excuse the gardener outside, neighbor next door. My office is right over the garage. Pretty big office, a little over 800 square feet. Big, 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 big. I only use about half of it. Anyway, just watching BNC pivots. OKLO looks like it's not going to stop here. OKLO, OCLO. Maybe I'll buy some not way out of the money, out in time. Maybe some January 25. January 25. I'm looking at OCLO, OKLO. I'm looking at the January 1750. A little bit out of the money. Let me see what the deltas are on this one. OCLO, OKLO. Let me look at the OKLO. January. Let's see what the deltas are here. Delta. By the way, I know when I first started using Thinkorswim, I hated it because I was used to Street Smart. A few months later, I can't even remember how. I think August was when they cut us off. August, September, October. So 2 months. 2 months. I like it. I like Thinkorswim. Now that I'm used to using it, it's just a little cumbersome at points where I have to like move from one idea to the next. I have to like change things. But yeah, I like it. Like looking at Delta, I'd rather have Delta right next to price action, right next to Gamma, right next to the volume and everything else. Implied volatility. Okay, so implied volatility on these January calls are 124%. So it's starting to get to an area where you want to start selling premium. Supermicro turning. Watch Supermicro. That's on the move. I'm still of the mindset that I want to take profits off in the strength. Let me take a look at the S&P now. We know what the New York Stock Exchange looks like. All right. So when you're in doubt of what the markets are going to do or might do, you want to take a look at the New York Stock Exchange. Okay. One down day. I said this yesterday. One down day after, a few days up in the market, people got all crazy. SMH showing signs of maybe some money coming in. Still, it looks a little bearish. Actually, it looks a lot bearish. So you have to take your pick. If you're going to trade anything, I'd be trading NVIDIA or Taiwan Semiconductor. The ones that really matter, where all the money is flowing. Anyway, okay, hello. Let me look at the deltas here. Okay, hello. 57 delta and a 50 delta. So
help them get access to responsible credit to make sure their Christmas checklists are fully filled in.
So responsible credit is really the key phrase there. So that leads to the next question, which is, are those
NVIDIA still going? NVIDIA
under buy now, pay later. How much is that changing for better or worse?
I think we've become known, and some of those upgrades really speak to the fact that we've been able to maintain predictable, reliable, high-quality credit outcomes for our capital partners, which of course simply means that our borrowers are paying back their loans on time every time. And that is what we've built the company around: underwriting as an expertise and being very deliberate and honest with our consumers. Every loan Affirm makes, every transaction we underwrite is an explicit conversation. Should I borrow this money? Should I buy this thing? And sometimes the answer is no. We try to be very honest and very humane about, hey, you are overextending yourself. By doing that, we are helping our borrowers make sure that they are living within their financial needs.
And I forget it, we said in the introduction, one of the analyst firms was very complimentary, saying that your credit analysis operation is the equal of any in the business. It's interesting to me, about half of your customers earn less than $60,000 per year, but that sort of doesn't tell the whole story. We just had a graphic up there that showed that by income, your customers are spread out across lots of different income brackets, and that the average household income per customer is $74,000. So you see there that 25% make between $20,000 and $40,000, but a lot of them, 19%, make between $60,000 and $100,000.
That's exactly right. And I'd like to take this opportunity to dispel a really pernicious and wrongful myth.
Growth rate.
Affirm in particular is not for folks in financial trouble. It is for people who want control.
NVIDIA 61%.
That is what we hear from our consumers the most. The word control, clarity, sense of certainty, knowing when I will be done paying this off. That is what.
All right, so let's go. LATSGO. LATSGO. Let's go. Let's go. NVIDIA's on the move.
Is a sense of control, and that is valuable for folks that are under $60,000 a year and with triple-digit salaries and huge savings.
You have a tremendous presence in the merchant area, like Amazon, Dick's Sporting Goods, Walmart, Target. But it seems increasingly that you're moving into the world of experiences through partnerships with companies like Royal Caribbean, American Airlines, Priceline, and so forth. Tell us about that.
It's a well-known truism that younger generations value experiences over possessions, and we want to meet our young consumers where they are. Something like 65% of our consumers are millennial and younger, and so more than half the customer base is traveling. They're excited to get out of the house. They were spending the last couple of years anyway traveling after COVID, like it's the last thing they do, and being there for them is really important to us. So of course we are investing very heavily in travel and experiences.
Anything in the economy or in the sort of
All right, this looks really good.
Customers that keeps you awake at night, or is there anything that's worrisome to you? You said that the economy is doing well. People are spending; they're getting ready to spend for the fall season and the holidays. Is there anything out there that has you a little on the edge of your seat?
I sleep very soundly at night, more so recently than I have been in quite some time. The company really is doing really, really well. We've just announced we will be GAAP profitable in the last quarter of this fiscal year, and so feel great about the economy, feel great about our customer. The reason isn't anything other than the fact that we don't really leave these things to chance. One of the things that I say all the time, credit outcomes are an input into our business. We decide what sort of risk we are willing to take and manage, and that's how we shape our borrowing and underwriting policies. We're not holding our breath for the next shoe to drop because we are in anticipation of all possible eventuality. So yeah, I sleep very well at night. My only angst is always how can we ship more exciting things for our merchants and our consumers sooner. The thing that I'm most excited about, actually, maybe what keeps me up at night is I can't wait for the fourth quarter sales to really come through, because the biggest thing this season, this holiday season, will be 0% deals. We just did a huge consumer survey, and the NPL is now a big enough thing that people value no interest loans with no gimmicks and no fees just as much as they love discounts. So I think that's going to be a huge thing, and I'd love to see what happens.
Well, we'll talk more about that the next time you're with us, and I'm glad you're sleeping well. Max Levchin, thank you very much. And before we head to break, let's check on shares of Synchrony Financial, all-time high today after an earnings beat and a guidance raise. Shares up nearly 4% on the session, about 11% so far this month. More on the exchange after this quick break.
All right. Hope everyone's having a good day. Certainly having a good day. NVIDIA still going. Maybe, baby. Maybe, baby. Wow. There goes NVIDIA. Crushing it. Crushing it. We get towards 140 again. I'll be taking profits off into strength. Look at that move in NVIDIA. Oh, boy. Looking good. Looking good. Sing it, Janice. Ba-da-ba-ba-ba-da-ba. Looking good. All right, this is great. This is great, great. Even Bitcoin's cooperating today. It's I don't know if you've been paying attention to the character in Bitcoin, but for the most part, dips are getting bought. We're above the channel line. Okay, we're looking at the channel line on Bitcoin, BTC, USD. Okay, so the channel line that I'm particularly interested in is this daily and weekly. Okay, so this is the daily. You can imagine what the weekly looks like. Let's go to the weekly. So yeah, the character has changed quite a bit. It's changed quite a bit. You know, we're buying the dips, selling into rips, and maintaining strength. Look at the histogram bar at the bottom. Histogram is bullish on the weekly time frame. Let's see, what was it on the daily? I think the daily must be too, right? Yeah, daily's bullish too. Okay, cool. Cyan bar, first day for a cyan bar on TTM. Okay, so just think of the momentum as, okay, we want to be long until the peak, and we want to be out of a position or short as we start to produce dark blue bars. Once we hit the red bars, we start looking for a trough to buy. You look for support. Where did we get support? Right at the 50-day moving average. Okay, a lot of people don't look at technicals so much on Bitcoin. Mondo, hint, hint. But, you know, he does watch Bollinger Bands. I'm not sure exactly what he does. Maybe we'll get Mondo on here one day. He can talk about, try to keep a straight face and talk about, you know, the way he looks at the markets. Because I know he jokes around a lot, but I'm sure he's pretty serious. Anybody who comes from his background, as he's posted many times in the trading room, and becomes a successful businessman or woman, has to have something to say that's worth listening to, right? Anyway, NVIDIA is just charging higher. So anyone who shorted NVIDIA yesterday is having to cover their position. Okay, NVIDIA is looking really good. NVIDIA looking good. Pull back to breakout. Yeah, looks good. Ba-da-ba-ba-ba-da-ba. Hey, hey. Do-do-do-do-do-do-do-do-do. Bum, 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 bum. Oh, come on, Nick. These nuclear stocks, they're probably going to keep going, but they are overbought. I would think intraday, probably a little extended. I would wait for BNC pivots if you don't have a position and you're thinking about swing position, whatever. All you have to do is look at the daily on Oklo. This thing is like gone ballistic. Nanonuclear continues to make higher highs and higher lows. Volume on the daily chart is definitely showing institutional interest. Okay, we're at 20 now. Okay, we're at 20. Wow. Very nice. Very, very nice. Oklo, IWM, Supermicro. All right, Supermicro is grinding up. Okay, corner. What's going on with Boeing? Boeing. All right, so we've got a couple of white soldiers here. They don't overlap, so technically that's not three white. Well, I guess they do. The wicks overlap. Be better to see more solid candles instead of wicks top and bottom, but look at the volume. That looks like institutions to me. Boeing looks pretty. A lot of people don't like buying dips. For some reason, when you start out trading, we get excited, we buy breakouts, and a lot of times those breakouts fail or, buying the high of the day. I'm being sarcastic here, but this looks pretty good. Once it starts to turn, you got resistance overhead at the 50-day. You got resistance at that block order right overhead. It's only 8%. Look at the 26% overhead. Okay, if you look at this, okay, you see the 26%? The 6% is negligible compared to that 26%. So I'm thinking this is shorts covering here.
Seeing a big jump in inventory of unsold condos, and that was before the hurricanes Helene and Milton. Listings of condos.
Oklo turning again.
70% in September. West Palm Beach, Wellington, Fort Lauderdale seeing over 60% increases in condo listings there. Prices have started falling. In Miami, overall prices down 12%. That's the biggest drop of any major housing market in the country. Jacksonville, Orlando, and Tampa all seeing price drops of more than 5%. Now, brokers
Boeing.
hurricanes are likely to lead to more listings, and a new
Okay.
law that requires condo buildings to fund large cash reserves has led to a glut of older condos in the market. And you have those insurance costs causing even wealthy buyers.
Oklo about to break out again. Oh my gosh, look at this stock is crazy. Okay, Boeing looking good.
In September, in Palm Beach, contracts over $5 million, down 50%.
Okay, let me do this. Let me go.
On whether the Florida dream may be fading, don't miss my live conversation Friday with billionaire real estate investor Jeff Green. You can scan the QR code there on your screen. Or head to
They got to do something with insurance. I mean, I don't know how they do it. There's got to be a way to make insurance a little bit more affordable. I wouldn't mind having a place down in Florida, but it's just that's too goddamn expensive. I mean, it's like another mortgage. Either that or you just take and buy your house cash and hope that you never have to deal with a hurricane. But if I'm going to move to Florida, I want to live on the coast,
those HOA fees, it was the insurance, and Florida has had a lot of
Okay, Apple making a higher low. Apple making a higher low. I might want to buy some Apple here. Do I have an Apple position? I don't think I do. Apple. Okay, watching Apple. Apple. Okay, let me see what Apple looks like here. Apple. Okay, so Boeing looks pretty good. Okay, watch Boeing. Okay, so if they should just agree, just give the unions what they want and get back to the production line. Oh boy, hope everyone's having a good day. Tyler Matheson. Okay.
U.S. natural gas futures extending losses.
Boeing. Okay, Boeing looking good. And yes, I do have a position.
Headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Yep, yep. Yes, I use edges. Yeah.
Welcome to Power Lunch, and look who's here.
Hi.
Theodore Bose is here.
Thrilled to be here.
Good to have you here. Glad you make it from the West Coast. I'm Tyler Matheson. Joining us for the hour is Sarat Sethi. He's a managing partner at DCLA. Always good to have you with us, Sarat, as well. Markets are higher right now after a pullback yesterday, but the setup is still markets near all-time highs as the Fed is in a cutting cycle.
Born on the bayou.
So,
Yeah, well,
so I'm here to remind you of these things.
they give me the signpost.
Exactly. And the big story today obviously are the bank earnings, right? We're getting more into it. We're going to have tech later this month, but introducing this idea of a no landing scenario, which would be quite something, right? The markets just continue to keep going, economy grows.
I think we're in between the soft landing and no landing. And at this point, the market's still going to go up.
Hovering,
Hovering, but earnings are driving the market.
Yeah.
So you're seeing, at least that's the positive part right now.
Right. For now. We'll see what happens. Also, we're going to talk more about that later, but also take a look at shares of Qualcomm. They're lower today following reports. It will wait until after the election to decide whether to pursue a takeover of Intel. But Citigroup with a bearish note on the stock. We will talk to an analyst about that as well. And
It says
Tyler,
check
it says
here.
chat.
So you know about this. I don't really. So I'm gonna
Okay, nanonuclear going vertical.
Chart that I want to pull up.
Oh, this thing is blowing off here. Wow. Impressive.
I mean, we pretty much know what the story has been all year. Chips have been the outperformer. Software has really been lagging, especially in the
Okay,
CX
Tesla. Okay, go Tesla. Go Tesla. Go Tesla.
All right, and as we've seen, lots of high-profile changes at the top of big companies this year: Starbucks, Nike, Boeing, to name a few in the CEO suite. We'll talk to the audience
Okay.
on what
Nvidia, yeah, 163,000.
The book is called CEO Excellence, and Vic Malhotra will be with us to talk about it. It's a topic that fascinates me, as we were just saying. How do some individuals, whether they are CEOs or performers or leaders of sports teams, how do they sustain excellence over decades? And that's what Vic is looked at.
And I think what will be really interesting to see is what was the difference between CEOs 2-3 decades ago versus what's required of them today. The world is so different.
I'm guessing a lot more.
Yeah, and what are the qualities that you look for today versus what were in the past?
A big topic of discussion where you
Boeing, watch Boeing. This looks like an opportunity to me. Left to be seen.
As we mentioned, sentiment seems pretty good right now.
Looking good. Boeing. Did I take a screen cap of this? Boeing, Boeing, Boeing. Boing, boing, boing.
Good to see you as always. The major industries are just shy of historic highs. Not surprisingly, the market sentiment is getting very frothy. Both retail and professional investors have become more bullish in recent weeks, and you can't blame them for getting excited. Look at this list here. The soft landing remains the dominant investing paradigm. The Fed is cutting rates going into a soft landing. That is very unusual. Stock buybacks are at a new record. That's a big support. Stocks are also entering the seasonally strongest period of the year. And finally, there's hopes for political gridlock and or perhaps a Trump win that also may be boosting some sectors. Still, there is excited, and then there's just downright frothy. And we're starting to get into that frothy territory. The American Association of Individual Investors Sentiment Survey shows bullishness among retail investors just shy of the highest levels in over a year. Bullish sentiment right now is 49%. That historically is very high. The average is about 37%. The same with professional investors. The October B of A Global Fund Manager Survey, this is a global survey of fund managers, saw the biggest jump in investor optimism since June of 2020. They are allocating much more money to stocks now and less money to bonds and to cash. The relentless rise in stocks is also creating overbought conditions. Several sectors like industrials and financials like banks, along with roughly 15% of the S&P 500 is now in overbought territory. And if you don't know what that means, what it means simply is when stocks and sectors move up this much so fast, it's historically difficult for them to keep advancing in the immediate future. And guys, at least with financials and some
Looking
industrials, we're
good.
there already. Back to you.
All right, Bob, thanks very much. And our next guest says the Goldilocks conditions in the economy could actually lead to more volatility as markets react or maybe overreact to any perceived threat to that delicate balance. Joining us now to discuss is Lauren Goodwin, economist and chief market strategist at New York Life Investments. Why don't you dive in and explain a little bit more about what that I've just characterized your viewpoint as being? In other words, they're a little bit spoiled, I guess, or a little bit on knife's edge, and that
Boeing.
that is seen as adverse to the markets could create an outsized response.
Well, Bob's done an amazing job of laying out the reasons why investors are so confident right now, and that a consensus has emerged around a soft or even no landing in the economy. I think the question for investors then becomes, is that a no landing, or is it a re-acceleration of economic activity? Because the market pricing we're seeing over the past couple of days
Okay.
I'm skeptical that that's
Boeing. Yeah, I should sell some into strength, right?
it's very difficult with profit margins where they are to expect that we'll see
Nano.
much weaker labor market or economic conditions.
Wow, Nano doing really well.
Historically, when the Fed has cut even into soft landings, we haven't seen profits re-accelerate or hiring.
Supermicro trying to take out the high. Supermicro. Nvidia. Okay, Nvidia.
Average equity market returns, average bond returns. That's an environment that after the last couple of years of knockout returns may not feel so good.
That was really where I was going to go with my next question, and that is that what you're saying
Micron.
leads me to believe
Akla.
it is unlikely for the returns that we've seen over the last 2 years to repeat themselves.
I think that's the case, and it's not one that investors need be overly concerned about, but it is one that requires a pretty serious call to action for investors. If you have the Fed cutting interest rates even 25 or 50 basis points from here, it creates meaningful reinvestment risk for investors. And so we're looking to add interest rate or income generating capacity wherever we can. We really like short duration credit for this reason. And then in the equity markets, good profitability, it's a good place to be invested. We're not necessarily
Broadcom, a little pullback there.
the market that's performing very well.
Okay, Supermicro still grinding up, trying to get above 50. Supermicro. So that 50 level. Sorry, I don't want to get stuck here on Boeing, but it does look good. Boeing, 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 Boeing. All right, Boeing's trying to break out here at the high of the day.
What other opportunities? You mentioned utilities.
I have Friday calls, so I'll probably do something. The Friday calls I have, or what Scott mentioned a couple of weeks ago, Boeing that we're talking about. I guess it was just 2 weeks ago, right? We were looking for them to quickly resolve the issue with the unions a couple of weeks ago, and it dipped again. All right, Boeing is trying to go right here.
Dividend payers are one of the segments of the market that have been underloved over the last couple of years, but again, may benefit from this type of environment. And then if we look at the U.S. election and the type of sector benefits that we may see from just sustained capital investment from the government, from the private sector, we again see quality brown, low-cost green energy as benefiting from
Okay, Boeing going.
Defense and then infrastructure along the semiconductor supply chain. Again, these are
Boeing.
parts of the market that are not only seeing that structural investment, but are also beneficiaries of modestly lower rates.
Lauren, what do you think the chances are that markets are being complacent, that maybe we're not in this Goldilocks or no landing scenario? I take an ASML from yesterday, right? The accidental earnings release that caused NVIDIA to go down. And you just mentioned the semiconductor sector.
so overbought? What if investors are looking for an excuse to sell and you have an event like an ASML weak outlook and that causes more volatility?
Look, I think that the risk is certainly there, and it's my view that a sustained downturn in the equity market is one of the bigger risks actually to the economy.
Tesla going. Tesla's on the move. Trying to push. There goes Tesla.
Meaning that high-income consumers are doing quite well, where lower-income consumers are not. Those high-income consumers are those that have benefited from the wealth effect of higher equity prices. And so if we see that drawdown, it really can impact confidence consumption, and that can impact business decisions and hiring. The one more constructive thing I can say about this, though, is that typically when we've seen that type of sustained downward trajectory for equities, it's been backed up by weaker corporate profits across the board. And profits today are quite healthy across a number of sectors. And that does provide some ballast to get through some of the chops, frankly, with the election and other risks in the next couple of months that we might
Okay, that had to be Boeing being sold into strength. I had a limit order on Boeing on strength. Okay, that popped. Okay, good. I have Friday calls, so I want to take that off and reassess it.
Dipping below 4%. Let's get to Rick Santelli at the CME with more. Right.
Absolutely. Thank you, Deidre. The big story today, well, let's look at a two-day chart. It really does say it all. Yesterday, we started out at 410. Today, as Deirdre pointed out, very briefly, we traded under 4%. But on the right side of the chart, pretty much all day, we've been hovering right above 4%. Now, think about this. If you look at what has moved the market, nothing moved it more than the big set jobs report on October 4th. The next chart starts on October 4th. And whether you're looking at the 10-year, 2s, 5s, 7s, 20s, 30s, it all looks basically the same. We broke out to the upside yields and we have moved up. Now we're coming back down. So guess what? That jobs report, 254,000 jobs, 4.1% unemployment rate. Well, tomorrow we're going to get retail sales.
Tomorrow.
It's very ironic that on a big day of important releases, here we are at that important breakout point.
All right, SMR is not dipping much. It's going. Tesla, there goes Tesla.
Tomorrow's going to be September. If you look at July, the core retail sales was up 0.4%. Last month it was up 3%.
Tesla.
These are good numbers. So tomorrow's SEP report is going to be outsized market response. In that last segment, definitely tomorrow could be that day. It either is going to
Why?
be a moonshot back up over 4% for tens of
Okay.
or if we get below it on a closing basis on a Friday for the weekly close, the following day, that will be very significant.
Okay, there goes S&P. Okay, what time is it? 2:12, 2:13.
Rick Santelli in Chicago. Coming up, Qualcomm reportedly waiting until after the election before deciding whether to launch a takeover of Intel. At the same time, Citi slashing its estimates on the name ahead of Apple's move away from the chip maker. We'll speak with the analyst behind that call next. And you've heard of Six Sigma, but what about the six mindsets that separate the best CEOs from the rest?
All right, there goes Supermicro taking off to the upside too. Supermicro, thank you very much.
Here with his take on some of this year's biggest C-suite coups and more. How much is back after this?
Supermicro. Okay, what do I have? Supermicro, I have. Oh, that's right. I have the 50-55 call verticals. 50-55. Supermicro. Okay, Boeing looking really good. Boeing's on the move. Okay, cool. Supermicro. It's above the 50-day. Really nice. Look at the difference now. Look at the 50-day. That's a big move above the 50-day. That's a beauty. That is a freaking beauty. Okay, that looks good. So Mondo, I know you're looking at a descending channel on Supermicro. It's finally starting to turn the corner, perhaps. Okay, that's what I'm looking at anyway. Okay. So looking for it to pop. What time is it? 2:12. Nope. Okay. 2:13. Supermicro. Ba 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 ba. Do 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 do. It's above the 50-day. Work in progress, Super Micro going. Let's see. Hope everyone's having a good day. It's 2:16 on the East Coast. I'm here with you this Wednesday, the 16th. Hope you're having a good day. Okay. 2:15. This is when we look, this time of day is when you should be watching for institutions.
Welcome back to Power Lunch. In today's Tech Check, we are taking a closer look at Chip Video with a new note launching a negative catalyst watch on Qualcomm, given its expectations of a lowered forecast, but the firm still remains positive on semi.
Okay. Tick cumulative is green.
He joins us right now.
Up volume is leading.
Surratt just made this point with Qualcomm and Apple. We've been here before. This should already be baked in, but your thesis has to do with the fact that Apple is going to go away.
Yeah, partly yes.
All right, so we are 2.5 to 1, 3 to 1, up volume.
Following semis for way too long. The semiconductor company can talk about an event in the future that will drive sales up or down. But when that event actually happens, it still impacts the stock, mostly on a multiple perspective. So we think that this is going to come out. Certainly, they're going to get asked about it during their print in a few weeks. And yeah, Apple is finally starting to go away after many years of waiting next year. Supposedly they're coming out with like an iPhone SE version that's updated and it's not going to feature Qualcomm chips. But you have that. You have a couple of other things. We think that their sales could be flat to down for the calendar Q4. Remember, they're going from a 14-week quarter in the September quarter to a 13-week quarter in the December quarter. So that alone usually shaves off 5 or 6% of revenue.
Right. So these are sort of catalysts or options.
Super Micro, nice look to it. Tesla finally.
Narrative of will they or won't they try to acquire Intel? And there's a new report saying that Qualcomm is waiting until after the U.S. presidential election before deciding whether or not to pursue an offer. What do you make of this? Is this something that would really get done?
I mean, I can't imagine it would. We have this top 15 rules of semi investing.
Okay, it looks good. Super Micro.
But one of those rules is we call it the city slickers rule. Successful semiconductor companies are generally good at one thing, and if they try and stray from that, the results are mixed at best, or they end up destroying.
Microsoft making higher lows. Apple trying to turn. Apple. Oh, I didn't do anything with Apple. Apple. Let me take a look at Apple. Got sidetracked. Apple. Okay, Apple, just a doji. Bollinger Bands are tightening. You see that? At some point, it's gonna make a move. Boeing. Excuse me. Apple's gonna make a move eventually. Look at the Bollinger Bands. Last time they squeezed tight, we had a move. It was unfortunately down at first and then went back up to the top bands. So it's a guess at this point which way we're gonna go. So Apple, I'm gonna pass. I'll pass on Apple. It's not the best setup. Nano Nuclear, these nuclear stocks are just killing it. Wow, look at this.
on the question of Intel, would there be a natural buyer for Intel, or is it just time to break it up because of the way their business is running?
Yeah, great question. I definitely don't think it's time to break it up. We've been saying this for, the better part of the decade, is they're just not good at the foundry business. This is making chips for other folks. They should just get out of it, shut it down, go away, focus on what they do best, manufacturing microprocessors. We think that if they get out of the foundry business, you have a path to $3 to $4 in earnings for Intel. Everyone's a winner. If they stick with the foundry business, very, very small chance of succeeding.
So here's the question, right? One of the things that we're spending as a country are billions of dollars on fabs. So who would then want to, there's
Key
no way we're
lawmakers
going to let these
cut
fabs
off
go to
Huawei
foreign buyers.
vendors from US chip
So
gear.
how does that work then in terms of a natural buyer for the fabs?
Then you're just wasting money. I think what they should do is the number one.
There we go. Got some bullish flow coming in now.
Gain share every year. In our opinion, we've written
All
this.
right.
What the U.S. government should do is just give it all to TSMC, have them build fabs in the U.S. Otherwise, you're just spinning your wheels. You're just wasting.
But Christopher, isn't the whole point national security if you don't want a Taiwanese company to develop your chip?
I mean, there's no alternative. If you let Intel do it, you're just gonna you might as well light the money on fire. So, my opinion, it's never gonna work. Not never. I can't say never, but very slim chance of working. So just let TSMC do it.
Tesla, nice move on Tesla. Looking good. Looking good.
Coming up, we are in the midst of the busiest earnings week for financials, and while Wall Street's squarely focused on the big banks, our market navigator
Vertical puts 215 to 20.
reveal the key names to watch next.
Let's see.
Check on stocks at session highs. The Russell 2000 small caps outperforming the major indexes. We're back after this.
November 235, 240. Mm-hmm. All right, just assessing some positions here. Let's take a look at Tesla. Let me see what the Tesla daily looks like. Tesla has been flirting down here below the 50-day for 4 days. All right, do we get a 7-day, 8-day rally using Lee Star's methodology? It takes about 7-8 days for oscillators to reset. And we got the stochastics is reset right now on Tesla. Okay, this is setting up for a nice move. Okay, this is setting up for a nice move. MACD is still bearish. Volume tapering off on this consolidation below the 50 days. So that's a good sign. And it's bullish volume, even though it's tapering off. It's not increasingly bearish. Okay, Supermicro looks good. Okay, Supermicro. So that's a good sign. All right, Supermicro. Okay, I have December 50, 55s. Okay, I'll look for that to go more. Okay, there goes Apple. Shit, Apple, I missed it. Okay, not really missing it. Let me just jump on Apple right here. I'll buy Friday's calls and see if I can make something out of this. Popping. Looks like shorts covering at first. Apple. Okay, Friday's calls are cheap. Okay, I bought some Friday 232 50s. Okay, so they're $1. Apple bought Friday's 232.50 call for $1. 50-cent stop loss. Okay. Let's see if this goes. Let's see if Apple goes here. All right, so Apple, watch Apple. I just bought some 232.50s for $1. Okay, looking for these to turn the corner. Look at the histogram. That's what got my attention. The histogram turning on the 15-minute. Let's see what the 5-minute looks like. 5 minutes. Okay, 5-minute. Okay, so 15-minute has more momentum. Let's look at the 30-minute. 30-minute also has the same momentum that I'm looking for. So I'm just looking for a move back up to see that fair value gap overhead. I'm looking for a move back to the fair value gap.
Concerned about net interest income, but the focus turned to equity trading in Wells Fargo case fees, and these stocks continue to make 52-week highs, continue to break out, and continue to lead. But when I look at the overall picture of financials, I like to look at it more from a basket and then break down that basket. So I look at the BKX, the KBW index. It takes into effect some of the large cap banks like Goldman and JP Morgan, plus some of the regionals, stocks reporting earnings this week that aren't getting the headlines like a PNC and an MMT that others should. And what I saw in the
Okay.
KX
Oh, yeah, that looks good. Day 4 watch, 240E cross. Oh, that looks good. Excellent, excellent. That's what I want to see. That's what I want to see.
Regional banking crisis level. As you can see on that chart, we have room to run. So I think a clear path is set from a risk reward setup. If this was the pullback, because it has gone out a little far right now, I would put money to work now and buy a little bit more on any pullback, because I think based on the rate cutting cycle and where the regionals are starting to come back, that a clear path towards new highs around 145, 150 is in the cards.
All right, so then Jay, let's go through some of the components of that. You mentioned big banks and smaller banks as part of the index overall. Are there specific names that you think are poised for a better breakout? Some of those regional names that you might think of as potential buying opportunities on pullbacks?
Yeah, well, this week we're seeing a breakout right now. PNC Bank broke out last quarter above its March 2023 regional banking crisis level and now is on a run to all-time new highs. So a PNC is pulling back a little bit. If it pulls back to this 185 level, I think that would be a good opportunity to buy because it's still in that nice new uptrend. And watch 202. We're seeing new highs every day in this market. PNC hasn't gotten to that all-time new high just above 200. So I think PNC has room to run. Then
Tesla.
based out of Memphis, Tennessee.
Tesla 226. Tesla.
This year, up about 20%. Just reported solid earnings, broke above $16, $17.
Tesla.
All-time high there is 24.25.
All right, Tesla going. Tesla. Yeah, baby. Yeah.
Risk reward point of view. If it breaks down below 16, you get out. And then my favorite, M&T Bank. They're based in Buffalo. A lot of people think they're based in Baltimore because of the stadium, but major breakout in M&T. A pullback to 180 should be your new floor. Look at this thing on a longer term basis. I see you have the chart there, so thank you very much. These are stocks you want to own. You want to own these stocks on strength. They've turned for a long way, and what we have now are tailwinds. We have a rate cutting cycle, so there's going to be more lending. We're going to get through this election. Look for more M&A activity to pick up after the election. IPOs have come to the market, and then mortgage rates have stabilized. They're not down to where people are rushing out to get that new mortgage, but this is all the fuel needed for these regional banks to finally.
All right.
Brothers in the major banks like JP Morgan and Goldman Sachs.
All right, there's the big bank versus smaller bank trade. Jay Wood.
Tesla, a little profit taking. NVIDIA making new highs here. NVIDIA. Woohoo, let's go.
So Sarat, let's talk about a portfolio manager's perspective versus the technician's perspective.
Looking
You heard about the
good.
charts. You also mentioned some fundamental factors. Do you like the regional banks as opposed to the
NVIDIA, nice move in NVIDIA.
I was going to choose, and which I do with actions, which is what we invest. I prefer the bigger banks, and I'll tell you why. I mean, look,
NVIDIA doing well.
March period with the regionals. The biggest question was, what are the balance sheets look like? What are the opaqueness? When you look at the big banks like JP Morgan, Morgan Stanley, a lot more transparency. And you look at the earnings that they've come out just in the last week, what they also have is huge tailwinds, right? It's not just the tailwinds of, we have an interest rate cut potentially coming down, which we know will happen. Capital markets activity is really starting to pick up. That could pick up even more depending on what it means.
Okay, that S&P move. All right, the S&P, what we were looking for, we're looking for that move. Okay. Okay, we got right to that, got right near that strike. Okay. I just took some profits on that. Okay.
So you've got all that, and I think in a much more diversified business, not to say the regionals are bad. I think the opportunity in the bigger banks, and that's where capital's going to flow as well.
Here's a question for you, quickly.
Yeah.
Do you own the regional banks?
I do not own the regional banks.
That's a good tag out point there as well. All right. Deirdre, Ty, Sarat does not own any of the regional banks, but there's a case to be made for some of them. I'll send it
Good
back.
to know. Good discussion. Coming up on the show, McKinsey's senior partner out with a new book on the 6 mindsets that distinguish the best leaders from the rest. After the break, we will ask him what they are and get his take on what makes an excellent CEO. Power Lunch is right back.
That is down 19 cents, or there is 0.27% on the session.
Okay. All right. So this trade here worked out really well, folks, if you traded it. Okay. Every point above this level cost this trader $2 million. Okay. So traders are helping. All right. So I took that as a hint from every point above this costs this iron condor. Every point. Okay, so looking really good. Okay, I just took some profits off into that. Okay. All right, looks good. S&P.
We've seen several high-profile changes in the C-suite this year, from Kelly Ortberg going in at Boeing to Elliott Hill at Nike, Brian Niccol leaving Chipotle to go over to Starbucks. But all three of them face numerous challenges, and according to our next guest, succeeding in the role of CEO is key to driving substantial growth in company performance. He's out with a new book on CEO leadership with a couple of co-authors and what makes a good CEO. Vic Malhotra is senior partner at McKinsey and co-author of CEO Excellence. Vic, it is great to see you here with us. So what do great leaders do or have that the merely average ones don't?
Well, they do a number of things well. The first is in dealing with their responsibilities They do all things related to leadership at an excellent level. I always had the assumption that you'd see great leaders who are fabulous at setting the direction, but perhaps less good at managing their board or engaging with their board. The reality is great leaders do all of their 6 responsibilities, which we highlight in the book, at a truly excellent level. But in that sense, they're a little bit more like Ashton Eaton, who's the world's greatest decathlete to live, and a little less like Michael Jordan, singularly great at one.
Wow. Wow, looking at that.
Very quickly, because we can't spend too much time on it, what are those 6 attributes that you highlighted there?
Well, the six responsibilities are setting the direction, aligning the organization, mobilizing through leaders, engaging the board, connecting with stakeholders, internal and external, and finally, your own personal operating model as a leader. Nothing earth-shattering there, but the fact that they can do all 6 of them well.
Spin the plates, keep them spinning.
Right. And importantly, as in doing it, they have audacious vision for where they want to take the institution, truly audacious vision in terms of where they want to take the institution, and are amazing at really being great integrators. As Satya Nadella said to us in his interview for the book, he said, it's an information asymmetry problem. As a CEO, you see more than anyone else in the organization, and you certainly see more than the 10 or 12 people on the board that you report to. And therefore, if you're going to pursue an audacious vision, you really got to be an excellent integrator.
Do great CEOs need, how important are efficient workforces? There's this idea in tech of founders mode versus manager mode. Founders mode eliminates a lot of those layers, and the argument is that if you're a founder, you know the business and the product better than anyone else, so you should be in those details. Where do you stand on that, and how do you see founders?
One of the things we talked a lot about in our book, and we can come back to this, against all of these 6 responsibilities I talked about, there are 6 mindsets that really do differentiate what we see as the excellent CEOs from those that are fine, but not quite at that level of excellence. And when we talk about the individual's personal leadership model, one of the things that we highlight is do what only you can do, right? This is not about do everything. It is about do what only you can do. Understand what you as the CEO can add uniquely well.
Okay, looking for a move above 58.50. If we can get above 58.50, this every point above 58.45 is costing this trader $2 million. $2 million.
These great CEOs and great leaders really do very efficiently manage their time, manage their energy, and manage how they kind of think about the way that they lead, right? And so, personally, I think you've got to get that balance right between knowing enough about the details, but also being able to elevate yourself and work with others to get them.
Let me ask a dumbass question. Is being a CEO a good job or a horrible job? And do people who are in that job, do they love it, or do they go, I can't wait for this to be over?
You get both types. You get people who love it and absolutely, are completely committed to it. And there are some that love it in the initial phases, but they do hit a wall.
And some of them go through cycles where they're very efficient in years 1 and 2, and then there's the sophomore slump, and then they go back, and then they get.
But can you be good at it if you don't like it? That would be my question. Do you last very long if you're not?
Yeah, the answer is the ones that do last long, the ones who excel, who deliver excess shareholder value, who contribute to society in many ways through job growth and productivity. They love it, and they do it really well. But it is. The cliche is accurate. It is a famously hard and lonely job. And it is absolutely getting hard.
Because if you're the head of Americas, as you are, whatever you are at McKinsey, you have peers. Okay, the CEO of a corporation has no peer.
Absolutely.
And so that's a different. You want to ask question.
So how does it work with the CEOs now? We are seeing all this activism and succession. So one of the, the 6 things that they're really good at, is that one of the things you have to incorporate? Because if you're so good at it, when do you know it's time for you to leave or do the succession planning? How does that work in your experience?
Yeah. So what we found is that the truly excellent CEOs, by and large, this is obviously a generalization, will be in place for 7 to 9 years. There are clearly exceptions. Jamie Dimon would be one who we think is an excellent CEO who's clearly gone a long time. But in general, when they get to the 6 or 7 year point, they know when it's time, and so they kind of think ahead 2 years out, and the succession planning absolutely begins. I think the James Gorman did at Morgan Stanley. It's actually textbook.
Well, can we talk about the red flags? I mean, I'm all for talking about excellent CEOs, but as you mentioned throughout, there's a lot of activism, a lot of questions about succession plans at major companies. What do you think that some of these activist investors are seeing that they don't like when they think it's time to push someone in?
Yeah, I think some of the red flags that clearly are evident. Well, starts with performance, right? They can see the lagging performance. I mean, again,
It might take a while.
Yes, it can take a while, but they see that as a marker. They will clearly look beyond the CEO often to a team, right? And is the team truly excellent? I mean, what is the other thing we discovered in this whole notion of mobilizing through leaders is great CEOs focus intensely on building a star team, not a team of stars, right? And I think the activists and the investment community are actually pretty good at understanding. Are they really building a star team around them? That's going to help lead the organization.
How much, if any, of CEO performance of how we think of CEOs is?
Yeah, good observation by Sunrise Trader. Don't get giddy. Don't get giddy. That's a sign you need to start examining your positions.
But he has also benefited from the fact that he happens to be at a company that is in the right place at the right time.
Right. So we should differentiate between founders and people who've grown up in corporations and become CEOs. I think the ones that have grown up within institutions or come to an institution laterally to be a CEO, I personally think that they've learned a lot of the skills along the way. So they've learned to have bold vision and direction. They've learned to be excellent in resource allocation. They've learned how to shape culture, how to mobilize the team. There's certain things that they learn on the job, engaging the board, managing external stakeholders, their own personal operating management. That's a little bit learned. So I think it's more actually grow up and bloom for the role rather than just.
Okay, NVIDIA.
Really quick last
Looking
question.
good.
One of the most controversial CEOs out there right now is Sam Altman. What is he doing right? What's he doing wrong? Or what grade would you give him? Someone who was kicked out of his company by the board just to return a few days later.
Deirdre, I'd love to be able to answer that question. I just don't have enough insight to give you an honest answer on that one.
Fair enough. I don't think anyone does that.
All right, Vic, thank you very much. Here's the book, CEO Excellence. Take a look, take a picture of it. Go ahead. Where are you? Come on. There we go. There you go, CEO Excellence.
Okay, Nano Nuclear still pushing. Wow, this is quite a day. I can't help but want to take some more profits off the table. I just, just as a matter of putting myself on repeat. When I feel myself getting giddy, if I start singing or whatever, that usually is a sign that I need to start checking in my positions. Maybe I want to take some profits off the table. As a rule, when I'm quiet and I do a lot of researching, that's usually when the markets are not too predictable and could create issues. So when I get quiet, it's usually a reason to examine your positions as well. Look for opportunities. These markets are still very strong, so I'm going to go with the flow. I'm trading more options than I am shares lately. I do have a few positions, shares, but yeah, we're getting, feels like we're getting extended, but we could stay extended for a while. So.
Coming up, Amazon is increasing its investment in the nuclear industry, directing more than $500 million to 3 nuclear projects across the country. We will hear exclusively from the CEO of AWS next. Power Lunch is back right after this.
Oh boy. Da, 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 da. Get ready, because here I come on my way. Okay, so, looking good. So yeah, talking to Cayman. I'd like to get him on. Probably, what's tomorrow? Thursday? Cayman, if you're available. Depends on what the markets. If the markets are really ripping, I don't want to take up your time when other people are trading. But if it's a little bit of a lull tomorrow, sometime between 12 and say 2, and we start to see some BNC pivots, maybe we'll chat. I'll get you to call in, and we can talk your strategies and things. I think that would be great. I'm sure a lot of people would love to hear that. Make sure your voice doesn't sound like Pee Wee Herman or something, Made you look, haha. All right. Apple looking good. Apple making higher highs, higher lows. Looking for a move on Apple. Tesla looking good. Okay, 260 call. That expires on Friday. 260. I have the 260 short, 265 long. A credit spread that netted $170 per contract.
Now live from Amazon's HQ2 in Arlington, Virginia. Diana, I was just talking about Google and Kairos. Feels like a revival, and lots of investment into the technology here. Yeah,
Da 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 da.
Nuclear energy across 3 different projects here in Virginia, home to nearly half of all the data centers in the U.S. AWS signed an agreement with Dominion Energy to explore the development of an SMR, or small modular nuclear reactor, near Dominion's existing North Anna nuclear power station. I asked AWS CEO Matt Garman why the push to nuclear.
We're looking forward, and we see the need for gigawatts of power in the coming years, and
Who's this gigawatts of power?
Wind and solar projects to be able to meet the needs. And so nuclear is a great opportunity. Also, the technology is really advancing to a place with SMRs where there's going to be a new technology that's going to be safe, that's going to be easy to manufacture in a much smaller form factor.
SMRs are an advanced kind of nuclear reactor with a smaller physical footprint, allowing them to be built closer to the grid. They also have faster build times than traditional reactors. Amazon also announced an agreement with utility company Energy Northwest to invest in the development of SMRs in Washington state. As part of that, Amazon's Climate Pledge Fund announced it is the lead anchor in a $500 million financing round for X Energy, a developer of SMR reactors and fuel, which will provide the parts and nuclear fuel for that project. At the Amazon presser this morning, Energy Secretary Jennifer Granholm announced $900 million in DOE funding is now available for those looking to deploy SMRs.
We want these data centers to be built in the United States for a variety of reasons, including national security reasons. We want these to be built in the United States, and we know we need additional power to be able
Okay, they're funding these freaking ASMR. Holy shit, this is like huge. This is freaking huge.
And as we said, Amazon is just the latest.
Dude, that is huge. I didn't realize the government was funding some of this. Oh man, I'm going to stick with these. Oh my gosh. Oh wow.
There's an important distinction here, right? This isn't like what Microsoft is doing at 3 Mile Island. This is developing the technology to get nuclear energy in a different way. So that's going to take time, right? And this isn't a sure bet. Well, I wouldn't say it isn't a sure bet. They expect it's a sure bet. They're going to be developing these small reactors, and it'll take about 5 to 10 years to get them all online from this particular project. The difference between what some of the other tech giants are doing is that Amazon is actually investing in that hardware, in those small nuclear reactors to get them built. They already have agreements with utility companies, whereas
Okay, that's huge. That's a game changer when the government gets involved in anything. Well, for the funding of it anyway. Wow, that's just pretty impressive.
And speaking of Dominion Energy, Dominion hitting its high
Wow.
in nearly 2 years on the back of that deal with Amazon. Up next.
next we'll take a technical look.
That's that. I'm gonna have to start doing a little bit more research here. Ba, 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 ba. Get ready, 'cause here I come on my way. Wow. Wow, that's pretty freaking wow. Mm. All right, there goes nanonuclear. All right, that's exactly what I thought was going to happen. Okay, you get. I didn't realize the government was funding these freaking things. Modular can be located closer to the grid. That would be real. You know what's good about that too? Can they put these in what do they call them? What's the cages that Faraday cages? I know there's issues with EMTs, right? That can fry everything. We might have electricity, but what happens to the wiring? Can they put it subsurface? Can everything be buried, with lead pipe, or I don't know? Is there a way to protect against EMTs overhead? Anybody is expert on that? That's not my expertise, but that'd be very interesting. These little modular nuclear units that could be located all over the place. So I'm learning more and more of this as days go by. That those can be protected. Those can be inside of something, concrete or whatever that can maybe withstand. It's just the wiring, I guess, and the end products, the end computers and stuff. Maybe they can be protected at some point. I don't know. It's just put a Faraday cage around your house. It's what I equate it to is, how excited my great grandmother used to get when, we used to talk about, when I was in the military, many, many eons ago. And I would take a flight from New Orleans to Hawaii. And she was all nervous because, she had never flown in a plane before from my father's side. She lived to be over 100, lived in Waycross, Georgia, but just reminds me of how excited she got. She finally took a flight. She took a flight from Waycross to New Orleans, and she was just so stoked about, air travel. And that's how I feel about everything that's happening right now with technology. Not to the point that I'm going to be blindsided by anything because I'll do the research. The point is that it's so exciting that you need to do the research to just check out a lot of this opportunity. There goes nanonuclear. Forget about it. Oh my gosh. Do, 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 do. Get ready. Oh boy. Ba, 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 ba. Yeah, there's plenty of money to go around. All the companies like Fluor and BWXT and these energy companies to reinvent themselves from just standard, hydroelectric or whatever. If these SMRs are anything like I'm making them out to be in my head, I don't have any idea of the technology, but self-contained units, they have their own cooling, so you don't have the rods that you have to deal with. I mean, obviously there's issues with, any kind of uranium or that kind of exposure getting out, or bombs or whatever. People digging stuff up. I don't know how that works, but radiation. Nanonuclear, though, is going vertical today. Looks really good. Nanonuclear continues to thrust a bit higher. Okay, that's a nice move there. Nanonuclear. Okay, looks good. Get ready, because here I come.
Welcome back. Time for today's three stock lunch. We're taking a look at some of today's biggest movers. Here with our trades is Tom Martin, Senior Portfolio Manager at Global Investments. First up, we've got Morgan Stanley.
Yeah,
Earnings estimates, Tom.
we'll be assessing that.
Well, we own this stock in our strategies, and we continue to like it. We're overweighted. I think it's important to look at how we look at stocks, and we want companies that are showing good earnings trends and also have good technicals in the here and now. We like concepts and we like stories, but it's got to be backed up by fundamentals that are actually happening, not that are on the come. And that's what you're getting with Morgan Stanley. Is this company has been doing that for a while, all year. The company was a market performer up until the rotation started happening in July. And this earnings report was just really putting an emphasis on how they're able to beat with the good fundamentals.
Oh, look at Nanonuclear's going frickin' vertical, man. Nanonuclear. Get ready, because here I come. Get ready.
Always that period of uncertainty. Well, he did a great job. All his team has done well.
Okay, wow.
Feel comfortable that it's a
Beautiful.
And you still have James Gorman as his chairman for a little while. The new CEO has done a great job, and I think this is going to
Okay, power hour is upon us.
It wasn't the JP Morgans of the world where, hey, blue chip, we should put money, but I think this is going to attract more capital.
All right, let's move on to Cisco moving higher after Citi upgraded the stock from neutral to buy, saying AI is going to become a bigger part of the business over time. Tom, what do you think of Cisco? Do you agree with that?
Well, it's certainly possible. They're in those businesses, and they seem to have gotten the trough here in the most recent quarter. But here's a company that's been underperforming for quite some time, and they really haven't been able to execute as well. That's been the problem. It looks as though they have the opportunity to do that with their networking and with their exposure to the data centers, et cetera. But they really have to be able to come through with that. So we think that that's a show-me stock and continues to be that way.
Finally, we've got Dominion Energy, as we mentioned, teaming up with Amazon to develop small-scale nuclear reactors in Virginia, hitting a 19-month high today. Tom, what's your take here?
Well, you guys did a great job of talking about that earlier today. And, although they are in one of the best areas for data centers, and they have been putting in 9 data centers so far this first half, and probably 15 by the end of the year. They do have nuclear, and they do have all the hookups that they need to have. Again, this is a story that is still in the future, and in the meantime, they're going to grow earnings by 5 to 7%, which is in line with your average utility. So the stock may be a bit ahead of itself.
All right, well, that's a wrap. Final thought there on Dominion, or
I think he's right. It is a little ahead of itself. You get this, this halo effect of AI and nuclear now. So these stocks, just jump like Cisco. So you're adding billions of market cap with no earnings.
Great to be with you. Thanks for watching Power Line. Closing bell, sir.
And welcome to Closing Bell. I'm Mike Santoli in for Scott Wapner.
This make or break hour begins with Wall Street shaking off a one-day setback as stocks stage a broad, somewhat moderate rally, pretty orderly out there on earnings enthusiasm, a retreat in treasury yields, and plentiful belief that the economy is in a sort of sweet spot. Here's a look at the scorecard with 60 minutes to go in regulation. S&P 500 grinding higher from some early losses, up about 0.5% as we speak right now. You see mega cap losers from yesterday bounce up, and include NVIDIA and United Health. A more mixed picture at this point for the NASDAQ. A lot of movement below the surface in some of those other big names, up about not quite 1/3 of a percent. The Russell 2000 has been whistling higher all day, actually up about 1.6%. Bank stocks have been strong. They're continuing to trade up on some pretty clean, reassuring earnings reports. Financials often move higher with small caps. Morgan Stanley, today's standout name in that regard, stock up 6%. NVIDIA rebounding, making another run at its all-time intraday high. That was set in June, and it's above 140 a share. So the semis more broadly are next. We'll go deep on that group in just a bit. But first, our talk of the tape. Have markets fully sidestepped the seasonal pre-election weakness we were promised?
All right, so we're right up against supply. You can see that overhead. Okay, that's the premium area. So you don't want to be buying in the premium. You want to be waiting for a little dip. Okay, so Nano Nuclear. Yeah, that was quite a move there, Nano.
It's pretty hard to find too much fault, Gabriella, with how the market's behaving in terms of cyclical leadership
Okay, Nano Nuclear. Supermicro. Apple moving. Okay, let's keep an eye on Apple into the last hour. Apple. Get ready, because here I come.
We do see some deceleration, some normalization in growth rates, and this is especially true of the consumer. Still doing good enough, but we have to be careful to translate that into.
Sorry, I just.
For things like discretionary, even some travel and leisure, we're seeing some normalization. But what we heard from banks, and so far a great start to the earnings season, is that good enough, normal kind of consumer that keeps the overall economy on track. We would just prefer to still express that via higher quality companies.
Okay, let me check my son's NVDX. Okay. Profiting. Red to green on NVDX. Okay. NVIDIA, just keep going. Head towards 140.
In part, do you think that this earnings revival that we're expected to see in the broader list of stocks is either priced in or not likely to come around, or we're still on watch for that weakening of the
Okay, so all right, so I don't want to get too giddy, right? But we got to keep in mind what SMH did yesterday. Okay, shot across the bow. Okay.
And then we have the entire rest of the market, which is, it seems, finally coming from an earnings recession. Now, I think in terms of the growth rate, what we expect, there are some risks around two issues. The first is nominal growth normalizing or decelerating, which companies are actually going to be able to keep pretty good revenues, and then margins. Margins last season gave a little bit of conviction.
Same talking points we're always hearing. Careful interpreting, good earnings, whatever. It's all about earnings. I mean, that's what drives the markets, right? That's what drives company profits, free cash flow, growth in earnings, quarter to quarter, year over year. All of these things come to the forefront. They talk about the same stuff over and over and over. Yeah, we already know that. Give us some actionable setups. Lately, I've been hearing Wapner using that term when he comes in at 3:00 in the evening, and he says, "I don't know, we're here with you, the closing bell," whatever he says, with actionable setups. I don't know about the actionable setups part. I'm a little skeptical on that, but I've been noticing he's been saying that a lot lately. SMR.
For the likes of NVIDIA and Meta.
And so I think as you go across all sectors, you're seeing this massive bifurcation in the AI beneficiaries versus not. Even yesterday, ASML was plagued with a whole slew of their own issues and has become kind of a big laggard relative to the AI beneficiaries along with the rest of semi-cap equipment. And so you're just starting to see this breaking of correlations inside of sectors, which I find is great for us as we're stock pickers.
No, there's no doubt. It's much easier. It's much easier to trade a trending market. You know, like the semis have been in a trend since the first week of September. We had a couple of hiccups, but the pullbacks or the hiccups were bought, and you know they were respected. And that that candle yesterday on much higher volume is something to pay attention to. Okay, one distribution day into highs. Oh, I wouldn't get too cocky. Okay, semiconductors, watching Apple.
Now, I would argue that, you know, this happened in the early years of cloud, 10, 15 years ago. And aren't we glad that they spent that way on cloud, 1.5 decades ago? So we're seeing the same kind of cycle today where the revenues are going to come. They'll just come at a slower rate. Now, Microsoft assures us that they will come with a high ROI. So whatever expenditure they will make, there will be an almost immediate ROI. So let's see as they go through the next year.
Gabriella, this theme unfolded. In fact, ChatGPT comes to wide notice almost as the stock market bottom 2 years ago, right? And so you've had this, it's been hard to pull apart exactly what was excitement and all this capital rushing toward this massive AI opportunity and just a cyclical recovery. And we've already priced in the Fed tightening and they're going to ease and inflation's down. Does it matter which it is in terms of how long this all lasts?
So I think we have to remember 2022 was a really, really painful year, right? For mega cap tech, earnings were down 22%. Those were the kind of companies that led us on the downside that year. So I do think certain part of 2023 was really just a rebound after there was a big effort to cut costs and to refocus a lot of these businesses. But then you got that additional tailwind of AI. I think if the last 2 years had just been the cyclical rebound, that story would have petered out by now. It is helpful to have this underlying layer of AI innovation, but we very much agree that it's much more of a story now of what is the return on investment, over what time frame, how much has already been pulled forward, and who are the other winners in this space. And we were joking earlier about utilities being rewarded for the power generation, also parts of industrials, also globally, places like Taiwan, for example, really leading on the upside. So even there, it seems like their proof is really in the pudding now, even if it's a plentiful dose of AI enthusiasm.
15, 15, 10, 3, 10.
Where this theme is going to touch an unexploited area. And another that says don't overthink it, right? It's Taiwan Semi and it's NVIDIA. And, in other words, it's just going to be irresistible in terms of how the numbers are going up. I mean, is it safe to think that way at this point?
I think you have to be balanced. I mean, there's going to be the winners of today that will continue to be the winners of tomorrow, i.e. Taiwan Semiconductor and NVIDIA. But there will be a broadening out as more companies start to adopt the technology and they drive operating profit because they're more efficient. So this is going to play out over the next 5 to 6 years in phases. There's the here and now, and then there's the ones that will generate a lot of revenue over the next 1 to 5 years. And then there's the beneficiaries because they're adopting the technology inside of their businesses and making their businesses better and more competitive. So I think it's a phased rollout, may we call it.
Sure. Gabriella, when you talk about, I mean, it's interesting to think about this. Maybe if you want to map.
Oh boy. All right, there goes Oklo. Oklo, OKLO. Looks like it wants to keep going. I'd rather trade options on these. I'd rather trade options. That way I know what my risk is and I can sell premium around my position. So let's say I take a call vertical on Oklo and it looks like we're going to start to top out short term. I could sell this week or next week's call credit spreads, that maybe mark in the top, or maybe I can buy some shares. I mean, there's a number of things I can do and still be involved. So these nuclear power SMRs are pretty exciting. The price action is telling you everything you need to know. Price action is persistent. It's not stopping. So that's telling me the institutions are active, and it's showing up in price and volume. The caveat is earnings coming. A lot of these companies reporting earnings. Yesterday's action in semiconductors also was a wake-up call. We could drop down to the 50-day pretty easily. So I don't want to get caught in options that expire too soon. Yet I do want to buy some things like, say, Apple. We bought some Apple that expire Friday. I'm probably going to take these off pretty soon. Okay, bought these over here on this dip. Saw this start to move higher. So we bought those Apple, what were they, 232.50s? The reason why I bought those 232.50s, by the way, is you see that fair value gap right there? Okay, so I'm looking for a price to come right up to that fair value gap. Okay, Frank will tell you all about fair value gaps. Okay, there's a fair value gap right here. Okay, so looking for prices to come right back up to fair value and fill that gap. Look at the histogram bar. That's pretty exciting too. The histogram bar has turned. Colors. Okay, we want to see it move from red to yellow for long trades. And for shorts, we want to see the opposite. Okay, we want to see cyan to blue.
And granted, it will be more glacial than we want to imagine right now. I think, and across everyone else, it will be really company specific. So from Microsoft, we're looking at CapEx and making sure enterprise is okay, enterprise spending. For Meta, it's a completely different ball of wax. What are the advertising revenues doing? For Amazon, it's the consumer and AWS. So again, it's going to be kind of more company specific as we're going through earnings season. But underlying it all, we do want to see everyone making progress and attaining, whatever their goal is in AI.
We have earnings.
I can't get the song out of my head now. Get ready. Rare Earth. I was listening to it on the way home from dropping my son off.
Your clients talking to you about that? Do you have a sense that their behavior is different because that's hanging out there on the horizon?
So we do talk about it a lot. Whether it's actually driving investment decisions is a different matter. And we like to say that really it's about the policy implication, not the politics. I think if you look at betting odds, they have been moving around, but generally speaking, I think there's an expectation of a divided government. Areas of the market that we're on the lookout for in terms of election impact, long end yields, which have moved up nearly 40 basis points. If you look at the 10-year, that's all about tax 2025 and all of the discussions about the deficit. And then the second is the dollar. It's strengthened by 1.5% over the last 2 weeks. And I think that has a lot to do with the shift in betting odds towards former President Trump and the discussions around tariffs.
Yeah, it seems like it. We'll see how many versions of this we go through in the next 3 weeks. Great to talk to you both, Gabriela. Cora, appreciate it. All right, let's send it over to Kate Rooney for a look at the biggest names moving into the close. Hi, Kate.
Okay, we're getting a bid there. I just saw Frano post. 14. Trump Media is getting a bid. Let's see. Okay, gotta put this over here.
What I'm really bullish on over time is the beginning chapters of growth across the center, the fulcrum of our investment bank, which is our investment banking franchise, which is to offer advice, to do the underwriting business, but then also how it filters into our great markets business. And I think it's going to take time, but we're seeing it begin.
And shares of JB Hunt today jumping after the company posted a quarterly beat on profits and revenue. That was boosted by logistic company's biggest segment, intermodal.
Okay, everything is working.
Okay, thank you.
That right there is telling me that, you know, be a little bit more cautious, take some profits off the table. When everything's working, that's that's usually where I start paying attention a lot more closely. Apple's still going here. Apple going for that fair value gap. Looks good. Okay, Apple. Do 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 do. Oh boy. Yeah, baby. All right, I like to close some of these positions. Apple, Doji on the daily, intraday. Okay, Nano Nuclear is still going. Oh my gosh, this thing is blowing up. Yikes. That's so funny. Oh boy, my wife's not gonna like that.
You got this.
Stocks are green across the board, recovering from yesterday's losses. Investors looking ahead of key economic data out tomorrow to indicate what the Fed's next move might be following last month's jumbo cut. My next guest advocated for a 50 basis points cut ahead of the September meeting. Says there's still room to cut here, but let's bring in Robert Kaplan for more of the details. He's Goldman Sachs vice chairman, of course, and former Dallas Fed president. Robert, great to have you here. It's really fascinating because the moment before the September Fed meeting, I think the general sense on Wall Street was, wow, it's got to be 50. They're running late. It's maybe overdue. Almost all the numbers we've gotten since that point have really told a story of maybe a stronger economy, maybe inflation coming down more slowly. Where do you think that leaves us in terms of the forward path for the Fed?
Okay, NVIDIA starting to see some profit taking. NVIDIA can make sense. NVIDIA, a little profit taking.
Scott Rubin cut the Fed funds rate down to say 4.25%, 4.5%. And so,
okay, looking for NVIDIA to follow through tomorrow after a little profit taking. Not surprised to see a little profit taking into the last 40 minutes of the trading day.
As the economy unfolds, is likely to do another 25 in November. I think they'll have a debate about December. The issue will be, in order to cut below 4.25%, 4.5%,
You need to see more sustained improvement going from 2.5 to 2, and the jury's out on whether or not we're going to see that.
And then alongside that, is it your view that the economy is
Apple.
performing well enough that it really is
Oklo.
maybe just about
Nanonuclear is still going.
inflation toward 2%?
So the one big factor that I don't think is being talked about enough, and I've talked about it before, is fiscal spending and these special open-ended spending programs. Inflation Reduction Act, Infrastructure Act, CHIPS Act are providing resiliency to the economy. We're running 6.5%, 7% of GDP deficit this year, historically high when you're at or near full employment. So I think that's given resiliency. And the other thing that we've benefited from this last year is an inflow of workers. We may not like the way we got there, but labor supply has gone up, and that's allowed the economy to grow faster with somewhat more muted inflation. It's unclear whether that trend's going to continue. So I actually have thought for some time.
SMR. Okay, that sucker's going to go.
I think it is wise to buy
That is going to go, isn't it? Let's see what the SMR. Let's see what the deltas are on these. 230% on at the money calls, 230, 240% implied volatility. So that's good to sell. Although I wouldn't want to get caught on this one. Let's see what the puts. What do the puts look like? Okay, the implied vol on the puts are also very high for SMR. Okay, this sucker just going. Wow.
Yeah, and remember, we've made a lot of progress.
I kind of want to lock in some profits.
We've gone from
Really want to lock in some profits, eh?
to 2 and a fraction. And so the Fed funds rate should reflect
Tesla,
that.
Nvidia,
Having said
Apple.
there are limits, and I think we still want to get inflation down to 2%. But there's
Supermicro pulling back a little bit. Supermicro.
are going to have to get adjusted to. Term premiums on the Treasury curve are likely to inch higher.
Okay, I have December 50, 55s.
I'm very mindful are historically tight right now, and early cycle tight. I don't know if we'll look back on that and say that's an anomaly. And the other thing that's going on is we probably can't keep fiscal spending at this level globally. Witness China being a good example. GDP growth, if we can't keep spending this way at the government level, is going to drift down. And I think that's going to also have an effect on markets and resiliency and winners and losers among companies.
You mentioned term premium, so therefore that's kind of the premium that bond investors are going to demand for holding longer term debt, perhaps because of longer term deficits and things like that. At this point, where let's say the 10 and 30-year treasuries trade, do you think that there's anything anomalous?
Okay, futures. Nice move on the futures. Let's see, S&P 500. So keep in mind what the cash is telling you. Okay, so if we make it above these levels, this iron condor trader is going to start losing money. So if this starts to back off a little bit, see how that works. Yesterday was a killer day for puts. For that trader, not so much. S&P 500.
Our own research at Goldman Sachs suggests that we're going to see the term premium inch up. And if it happens in an orderly way from here,
SMR still going.
My concern is that there's a lack of duration buyers globally. We're going to sell 9 trillion of treasuries this year. We know banks are not buying duration. We know the Fed is not buying duration like they were. Foreigners are not buying it. And what I worry about is a disorderly rise in term premiums that's more destabilizing. And I don't know which it's going to be, but I think people should be watching out for it.
Yeah, among the things to be on the alert for.
Robert Kaplan, appreciate the time today. Thanks very much.
Good to talk to you, Mike.
All right, up next, PIMCO's Erin Brown reveals where she sees this rally heading and where she's seeing upside in the market into year end. Closing bell, we'll be right back.
Okay. Hmm. Okay, Nano. $17.50. 18. I'm just looking at what people are trading on this SMR. Okay, so out of the money, above, let's see, above 20, there's hardly any, above 20, there's no open interest on SMR. Above 1750, really. No open interest. Okay, so that's October, maybe further out. Let's see what's going on here. Lee Star was asking me earlier about option trades. Okay, so it looks like you got to go out to November, maybe December to see January 25. Let's see what January looks like for these. January options, looking at open interest. 20. Yeah, lots of open interest at 20. January 20. 20 and 25. Sell the 25. $1.33. Okay, so we are staying below that 58.45 short strike. They could push it above. There goes Nano Nuclear. They could push. The dealers could push it above 58.45 at the close. Okay, so the way options on the S&P big caps work, you cannot get assigned. You cannot get assigned like you can with, say, SPY or Qs or IWM. But with S&P 500, since you can't get assigned, what happens is for every point above your strikes, let's say you're long the 58.45, for every point above, you can make $100. So let's say you don't care, the markets grow, fly up here, and we close at 58.50. So that's 5 points above your strike. So you would be awarded $500 for every contract that you own. So that's the beauty of trading S&P big caps, because you can't get assigned. Okay. Aside from a few other factors, but okay, Nano Nuclear is still pushing. Wow, this thing is just going ballistic. Okay. SMR. SMR pushing.
positive earnings surprise. But both the fundamental and the technical picture look pretty good.
That sounds like Aaron. Aaron?
You know, going into the
Sounds like our voice.
I do expect a bout of volatility, you know, particularly around
Yeah, that's her. Okay, cool. I recognize that voice. She looks like she's from Iceland or something. Definitely Scandinavian. She's a smart lady. Smart lady. All right, Apple's still going here. Apple.
Rotation beyond just what's worked in the mega cap space over the last 18 months or so.
Yeah, I mean, it has been really evident even in the last couple of days. You've had not much going on at the index level or even some weakness, but it seems like 3/4 of all stocks are up, and you do have that kind of cyclical tone to leadership. So, you know, that checks off a lot of the boxes. I guess I'd wonder if we do get about a volatility.
So the sectors that we still like AI. Now, as you've seen.
Okay, so S&P, let's see if they can shoot this past 5850. That fund will shit bricks. If it does, $2 million for every point above 5845. Broadcom pulling back, SMR. Okay, we're looking for a follow through with the chips tomorrow, hopefully. We did have a shot across the bow tomorrow, so we have to be extra cautious on the semiconductors. Okay, got to be extra cautious because of what happened yesterday. That could happen again. Didn't happen today. We do have 2 wicks, so they're buying above 245, 246. The volume is the only thing that makes me feel better. The last 2 weeks since the last trading day of September, the 27th, 28th, whatever it was, mostly green volume. Yesterday, above average red volume. So, okay, watching Apple. Apple. Okay, that fair value gap is where we're looking for prices to get back to. Okay. Hey, you. What you doing? You hungry? Are you hungry? There's your sisters over there. See her? Okay. Why don't you go lay down? Makes me nervous when everything's working the way it should. You know, when price action does what's predictable, you know, bounce. Like, for example, Apple. I'm looking at this buy order block down below. You see that buy order block? Love when everything does what it's supposed to do, but that also makes me nervous.
Do you think there's a risk that we're just not, you know, the next growth scare is right around the corner, or is it going to be a overheating scare or something like that?
I mean, certainly the sort of boogeyman for the equity market remains out there. Inflation, you know, starting to pick back up again. Right now, all the trends that we're looking at, whether it's, you know, housing costs or renting costs, some of the import inflation and the data that we saw over the last 24 hours from PPI earlier in the week, and then import data this, you know, more recently, is all suggesting that inflation is on a downward trajectory. We do think it's going to remain stickier as we get, you know, further, closer into 2025. Energy costs coming down.
Love when she grabs my arm.
The risk is if we were to see, you know, a real revamp of fiscal packages coming out after the election, that could potentially lead to higher inflation in late 2025 into 2026. But for now, we feel very comfortable that the Fed still has a green light to continue to cut rates. given the fact that inflation, we think, will be cooperative certainly over the next 6 months or so.
Yeah, it seems like.
Ow, ow, ow. That hurts. Gotta trim those claws, kid. All right, what time is it? Okay, we got 25 minutes to go. 25 minutes to go. I hope you're having a good day. If you're not having a good day today, you got to be doing something wrong because so many stocks did exactly what they should be doing. Okay. I see you. I'm going to feed you. I'm going to relax. Let's see. What time is it? 3:36. 3:36. I see you, kitty cat. Where? What happened? There it is. 14. No, that's 1428. That's not what I'm looking for. Screens. There it is. 34. 1534. There you are. Okay. Okay, Apple looking good. Back to the fair value gap. Dun, dun, dun. Okay, Apple, I'm out of that scalp. Okay. All right. Okay, I said I would feed you, right? Okay, we got 21 minutes to go. 21 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Wednesday the 16th. Looks like I have to feed a little kitty cat, so give me 2 minutes, 2 to 3 minutes. I'll be right back. Otherwise, she's just going to keep aggravating me. Okay, NVIDIA pulling back a little bit. SMR going. SMR. Okay, SMR, I have a limit order, did buy some January 2025 verticals. SMR.
You bet. So yesterday took a hit along with the rest of the sector on two things. One was the ASML earnings leak, which was interesting in its own right, and some of the export control news. I think any hit that it took on the
Where are you? Let's see. Coming into the close. 15.
It seems like AI demand is still off the charts. It's about the only thing that is.
but it's still very strong and clearly like that benefits NVIDIA. I do wonder if some of the hit yesterday was more around some of the export control stuff and what's going on there is there were some stories that suggest the U.S. is considering, I guess they suggested capping the licenses that NVIDIA and other AI chip vendors can use to sell parts to other countries, particularly, I guess, in this case, the Middle East. I'd say, and though I'm not sure it's that big of a deal, I guess we'll see, but caps, in my opinion, are not bans. They already have they're already under licensing arrangements with the Middle East. They have to get licenses to ship there anyways. And frankly, the other like outright bans that we've seen in the past haven't really slowed them down at all. So I'm not terribly worried about that. They seem to be more incremental than anything else. And we saw the stock yesterday was coming down before the ASML. They dropped sharply and then kind of recovered a little bit afterwards. And so I think today it's kind of relaxing a little bit as it's clear that the ASML news is not a direct read across and maybe the export control stuff isn't as big of a deal as people might have been worried at first.
Yeah, and the market clearly, as you suggest, making its peace with whatever all this is. And I know there's a way also of saying, listen, this stock is where it traded 4 months ago. It had an absolutely massive run. It gets to $3.3 trillion market cap. And then maybe it needs to kind of hang out for a little while and figure out exactly how long we're going to be in this lucky position of demand outracing supply into next year. So where do you think that sits in terms of investor expectations and how the stock is positioned?
Yeah, it's interesting. You sort of look at the last couple of months, there's been a lot of news flow. The stock took a big hit several months ago on the Blackwell delay rumors, and while it does seem to be some issues there, it really looks like they've worked through without any problems. Right? They didn't really have any impact on the demand trajectory. And I'd say since the stock I went to $90 or something, like close to it, and so it certainly recovered off of that. I guess that was a great entry point in hindsight. And look, going forward, I mean, all of the checks on AI demand,
Nice.
sell everything that they can make.
SMR. Okay, cool.
Been on your channel more than once in recent weeks and sounding very enthusiastic. It's the one bright spot in
21, 23, or 23.
It's the one thing where we can definitively point and say demand is probably going to exceed expectations, even expectations that I think are going up now. Some of the other areas in semis, I wish you could say that. You can't really say that. Right?
No, for sure. Well, speaking of the other areas of semis, I mean, we also have these reports that, maybe Qualcomm, if it is considering some kind of a bid for Intel, might be waiting till after the election to sort out that decision. I don't think you're a fan of the idea of the combination, but where does that stand?
Yeah, to be fair, I hope they wait a little longer. I'm not a fan. To be honest, like, they were just taking some of the product pieces that I think constructed. I just can't make the finances work if the Fed just come along with them. I just can't. It's dilutive if you start using cash. It doesn't take a lot for the leverage to reach, in my opinion, what would be unsustainable levels. So I really would not like to see
Tesla. Okay, still stuck to this 222, 220 zone, 221 at the moment. Okay, Nano Nuclear, watching that one. At the highs, Nano.
They just can't stand on their own without a significant amount of probably external capitalization. It's going to be years before you build a business that enables them to stand on their own, if assuming you can do that at all.
Okay, Bitcoin. Pretty much sideways most of the day. It's not on the highs, not on the lows. It's right in the middle. Not bad. Not bad. Let's see.
Hey, Mike, so Citi's seeing bigger opportunities in AI for one tech firm, and then a CEO sees some
Okay, I got to take a couple minute break and feed this kitty cat. Where'd she go? Okay, I'll be right back.
You want some food juice? You hungry? Are you hungry?
Let me put some music on or whatever.
In theory, would be a tailwind for the small caps as well. A theme that I think will continue as we move through the rest of the year, unless there's a big shakeup in the inflation front or the jobs number where we see the idea that the Fed will not cut at all. that certainly would impact the small caps. But overall, I think those seasonality trends are working their way through the market. I'll couple that with also, I think the rotation that's unfolding right now, you're seeing utilities certainly catching a bid, also transportation's catching a bid, and the regional banks. I mean, with the yield curve normalizing, I think the banking sector is going to benefit from that as we move through the end of the year as well.
Kind of seems like it is. Good point with that connection, because banks have been really leading here. The other stuff I'm watching, gold pretty close to the highs, right back below it again. Bitcoin trying to get out of this long-term downtrend. Either of those you like to play in, Dan?
I mean, the gold market is something that we use in some of our models. We really don't use Bitcoin at this point, but something I keep a very close eye on. Proxies possibly, MicroStrategy being one of them. But when you look at the gold market, I think that the bid's going to continue there, even with the dollar moving higher. There's just strong central bank demand for gold as an alternative store of value, and that's going to continue, I think, as we continue to see the evolution of the global communities, and especially if the tensions from a global perspective remain elevated. Couple that with, I think Bitcoin has now found its sea legs again temporarily, and I wouldn't be surprised, Oliver, if we go back and challenge that 75,000 level, the highs that we did see from the summer, as it does appear to me now that after we broke through 64.5 or 65,000, that it appears to me that there's further upside for Bitcoin based on just the general trajectory and also the longer term technical aspects of the market.
All right, nice, good conversation. Thanks a lot, Dan.
All
Good
right,
range per usual. I appreciate that look at the dollar and the commodity market. Dan Denning, managing partner at KKM Financial. Right now, let's take a sneak peek at my interview with Vivek Ramaswamy on the latest episode of Market Overtime. The former Republican presidential candidate has a new book out. We discussed the policy differences between Vice President Harris and former President Trump, biggest economic issues facing the next administration. Take a listen. The way you see inflation, the way it was caused, who is to blame for this? And if the answer is Biden, I guess I'll get ahead by asking, why is it Biden to blame when you had $3 trillion in stimulus under Trump in response to COVID, and admittedly another $2 trillion under Biden? But then how do we shift to inflation blame entirely one-sided?
Well, look, I think that the fact of the matter is, look at what inflation numbers were, area under the curve of inflation under Biden versus area under the curve of inflation under Donald Trump, and area under the curve inflation, which by which I mean the totality of compounded inflation was undoubtedly significantly higher, not only under Biden versus Trump, but under Biden versus any other president we've had in nearly the last half
What do you think caused the big spike in inflation? Vivek, from your understanding?
Yeah, I think there's two factors. I think there's two factors causing it. One is, I mean, the number one overall factor is government spending that exceeds the capacity of the private sector to absorb that government spending that drives up prices. But an exacerbating factor here is a Federal Reserve that aids and abets that by printing money to fund that government spending, which in turn creates a monetary supply version of inflation as well. So I think the combination of the Federal Reserve's response as well as the government overspending are the two drivers of inflation, and now we're suffering the consequences. One of the
President Trump not overspending by that definition, Vivek, $3 trillion stimulus during COVID. I mean, that was Trump. I mean, I talked to the man on the street here in Chicago, and he is ready to vote for Trump because he knows he got a stimulus check.
Well, I'll give you my perspective on this, right? And one of the things I talk about in this book, right? The book is Truths, the Future of America First. I say that because I think that there are many strands of the America First movement going forward. There's more of a protectionist strain. There's one that involves more muscular government involvement. There's the version that I prefer, which I call more the national libertarian strain, which is to say that we don't want to replace the left-wing nanny state with a right-wing nanny state. We want to dismantle the nanny state and restore true free market capitalism. Not crony capitalism, not one-sided capitalism with other trading partners, but true capitalism, I think, is part of what made America great the first time and is going to make America great again. One of the things I will say about Donald Trump is what he's built here is a coalition that I do think is quite diverse. And I was in an event over the weekend with myself, Ben Carson, Tulsi Gabbard, RFK. We were all speaking at the same event, and we all, four of us, share one thing in common: is we all ran against Donald Trump for U.S. president. And yet, still on the basic rules of the road, even if we have our shades of disagreement with one another, and, obviously with President Trump, we ran against him,
Nasdaq
we're still
100
part
sell
of a
side of
broad,
37 million, Dow 30 a buy side of 590 million, the Magnificent 7 a buy side of 121 million.
And I encourage people to take a look at not only this book, but a lot of what I've said about what I think the future policy direction is that we need to take in our country.
Yeah.
When I think about who's going to grow this economy between the two candidates we have here, no doubt in my mind, it's why I've supported Donald Trump, is he's leading a broad coalition that, includes diverse voices on a range of questions of incremental views on what the corporate tax rate should be, or incremental views on exactly how we should or shouldn't use tariffs. Those are, by comparison to the economic worldview of Kamala Harris, right now, those are details. Roll this forward 3-4 years, I think those do become essential questions. I think those become really important questions as we think about the future of the Republican Party,
The next level
and the
of
conservative movement in 2028 and beyond. But I don't think that that's mostly what's at issue in the next 25 days.
All right, at 4:30 p.m., 8 p.m. Eastern Time. Check it out this week on Market Overtime. About a 25-minute discussion with a lot under the hood. So definitely make sure to tune in, as we're getting pretty close to the day now, just 3 weeks away. Coming up, we got the big picture team in to take us to the bell. Less than 10 minutes left.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money. With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So, how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Okay, so we got back to this fair value gap on Apple, and we're starting to see a little profit taking. Microsoft trying to push a bit higher. Nvidia trying to bounce. Tesla bouncing. OKLO continues to push.
Joe, get us started here. Stocks finding some leaders outside big tech. How encouraging is that going into tomorrow's slate of data?
I mean, look, Oliver, we're within stone's throw of all-time highs again. You've seen the Russell kind of join the party finally. If you look at kind of the sectors with the best breadth of recent, it's not tech, right? It's utilities, materials, industrials, financials, discretionaries. I mean, it's showing that we can extend beyond just the tech leaders and see some strength below the surface. And what I find is interesting is this is, with the backdrop of an earnings season that started fairly well so far. Only about 10% of the S&P 500 is reported, but the expectation for year-over-year earnings growth was around a little over 4% kind of coming into the quarter. And that had been dropped fairly dramatically from the about 7.5% expectations coming into the cycle. And we're right around that 7% now. So the bar was lowered maybe a little bit too much by the analyst, and the market's responding and rewarding those that are beating.
Okay. As we get a lot of data coming in tomorrow, Cooper, what is your baseline for the bond market? We got a decent bid in treasuries yesterday, and not a lot of pushback to it today.
Yeah, so it looks like we're in a little bit of a holding pattern for now. So I wouldn't be surprised if we see a little bit of choppiness going sideways, Oliver. I think that if we harken back to that non-farm payroll report that did raise the debate of, are we going to get a pause or are we going to get a 25 basis point rate cut at the next Fed meeting? So we know that the biggest driver in terms of yields is the direction of Fed policy. It's likely going to be lower, but how much lower and how quickly are we going to get there? I also think obviously we get the claims data tomorrow. That's going to be important given the given the attention and the focus that many Fed officials have been paying towards the labor market as of recently.
Okay. Joe, do you think bonds, if they sell off, stocks should welcome that? So far, they have the last 3 weeks. Is there any limit to the equity market's tolerance? Say if we start pushing to 4.2 in the 10-year?
I think the one thing that is maybe holding the equity market back is the fact that there's still a lot of hedging activity going on. You're seeing a lot of buying, whether it's the SPX, but you're also seeing it in the Nasdaq and even the Russell, where people are paying a lot of money for these options. And I think the difference is that they're not getting rewarded for that. So I look at the spread between the implied volatility and then the realized vol, which is basically is the juice justify the squeeze, right? And so what we're seeing right now is people are they're paying up for these options, but we're not seeing enough movement in the market. Could be something around, maybe some of the gamma levels that we're seeing, and it's kind of forcing some of that compression of the equities around these strikes. But at the same time, there's a lot of hedging activity heading into the next couple of weeks. Yes, we know the election and there's other geopolitical risks, but it'll be interesting to me to see whether or not some of that starts to abate a little bit, or if you continue to see more and more of these option buyers step in. Is that something that can maybe push the market one way or the other? Time will tell, but we're seeing levels.
Apple's still pushing a bit.
Elongated VIX levels that we haven't seen in a couple of years, where we're trading above the 200-day moving average, now coming up on the 64th trading session where we've been above that 200-day moving average. That's something we haven't seen in a couple of years.
Apple looks like it wants to push some more.
Yeah, for sure. VIX has been pretty stubborn, edging down a little bit here this week off of 20. Cooper, looking at the shape of the yield curve and bonds, we had the bull steepener, but then since the Fed cut, we had a good bit of bear steepening. What do you think is going to be the contour going forward?
Yeah, so a little bit of a surprise maybe to some people is that the Fed cut rates and interest rates actually go up. We still do believe that the direction for the yield curve is more steepener. So we do think that it's likely that we're going to enter into more of a bull steepener led by further declines on the short-term rates. Again, we think that the direction of Fed policy is going to be lower. So that should help pull short-term yields lower, Oliver. Now, I think that there's probably less likely upside on longer-term yields unless we have something like a growth scare or an inflation scare. As of now, it doesn't appear that any of those are in the cards. However, there could be a little bit of a surprise, but we think that probably for longer term yields, it looks to be that there's a little bit of a cap there.
Okay. Well, right now, the cap seems to be holding on enough for volatility to subside a little bit, and equity markets welcoming that. Thanks, guys. Joe Mazzola, Cooper Howard. We'll see you
Okay, nano nuclear pushing a bit higher. All right, so this got a persistent bid. All these SMRs, small modular reactors.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
All right, we've got less than a few seconds to go. Less than a few seconds? Well, you know what I mean. There we go. All right, folks, I got a hard stop. I got a beer calling my name. Have a great evening, everyone. Take care. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is straight up 4 o'clock. Closing bell. Hope you had a great day. I certainly did. If you didn't, we need to have a chat. Take care. We'll see you in the morning. Ciao.